of India or CCIL, and the direction that you're talking about, that's towards greater transparency, stronger buffers, and a more resilient banking system. So that's the entire backdrop that you're looking at, and all of the set of aims that you're looking at for all of these safer banking rules as well. But with that in mind, let's also move on and talk to you about some of the other earnings that are going to be in focus. So there's something like a Piramal Finance that stands out on the back of a turnaround quarter that you're looking at for this one. That's something that you should be looking at. Something like an AU Small Finance Bank also in focus on the back of asset quality improvement. So that's the second stock that you're looking at. Something like a Phoenix Mills also. And here you're seeing a strong retail consumption growth, and that's really the highlight here. When you talk about Websol Energy, the profit after tax has risen about 3 times on a year-on-year basis. And that's the key positive here. So watch out for that particular counter as well. It's also a turnaround quarter for something like a Pratap Snacks. So even this particular counter is going to be in focus aside from Piramal Finance. But with that in mind, it's a wrap on this edition of Markets Today. Thank you so much for tuning in. India Market Open up next.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India Market Open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm
You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open.
Very good morning. You're watching India Market Open, and you know it's a state of confusion and flux as much as any ship in the Strait of Hormuz right now. For the markets as well, you don't know where you're going to hit the next blockade for the Nifty, isn't it? We look good today. We might not. We look good yesterday. We might not today.
I mean, that's what your gap. Your indicative opening is, I mean, your implied open is indicating you are seeing a gap down. And I think there is absolute confusion, as what Tamanna is saying, because there is a proposal on the table, there is no proposal on the table. I mean, both sides have different views, right?
Yeah, sadly that economies like India and some of the others are hurting. Though I must say, yesterday I was looking at an ex-post from an ex-influencer called Mario Nafal, who said that ships Iran to ja rahi hai, so never mind India to ja rahi hai, never mind the blockade, but Iran is managing to send ships to India and some of the other countries the way they want. By the way, incidentally guys, while there might be confusion amongst all other markets or whatever it is, there's no confusion in the minds of the investors of Nvidia.
Oh, yes.
That stock on a roll, hitting all-time highs, $5.2 trillion. I mean, that is some weightage in the world market cap.
Yeah, if you look at all semiconductor AI plays, which is why even the Kospi is no issues of oil, yevo, crude 108, that's fine. But nations and companies which have a very clear visibility on the AI trade are back in focus, and I think that's where we fall between two stools. We have the oil problem, we have decent earnings, we don't have that AI trade.
Will that have an impact on Indian companies today? Just a sentimental one.
I mean, I don't know, but I was happy, Hiral, that there was another post, I think, on our website only, that Nvidia is setting up some 760,000 square feet worth of office space in Bengaluru.
Yeah.
So, well, never know.
If we have an impact or not. Okay, here's the global setup this morning. US markets closed mixed as no clarity is emerging on the US-Iran talks, right? So if you pull up all of the key indices, again, it was the NASDAQ which was speaking up in the green, but everything else pretty much flat. If you look at US futures, also no clear direction. I mean, there's some commentary about a proposal on the table from the Iranian side, and the US White House says that they're thinking about it, but we don't know for sure what's in that proposal. Meanwhile, all eyes are on the magnificent 7 companies reporting this week. Alphabet, Amazon, Meta, Microsoft, Apple, all set to report this week. It's actually a big week from a US market perspective because look at how the treasuries have moved ahead of the Fed policy decision on Wednesday. The 10-year was at 4.34%. Oil is also continuing to stay elevated as there's no sign of peace talks emerging, but Brent is inching up consistently. We're at $109 a barrel. You're not seeing the panic that we saw the last time it was at $109 a barrel, but I reckon this is a little more worrisome because the last time we had these kind of levels, there was a sharp uptick. This is a slow and steady march towards higher levels which seem to be staying put there. that is more worrisome. A huge spike also portends maybe that you'd have a huge downfall. That's not happening in this case. Asian markets have been mixed this morning, tempered really with a lack of clarity on where these talks are going. 0.5% down on the Nikkei right now, and I'm just going to pull up the India implied for you as well. We're looking at about 120 point downtick as we open. This is after the 200 point pop we saw yesterday. So it's one step forward, two steps back, or the other way around as far as Indian markets are concerned. Dr. Edward Yardeni with us. He's president at Yardeni Research. Dr. Yardeni, great to have you on the show. As always, thank you so much for your time. Do you think this sort of stalemate continues for a while as far as the US-Iran deal is concerned?
Yeah, unfortunately, it seems as though both sides are getting comfortable with this stalemate. It's unfortunate for the rest of the world, clearly, that depends on oil and fertilizer and other commodities that come through the Strait. But it looks as though both sides are settling in for a continued ceasefire that includes a U.S. blockade of Iranian ports and Iranian blockade of the Strait of Hormuz. And I think the stock market sort of as a result in a stalemate situation here, waiting to see how this all plays out. I think you're absolutely right to be pointing out that the price of oil probably is the key to all the financial markets. And its kind of steady climb up here is somewhat unnerving for me anyways, and maybe other observers, but the market is very cool about it. And I think the market's betting that one way or another, oil will get out of the Middle East, that there are alternatives like pipelines and maybe even convoys of fuel trucks.
Okay. Dr. Yardeni, good morning. This is Hira on this side. My question to you is, Tamanna was just mentioning you have oil which is somewhere stabilized currently at levels of what, $108, $109 per barrel. We're not seeing that kind of panic right now. However, is that a kind of measure that one could use to actually ascertain as to what's happening on the war situation? Because right now, the commentary is really confusing. If someone has to take cues from what's happening to oil and in turn understand the situation, how would you look at it?
Yeah, I think you're right. I think oil is the best gauge from a market perspective to give us some indication of what's really going on. I would think that most people would have thought, and there have been oil analysts who said that, if the Strait of Hormuz stays closed, we could get up to $150 to $200 a barrel, and maybe we're going to inch up in that direction. But it looks as though that oil is leaking out one way or the other from the Strait of Hormuz. Everybody was talking about 20 million barrels per day would be trapped in the Middle East if the strait was closed. But there's about 6 to 7 million barrels per day coming out of a pipeline from Saudi Arabia to the Red Sea. There's other ways to get oil out of the Middle East, and that seems to be happening. Also, the United States is trying to pump out more oil. We're trying to get Venezuela to do the same. Russia, meanwhile, is getting a pass here from the United States, and it's pretty clear that Russia is selling oil to India and China, and that the United States is not threatening to impose tariffs as a result of that.
Dr. Yardeni, I was reading 2 or 3 of your posts. Good morning, this is Neeraj here, and good evening to you. Fairly recently, some very interesting usage of words, I must say. My question is this, that if this comfort with the conflict continues, if you will, does the US, even though it's a part of the conflict, continue to see inflows? I think EPFR data and etc. suggests that the last dollar is right now moving to markets like the US and some of the other semiconductor players. Could that continue, and therefore this lion's share in the world market cap, can it actually expand at the US's end?
Well, that's a very good point. I was just actually reviewing the latest data, and it shows that the US accounts for roughly 63% of the market capitalization of the total market capitalization of the so-called all-country world, MSCI. And that's basically at a record high. Of a year ago, we were at 65%. And it is kind of holding its own here at this level. That's really an extraordinary development. Back in 2010, we were around 40%. 65% obviously is quite a large position in terms of market capitalization. I'm still thinking that there's room for that to come down and for some of that share of global stock markets to actually benefit emerging markets. Some emerging markets are natural beneficiaries of the AI play, like South Korea and Taiwan. But I think once we get a clarification that this war is over, I think India will benefit. India has certainly got a lot going for it, and I think the market's been held back. It's been a laggard here because of the oil situation. And once we get the price of oil to come back down, India will probably be one of the better performers.
Heartening to hear, Dr. Yardeni, especially considering that we seem to be stuck right now in a very range-bound trade and a lot of nervousness there.
Yeah.
What are the spaces that you find interesting in India, and why do you think that there will be a perspective that India is an opportunity versus other emerging markets, because there is no clear AI semiconductor trade?
No, there isn't, and of course, in some areas, India is already suffering from the perception that AI is going to replace some information technology service companies and so on. But India has lots of entrepreneurial capitalists. There's a lot of money that is available for entrepreneurs in India. And we've seen that India has very often risen to the challenge of competing in the global economy, particularly in the area of technology. There's a tremendous amount of so-called human capital, in other words, smart people in India that some of them may be recognizing that they'll soon be out of a job because of AI, but on the other hand, they're probably going to be pretty clever at coming up with companies that know how to work with AI to become profitable. So I think that's part of it. There have been some moves to deregulate the economy. The financial sector has done well over the past several years. India was a leader to the upside here until a couple of years ago, and then I think most recently the oil shock has held it back. I think it's probably like a tiger ready to leap upwards once we kind of clear the air of where the price of oil is. Price of oil comes down, I think India goes up.
Very strong and interesting comment, Dr. Yardeni, with regards to where India goes, because I think everyone's talking about it as well, Tamanna and Neeraj, that probably it'll be time for India to roar as well.
I just love that. I just love that line. India is going to be a tiger ready to leap upwards once oil prices cool, and that coming from Dr. Yardeni is really heartening.
Yeah,
Thank you so much, Dr. Yardeni, for speaking with us today.
Thank you.
And I think that's what our previous conversations with Ramdev, with Rhythm, all of them have been of this opinion as well, Tamanna, with regards to that we've already taken off. It's just that little bit of gestation period that you should be watching out for.
No one was as bullish as this. None of them. And they are the bulls, right? They are the domestic bulls. None of them were as bullish as Dr. Edward Yardeni is sounding right now from an outside perspective.
So it's going to be interesting to see when we take off and where we land from here on. But in terms of markets yesterday, we did take off because it was an interesting trade, but it seems we're going to give up those kind of gains in today's session. Yesterday, we snapped that 3-day losing streak. We ended in the green. We actually witnessed a pullback rally where we ended with gains of almost 195 points on Nifty 50, while the Sensex was up nearly 630 points. Nifty as well, 24,100 is what we are tracking. Among sectors, all sectors ended in the positive yesterday's session. We had pharma, realty, and IT. These were the ones which actually outperformed. And after a gap up opening, we actually maintained that positive momentum throughout the day. Categorically, if you have to talk about broader markets, they outperformed the benchmark indices, with the mid-cap 150 snapping the 2-day losing streak, ending with gains of nearly 1.5%, and likewise, the small cap 250 also ended with gains of nearly 1.8%. If you have to talk about FIs and DIIs, the DIIs have continued to be buyers, your FIs have continued to be sellers, but that buy number is close to around 1570. Sell number on the FII end is 1500 to 1700 odd crores. But in consonance to that, your DIIs have been very strong with little over 4000 odd crores is what we've seen. So I think it's a DII-driven rally that has continued. Today you're again seeing that profit booking, and I think from yesterday we've been talking about it that volumes probably will taper, Neeraj, because it's a truncated week. So I think that's what we should be eyeing.
Yeah, and no prizes for guessing it's a DI-driven rally simply because the numbers say it all, right? Very large number yesterday, but it took that larger number for the markets to perform the way they did. I think in some sense you could argue that the SMID, which is the small and mid-cap resilience, from last week was reflecting in trade yesterday as well, if you will. Remember last week too, we pointed this out yesterday, while the markets corrected, there was resilience at the broader end of the spectrum, which was actually a good thing. Auto, OEM and ancillary stocks are looking weak for multiple reasons now. And you talk to people, and the argument is now that with oil being so high and presumably staying, if not over $100 a barrel, but slightly higher, you would probably see peak demand for OEMs. Also, the base effect starts coming into play very soon once in the next 4 or 5 months because the GST benefits now, while they accrue consistently, but the base is not in their favor. So the growth numbers, do they start looking a bit iffy? And multiples, the way they were even before the correction, or probably still even are, do they leave a lot of room for comfort? Remember, markets always discount 6 months ahead if and under normal circumstances. These are anything but normal, but for autos it may well be because it's a domestic demand driven story. So people are starting to, at the margin, thinking that maybe, just maybe, you want to take chips off the block when it comes to expensive auto names. So keep that in mind. And the chemical rally continues, but traders should be agile because there is a very big China factor that could come into play for any chemical per se. But you just see company after company talking about one, availability of raw material, two, results looking okay. So bear in mind that that sector has entered a bit of a sweet spot. It may change very, very quickly. So be agile out here. Just that point that I'm making, Balaji Amines has made that point yesterday that the company said that ammonia availability has started improving and they've resumed production of ammonia-based products and is in touch with alternative raw material suppliers. But the point being that that bucket or that cohort of stocks is of course making a move, but it's starting to see some business spreads being there, raw material availability being there, and therefore could be interesting to monitor. So that one set of stocks definitely to keep on mind.
I think banks as well, because of the new ECL norms that have, the guidelines that have been ratified by the RBI. We'll talk about that in some detail. Those with enough provisioning should be fine. And the good thing is that a lot of banks this time have chosen to top up on provisioning. So they should be fine. But that's actually what I'm going to start with. So ECL norms have been finalized by the central bank, and this is how Macquarie puts it through. They're saying provisioning burden will increase in FY27. RBI has issued final ECL guidelines. Floor rates have hardly changed, they say. Most private sector banks are conservative and provide more for overdue loans and carry contingent provisions. PSU banks don't carry any such provisions, and hence this will increase the annual run rate of provisions. One-time impact could be around 5 to 10% for PSU banks' net worth, and the RBI is allowed to take it through reserves. For private sector banks, impact will be very small, and possibly contingent provisions can be used for set-off. Banks in general are very well capitalized with system CET1 at 13% plus, and hence banks can easily absorb the transition hit. The real issue is that normalized credit costs go up by 20 to 25 basis points for PSU banks due to higher floor rates on overdue loans, and their ROAs are small. So net, expect, if there is any pressure, some pressure on PSU banks, not so much on private banks. These ECL guidelines broadly, and putting it very simply, are to make sure that banks have enough provisions so that if there are bad loans, they are well set. So when it comes to the setup this morning, we're heading into the monthly F&O expiry. So the road ahead does remain uphill for the bulls. While the index has reclaimed the 24,000 mark, it's approaching a critical long-term technical barrier. The immediate hurdle is 24,115. to 24,150. We need to move decisively above this to maintain Monday's momentum. The big wall is the 200 DMA. That's currently around 24,300 to 24,400. It's acting as the primary bearish gap zone. Experts believe this area will see significant selling pressure during expiry. Immediate support, that's psychological support, is at 24,000. Crucial supports at 23,700 to 23,800. Dips towards this zone are expected to attract value buying, making it a strong floor for the current expiry. For the Bank Nifty, the index is stuck between the 20-day EMA and the 50-day EMA. Resistance is at 200-day EMA at 56,600 to 56,700. It's the key level to watch. A failure to cross this will keep the banking index in a sideways to negative bias. Supports at 55,600 to 55,700. That's near the 20-day EMA. It's the immediate safety net. So those are some of the levels you need to watch out for. But I think all the focus on that monthly expiry as well, Puneet.
Certainly, and thank you for that. Well, it's been a good month, largely rebounding from those lows of March 38 that we saw for the Nifty 50. So a 7.8% move in this particular month. Implied open does indicate a start in the red, just a tad below 24,000, and that remains a psychological level as we go into May, as well as the new expiry series as well. For the Bank Nifty, as you rightly highlighted, the ECA norms will be something on the fundamentals, while we wait for the last fag of earnings in the banking space, especially from the PSUs. So 56,200 away from still away 1,000 points from that, largely the support level between 55,500 as well as 57,200 has been maintaining that. So continue to monitor all those moves at this point of time. The rollover data, as you rightly mentioned, monthly expiry as well today. So you've seen the open interest for May inch up materially at this point of time, almost up 57% in terms of the change in open interest for the positions built in terms of the Nifty 50. For the Bank Nifty as well, the rollover has been very interesting because largely, let's go across to the next plate, shows you that, continue to maintain those. So we've seen positions largely being rolled over to the next month as we continue to maintain that 21,000 odd levels. For the Bank Nifty, it's still at 36%. So it's slightly lower, materially lower actually compared to the Nifty 50, which is trading above 50%. So very important that some positions have been reduced in line for April, but all of those haven't been rolled out in May as of now. In terms of cash markets, we've seen 1,100 crores of selling by foreign investors, much lower than the 8,800 crores we saw on Friday. But the index long maintained at 19 to 20%, now lower than the range that we've been speaking between 20 and 22. Put call has inched up from 0.93% yesterday as well. Finally, multiple of them, Sona BLW was one which saw massive build-up, but of course this chart continues to remain stable at 24,000, 24,200 levels for the calls as well. And for stock-specific action on the open interest gainers, Sona BLW remains one. Sun Pharma on the back of that blockbuster acquisition also saw build-up of longs in the system. RBL Bank, massive build-up of shorts led by weaker set of numbers compared to peers. And finally, in terms of open interest losers as well, you see Marico, Patanjali Foods and Alchem Labs see short covering. Delivery was the other one which was in focus yesterday as well. So overall, continue to monitor all those earnings that will be in focus today. But benchmark continues to be the one where 24,000 remains a key level to watch if we are able to recover post what the implied open indicates.
The implied open right now indicates a 100-point downtick more than anything else, 124 points right now as we speak. Here are some of the stocks in focus. I'm starting off with AU Small Finance Bank. Numbers came in post-markets close yesterday. A good set of numbers. It's a thumbs up. So revenues are up. That's net interest income is up 23% for the quarter. Operating profit is up about 4.6% at 1,352 crores. Provisions at 269 crores versus 635 crores year on year and 331 crores Q on Q. Net profit was up 65.2% at 832 crores versus 504 crores. Gross NPAs have come down a tad from 2.3% to 2.03% for the quarter, and net NPAs have also come down. Here's what Morgan Stanley is saying. On the counter, they've maintained an overweight. They've hiked the target price to 1,205 for the bank. They say it's a strong beat versus estimates, driven by both core PPOP, that's core operating profit, and lower credit costs. To factor in the strong quarter, we partly reverse recent cut to numbers which built in exogenous risks, says Morgan Stanley. This is the only overweight rated mid-sized private bank we cover. So there are a whole host of other brokerage notes. I picked one. Suffice to say, this is a decent set of numbers and you might see a reaction consequently. Coal India is the other one, also good set of numbers. It's a thumbs up. Revenue up about 6% at 46,490 crores. EBITDA up 6.2% for the quarter at 12,673 crores. Margins have been flat at 27.3% versus 27.1%. Net profit up 11.2%. Here's what Jefferies is saying. They've maintained a buy and they've hiked the target price to 500 rupees. They've said it's an EBITDA beat in quarter 4, mainly led by better FSA ASP, that's average selling price, and e-auction volumes. An intense summer and weak rainfall are likely to boost power demand. This is a theme we've been talking about since yesterday. So Coal India sits right at the center of that story. Higher global coal prices should lift e-auction prices too. After 12% EPS fall over FY24 to 26, they expect earnings trajectory to improve with 5% CAGR over FY26 to 28. Now, Supreme posted numbers during market hours yesterday, but I'm picking it up basis what brokerages are saying today. So just to take you through the numbers, the net profit was 47.5% up. Revenues were up 16.5%, EBITDAs were up nearly 50%, and margins jumped up from 13.8 to 17.7%. You look at the intraday chart, well, it ended fairly flat, Supreme Industries, yesterday. After the intraday chart for Supreme Industries is what I want to take a look at. So after a bit of a spike, it ended fairly flat. But here's what Jefferies says. It maintains a buy and has hiked the target price to 4,430 rupees from 4,360. They say it's light at the end of the tunnel. They've posted, after 6 quarters of subdued sales and margin growth, Supreme has posted a strong Q4. Margins were aided by 70 to 80 crore rupees in inventory gains. Jefferies has raised their earning per share estimate by 2 to 4%, and their CAGR of growth in earnings per share for FY26 to 28 estimate at 25% plus. Citi has maintained a sell but hiked the target price to 3050 from 2750 earlier. They've said strong volumes plus margin expansion seen in Q4. The management expects 15 to 17% volume growth in the plastic piping segment with similar margins to FY26. With increased competitive intensity, likely with backward integration by a major competitor, they do see downside risks to FY27 volume and margins. That's why they still have that sell call. So those are the first 3 on my radar.
I think it's all about earnings now, right in the middle of it. And on my list as well, I have the first one, which is a banking name. We have Citi Union Bank. It's very interesting because the highest ever quarterly profit is what the bank has posted. So a stellar set of numbers that have been reported because they've seen a significant turnaround in the asset quality. If you talk about the NII growth, mainly driven by the robust credit demand that we've been seeing, because your NII is up almost 30% on a sequential basis. Operating profits up almost 31%. The number is at 580 odd crores, and the provisions at 120 odd crores versus 96 on a sequential basis versus a 78 on a year-on-year basis. Profits have also jumped around 25%. Asset quality, the net number is at 0.68 versus a 0.78%, so a good improvement coming in there. And they're going to issue a bonus in the ratio of 1:3. So watch out for a Citi Union Bank. The stock gains of a little over 3%. Maybe the party could continue today as well. Phoenix Mills, again, a robust set of numbers because it's the fastest retail consumption growth of the year in terms of the quarter that Phoenix Mills has posted. Revenues are up nearly 21%. Your EBITDA has seen a growth of around 34%, whereas the margins have improved substantially to a 60.8% versus a 55.1%. Profits have almost gone up by 50% at 403 odd crores. So watch out for a Phoenix as well. And very lastly, Repsol Energy. Now, all of these renewable companies have been in focus. The The numbers have been above estimates if you talk about Websol, because the profits have more than doubled. They've successfully also doubled the solar cell capacity to 1.2 gigawatts. The revenues have come in at 400 odd crores versus 173. EBITDA is up 86%. Margins, however, have dipped slightly at 36.4. The net profit at 125 crores versus 42 odd crores. So overall, a strong set of numbers that have been posted by Websol Energy as well, Neeraj.
Yeah, just the contraction in margins, and
that's the only negative.
Only negative, yeah. Let's see how it works out to be. By the way, it's such a packed day today of news flow, right? You know, we not even be able to take everything, but between us, the 9 stocks that matter, the 3 from my list, Piramal Finance is the first one. The Q4 numbers optically look very strong, right? So NI up 41%, profit after tax at 603 versus 64. But lift the hood and it is good, not necessarily as impressive. And I'm using Jefferies' note to highlight why so. So Jefferies maintains a hold while they hike the target price to 1940 from 1780 odd. Current is 1843, of course. They say the adjusted profit for Q4 is a miss on large provision, but core trends are improving. They say that they've utilized one-off gains to make some large provision towards legacy assets. The AUM grew in line, net interest margin expanded, and growth business asset quality was steady in the quarter. They believe that profit and return should improve over FY26 to 28 on retail AUM growth, lower cost of funds, and improving OPEX ratio. So don't look at the reported PAT, which is a 10x jump, and celebrate. It is a good quarter, but the adjusted profit was a bit of a miss, and there are 1 or 2 chinks in the armor, if you will. So just wanted to point that out. Aztec Life, on the other hand, if you look at the net loss number, you will think why it's again a net loss. But I think the individual levers for Aztec Life look okay. Revenues were up 32%. EBITDA was up 66% at 9.2 crores versus 5.5. EBITDA margin came in at 5.76 versus 4.61. Yes, there was a net loss, but the net loss also narrowed from 16 to 7.8. Does this call for a big bump up on the stock? No, but the numbers look better than what they've delivered at the same time last year. And I think there's a bit of an improving trend in the numbers for Aztec as well. So keep this in mind. Jindal Saw, though, didn't have any such luck. Revenues were down 8.2% at 4634 crores. EBITDA margin at 10.4 versus 14.6. Net profit down 52% at 139 versus 291. Unequivocally a bad set of numbers. Very likely should see a bit of a correction. So watch out for this one as well. Guys, trivia, do any of you believe that Jubilant Food could have some bit of collateral damage?
Absolutely, with your global...
No, I'm asking.
I don't think so.
I
don't think so. Because people are eating less Domino's in the US.
So there, I think they've come out and said that there is a downtick that's happened. I think it'll have a sentimental impact on Jubilant Foods today as well.
I don't know if those markets are same or comparable, or the model is comparable, the price of the pizza is comparable, the segment they're in.
I think the reason I think that it could be a sentimental impact today, and there could be a potential impact on the numbers as well, not because of US, but you have so many smaller boutique pizza places which have opened up.
No, which is a separate argument.
Right?
Sorry, I'm just asking if the headline is that we've seen...
I think yes.
That's it. US
yes.
में गिरा, यहाँ पे गिरेगा कि नहीं? You are saying a yes? You are saying
I'm saying no. Only caveat is if people want to anyway pito Jubilant and कोई बहाना चाहिए, then this
now whatever reason.
Whatever reason. Is pay. Okay, fine. So I don't have a view, which is why I was asking my 2 colleagues what do they think. So there's a split. We'll get to know at 9:15, and by the way, at 3:30, I think they will recount it again.
The split is just 1 and 1 right now, right?
That's it. Yeah.
No, but then let viewers come in. You tell us what you think. Do you think that people eating less Domino's in the US will impact Jubilant Food stock today? Tell us what you think, and we'll see which side you're picking. We'll take a very short break. We'll be right back after the break with top strategies for the day. Stay tuned. I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and
Back with India Market Open right here on NDTV Profit. The implied suggesting a start in the red. Kush Bora, Parag Thakkar with us in the studio. Kush, good morning to you. Do you believe the lower start enables you to take a short position or no?
No, first up, a very good morning. I think this enables us to take a long position on the Nifty, maybe not today because of the volatility, but other than that, I think there was an extended profit booking session last week. We're forming a base, 24,000 straddle at play. I think there is a good reason to take a positional long on the way up, 24,300 to be taken out before we hit 24,600 and 25,000. Stop losses in the 23,700, 23,800 zone.
Wow. Okay. What about the ideas then, Kush, for the day? Maybe you squeeze them in as well?
Oh, absolutely. Still going with a hedge, so 2 long, 1 short. Pondy oxides and GMDC long ideas. Targets 1262, 1295 for Pondy oxides. Stop loss at 1199. GMDC, as you'll recall, we've had a long trade for a while now. 720, 740 are your targets. 680 is where you keep that stop loss. Profit booking done. Now rebounding. And a short idea on Tata Elxsi, 4090, 4030 stop loss. And targets and stop loss at 4210.
Okay, Tata Elxsi is going to be interesting with the moves that we've seen in the past few days. But M&M Finance is another one, the biggest single day gains that we've seen on the counter yesterday since the 3rd of November 2022, and this was mainly on the back of the way earnings had panned out. Overall, let's actually understand why the numbers were above estimates, because your AUM momentum has been building up. Their portfolio diversification is what is driving growth. Let's actually get in Rahul Rebello, who's the Managing Director and CEO at Mahindra Finance, to talk to us about the numbers. Rahul, thank you for joining in. And first, let me begin by asking you, if you have to look at the fourth quarter of FY26, with the way numbers have panned out, are you expecting that trend to continue into FY27? And is the transformation journey that M&M Finance was on completed here, and from here on, you're going to see an uptrend?
Thank you for having me on this show. When we look at the journey so far, we've been on this transformation journey for the last couple of years. Structurally, we were looking at augmenting the franchise with the capability on delivering on the 3 principles of this business, which is growth, margin, and risk. And when I reflect on that journey, where we are right now, on the growth front, we've been able to keep our dominance in the vehicle finance, which has been our hallmark for the last 2 decades. So I'm very happy in the way in which the organization has been equipped for what we call our edge capability, which is vehicle loans. Adding on to that, we have diversified into the SME business and the mortgage business, and these 2 adjacent categories, I think, will hold us in the good stead for the year to come. On the margin front, we have made very stated investments in fee-based income, and that's starting to show up as a very promising swap in. You would see that our fee-based income, from being lower than 100 bips to our overall average assets, has now climbed to 140 bips. So we're seeing that also as a structural shift from a margin standpoint. And cost of funds is a function of the borrowing rates, but also a function of how well we lever up our treasury function, which has also been delivering quite well. And finally, on the asset quality side, which is something which we were working on from an underwriting and collection standpoint, our credit costs have been within the range. and quarter four, we have seen an all-time, an 8-year low in terms of our stage 2 plus stage 3. In fact, our stage 3 has fallen 30 bips from last year, and our stage 2 plus stage 3 has fallen close to 100 bips. So I would say many structural investments, all of them are starting to show encouraging results, which makes us go into FY27 with a renewed sense of confidence. We do acknowledge that things are not as sanguine as the past. We all know that there's a West Asia conflict which is upon us, and we also know that the commentary on the upcoming monsoons is not very promising. We've had both IMD and SkyMet put out a lower than average. So that's the reason why we wanted to be prudent and create an overlay in Q4 itself.
Okay. So, Rahul, help us understand in terms of market share as well, because M&M related assets account for nearly, 46% of the business assets in FY26. So, how do you plan to sustain the disbursement growth if the parents' record SUV sales volumes actually begin to plateau, say, in FY27?
So we have now created quite a diversified playbook for our vehicle financing. Passenger vehicle clearly is a component. Tractor is another component. Used vehicles is another component. And the CV business, including the three-wheeler business, these are what form the major part of the mix. We are very early in the financial year 27 to call the way the rest of the year will pan out. The good thing is that we have optionalities. For example, we are the largest tractor financer today. We have grown our market share over the last year. We are also one of the leading financiers when it comes to used vehicles. So if we see any commerce dwindling in the new vehicle business, usually what happens is if supply challenges are there in the new vehicle business, the used vehicle business feeds off the demand. We are in a good position there. We are one of the leaders, if not the top financer when it comes to PV and used tractors and used PV. So the ability for us to lever up that participation is very quick. Similarly, in other segments, if I'm not saying that FY27 from the early conversations, we do see some supply constraints that have been called out by the OEMs and the channel. We'll have to play it by ear. It's a little early in the year, but we have optionalities in our vehicle lending playbook.
Okay. Rahul, my last question is, if you have to talk about the net interest margins, now they've expanded substantially this time around. Are you confident that you will be able to maintain this even if the RBI enters a rate cutting cycle? And what is the management's roadmap to reach that 12 to 15% ROE range from current levels? Because you're seeing a recovery when it comes to housing. I mean, your GS3 has improved on that end. So is this a permanent structural shift in collection efficiency? And to add to that, the insurance growth business, I beg your pardon, in the insurance business as well. If you have to look at all these aspects, how do you see it moving?
That's a good question. I've been asked always whether, post the results, whether the 7.5% NIM margin is sustainable, and the full year margin, the NIM is at 7.1. I said that number is more realistic. The 7.1, why I do believe it's a number that we can hold, is there are many things moving in that favor. The first is the revenue line item. Whether you look at loan income or fee-based income, I've spent a lot of time calling out what's lifting the fee-based income, whether it's investment income, dividend from subsidiaries, as well as the new insurance corporate agency license, which has brought in a steady state of fee-based income. On the loan income, why I do believe that number also can hold is because 90% of our loans are fixed rate loans, right? So even if there is, let's say, a kind of a transmission, we can reprice some of the new business that we do, but 90% of the loans remain at the same level, which brings about a certain amount of stability. So that's where I would look at NIMs being sustainable. Number two, why this numbers in our mind is a confidence number is we have significantly increased the underlying businesses in the loans which contribute to high margin. If you look at tractor, the industry grew at close to 19%. We grew 2.5 times that. And that number is what we're planning to hold. So if we are a much more stronger tractor financer and a used vehicle financer, these businesses inherently are higher margin and more margin accretive. And hence, I do believe that the 7.1 is a number we can hold.
Okay, a number that you will be able to hold, which is, in FY27 as well. But thank you, Rahul, so much for joining in. Always a pleasure to speak to you. So, Parag, it's interesting to see the way numbers of M&M Finance have panned out, because good amount of strength coming in there. In this category, you have other financial NBFCs like, say, Piramal Finance, which came out with numbers. Bajaj Housing Finance as well, not a bad set of numbers there. If you have to look at this entire gamut, how would you look at it? Because CV financing is one, housing finance is another category that everyone is watching out for.
So yesterday, if you remember, we discussed on the result thing that Mahindra Finance, and I mentioned that Mahindra Finance actually reported a surprise, a positive surprise in terms of results. So I would say that, many of this, Piramal Finance also good numbers, but the stock has rallied from 1100 when we discussed, and I think I gave a thumping the table buy at 1100, saying that target can be 2000 also, and it has already reached 1840.
Yeah.
So I would say that in City Union Bank also, for example, if you see, we were discussing, 6 months ago this bank every time, and now the bank is delivering.
Yeah.
So I would say that most of the themes have played out. Now from here, what I would watch out for is, of course, monsoon is one, and second is most importantly how long this duration of this West Asia crisis lasts. Because see, if you have to remember, when you go below 4 or 5 large banks, they lend to a slightly vulnerable part of the society. Who gets affected when this kind of conflict or the monsoon, that gets affected. And that kind of thing reflected in Piramal's CEO's commentary also. And see, Mahindra Finance has also done an overlay provisioning of 217 crore. Axis Bank did 2000 crore provisioning just to take advantage of the tax reversal which they got. So they also did provisioning. So now now the ECL thing has come. Right?
What's the impact you see of the ECL thing?
So it's slightly negative for three people. One, unsecured lenders. One, who already have a worsening asset quality in terms of SMA 2, SMA 3 increasing. And third is, of course, PSU banks. So PSU banks will have to take some hit on their net worth.
Which are the ones today that you see most vulnerable for this expected credit loss? ECL is expected credit loss.
Expected credit loss, yes. Yeah. So you're preponing your...
So which are the banks that you see as most vulnerable?
I feel that PSU bank will be more vulnerable part of... Then it depends on individual loan entities and...
Any you're spotting which could be vulnerable right now?
So I would say that SBI, BOB ko chhod ke, and all other PSU banks will be slightly more affected, while the private sector banks like HDFC, ICICI and Axis or Kotak's of the world will be less impacted, because one, their tier 1 is high, and second, they are lending to not so vulnerable part of the society. That point is very important now when we are discussing that we don't know the duration of this West Asia crisis. So that point, and structurally they have higher ROAs, they have higher tier 1 capitals.
Yeah.
So they have...
So the RBI guidelines have also come at an opportune time, because these were draft guidelines, now they've finalized them at the right time. Just quickly, since we're speaking about the space, your take on AU Small Finance Bank, because the numbers look good, but they have increased their deposit rate. So their NIMs going forward might be a little hampered.
It's okay. So, but I would say that, AU Small Finance is a great proxy to economy. Right, because large portion of their book is wheels, and in wheels you have a fixed rate book, which actually benefits from lower interest rates. So they have got that benefit. Their NIM expanded, their provisions declined significantly, and therefore you saw a fantastic growth in PAT. But at the March ending, the net worth is around 19,000 crore, and market cap is around 75,000 crore. So I would say most of the good result is priced in the stock. It might go up 3, 4, 5%, but from there people will see that what is ground reality on the economy side.
So you if AU were to be higher today, and if you had it in your portfolio, you would take some money off the table from AU?
Yes.
Similarly for CUB?
CUB generally lends to SMEs, right? SMEs and MSMEs, who are not...
But the numbers looked okay, that's what I'm saying.
Yeah, numbers good. But
so if it goes up?
Yeah, but right now, where we are in terms of valuations and current reality of the economy, I would stay with large cap private sector banks.
On the ECL, I just have one quick question with you. we are saying that there will be an impact when it comes to the PSU side of banks, probably your smaller private banks. Do you think this will push them to probably hike the loan rates, because that is what will actually help them compensate the impact of ECL? So do you see that happening?
See, if that happens, see, for example, one observation is that PSU banks have become very, very aggressive in terms of mortgage lending, where they are very competitive.
Yes.
And second is too high-rated corporates. So anyway, I think during the course of this year, as HDFC Bank has also said on the call, Q3 call, that this kind of low yields are not sustainable for long term. So they might course correct themselves and they'll increase the rates slightly. Slightly, I would say, just to take care of the system. Plus, this ECL provisioning will, as you rightly said, will put more pressure on them too.
Okay, so a lot to talk about in terms of banks today, but let's get you all the chatter that is on the street. Soumit Sarkar telling us what he's heard on the street. Good morning, Soumit.
Good morning. The first chatter, in fact, is on a bank itself. It's on Kotak Mahindra Bank. Now, there are buy flows on the large HNI desk is what dealers are indicating. And this is largely because the street is expecting that the fourth quarter numbers for Kotak Mahindra Bank will be much better compared to what the peers have reported, and also compared to what the expectations are. Then there is NTPC and Voltas. There are buy flows on institutional desk on both the counters. Both FI and DIs have been accumulating this counter in trade, and delivery volumes were also on the higher side. One stock from the cash segment, that is Reflex Industries. Now, dealers indicate that smart HNIs and prominent HNIs have been accumulating this counter in trade from long-term perspective. And lastly, when it comes to Laurus Labs and Britannia, there are sell flows on the PMS desk. The fourth quarter numbers for both the names are expected to be weaker compared to what the estimates are, and hence there are some sell flows coming in on both the names.
Okay, we're having an interesting conversation over here about what is going to be the impact of the West Asia crisis that we haven't seen yet. We're still about 109 on crude, and that's why you're seeing that 100-point dip. We spoke about a lot of stocks in the BFSI space. Coach, just want your input on how you're seeing some of them on the charts. Let's talk about M&M Finance, Piramal, AU Small Finance Bank, and City Union Bank, because those are the four that reported. We have the numbers and, something that everyone will be looking at today.
City Union Bank and AU Small Finance Bank, these look positive. City Union Bank, but you can continue to hold. It's had a good run. Positionally, it might go and hit 300, 325 also in the coming months. AU Small Finance Bank, spectacular run, but now negative divergence is popping up on the weekly setup. So you want to buy, but buy on decline. So 985, 990, those are the zones where you want to start accumulating. Mahindra and Mahindra Finance, if you do get that, kind of an uptick, it's a good idea to sell. It's not really done anything. Plus, then, there are obviously these choices, between banks and the other NBFCs, so it doesn't really rank too high. So I would say City Union Bank is a hold positionally. AU is a buy on declines. M&M Financial is an exit. Did I miss one?
City Union, AU, I think you covered all. AU Small Finance Bank,
Piramal Finance.
Piramal Finance,
yeah. Piramal Finance, yeah. This is something that you can consider, but it's in a consolidative mode, so I would give it a miss. Just a quick word on Kotak, because I think even that was being mentioned. Upar aata hai to bech do. The pecking order is ICICI, HDFC, and now Axis is also starting to make that cut. And then you've got the SBIs and Canara Banks of the world. So if you do get an uptick, it's a good idea to exit Kotak Bank.
What about Laurus Labs? Because yesterday you had Pharma, which was on a tear. From what Soumit is indicating is that there are sell flows on the PMS desk, and Q4 earnings are expected to be weak. So would you say this could be a time where you should book profits on the Laurus as well?
Yes, from a technical standpoint, two major trigger points, very clear. One, it is hitting that 1140, 1150 zone from where it has retraced, in Jan of 2026 as well. So there is a double top formation, in progress. Also around this level, when you want the momentum to be high because the price has gone high, there is a negative RSI divergence popping up, which means the strength at this level is not the same as it was before. So there are a couple of technical indicators suggesting that there could be a pullback, but given the positive structure of the stock, I think it could be added around the 1070, 1080 support zone. So right now, yes, you should book profits, but do keep it on your radar for buy on declines.
Okay. All right. Big exclusive here on NDTV Profit amidst talks of revision and hikes in jet fuel costs. Sources are telling NDTV Profit that airlines are set to take a decision on flight cuts and route diversions. But this only if and when there is a decision on ATF price hike. But some of those routes are now getting identified that will be cut. Danish Anand joining in with exclusive details. Danish, which are the rates, which are the routes that could be rationalized if there is an ATF hike?
Well, first of all, I would like to tell you that NDTV Profit has exclusively learned from multiple airline sources that the airlines are on a wait and watch mode at the moment and they're awaiting the May ATF price revision. Well, which are those routes which could get affected? First of all, it could be the short-haul routes which could see cancellation of flights. And besides that, certain routes which are less profitable for the airlines, and also those routes which have low load factor, these could be the ones that could see reduction in the total number of flights. But there's a catch to this. This is only expected to happen if the May ATF price revision is quite higher. And besides this, sources are also telling NDTV Profit that the airlines are as of now preparing for all kinds of scenarios. They've also prepared for a scenario just in case if the cap, which is at 25% of ATF prices, if that is reduced to say 15%, then even in that case, the airlines are ready with a plan, and the airlines are also ready with a plan in case the entire cap on ATF is removed. And if the 25% cap on ATF is removed, then we can expect the ATF prices to double. And currently they are at 1 lakh.
No, but Danish, one sec. So which are the routes that could be looked at? We're not saying it's going to happen, but what are the kinds of routes that could be looked at? One is assuming that your key, very busy routes will not be rationalized.
That's correct. That's correct. So those will be the short-haul route, especially those flights which are less than 90 minutes of flying time. These could be the ones that could see the cut. But ultimately, this would totally depend on the airline, because certain short-haul routes are profitable for certain airlines and certain short-haul routes are unprofitable for the other airlines. So they will be recalibrating only if they see a major sharp hike in the ATF prices. And even in a scenario of a removal of the cap on ATF, then we can expect a massive flight cancellations that is going to first take place on the domestic routes, and then it could also follow the international routes.
Okay, makes sense. Thank you so much for that, Danish. That's also at a time when some of the international routes, at least to the Middle East, would already be hampered. The West Asia routes would already be hampered. You know, we were speaking a short time earlier, Parag Bhai, about the impact of the West Asia war, which we haven't yet accounted for, which will come in with a lag. And you talked about it in the context of certain banks and their lending, especially with exposure to the auto sector. We'll hear from Maruti today. Between today and tomorrow, we'll hear from some of the auto majors. Their results have not come in yet. That quarter will not even account for what we're seeing right now. Do we need to watch out for impact on the auto sector specifically?
Yes, from both sides, right? Steel prices going up significantly, right? After that 13% duty came in. So steel prices have gone up. On one hand, you have this. Of course, in India, you have not increased petrol and diesel prices. So auto sales will not be hit like that. But it might get delayed a bit. But I would say that the sector is, and especially now you have a monsoon headwind. So, you know, the things are, although I always say TVS and Mahindra followed by Maruti are great companies. But right now the environment is not that great for them.
You know, Parag, I was thinking about it in the morning as well, that the GST benefits started coming in from what, November, if you will, right? At some point of time, that base effect also kind of weans away of growth.
Absolutely.
And the market's discounted 3-4 months in advance.
Correct.
So peak time to take some chips off the table of autos.
Already profit booking has started.
So you believe it could continue?
So I feel that there is no hurry to buy. Although April numbers will also show good numbers except for CV. CV sales have started to moderate. Moderate, but October sales will also be good. I think Maruti will also report good numbers, but the headwinds are visible.
Headwinds are visible. Okay. You know, just before we talk about Nippon India Asset Management, Kush is nodding vociferously on the auto argument. Trade bataiye.
Short on Hyundai, short on Hero Moto. For the last, I think, 2 weeks or so, the charts are,
Hyundai,
exactly.
Yes.
The charts are not indicating strength. And like I said, M&M also is more out of respect and legacy, and because it's, you know, just consolidating. But you see Maruti, not
charts kisko respect karta hai? Charts kisko respect karta hai?
Portfolio mein respect chahiye चाहिए भाई. I mean,
अब ये चार्ट्स के हिसाब से HDFC तो अभी कहीं और होना चाहिए था. Fundamentally also, और patience के हिसाब से तो अभी multi-bagger होना चाहिए था.
Obviously, there's theory and then there's practical.
Correct.
But the limited forming charts don't see the fundamentals or the reputation of the business anyway. So you're short auto.
I'm short auto OEM, specifically Hyundai and Hero in the two-wheeler space. Somehow I still like the ancillaries. I've been saying that, और अच्छा कर भी रहे हैं. Maybe once you start to see some kind of effect of slowdown on these, maybe it'll show. Right now, it's not showing in this. So ancillaries, I'm positive, but OEMs still pressure.
The other thing is the numbers that were given by some of the other companies. Okay, before I go to Parag Bhai maybe, since Sharad is with us, Sharad, let's talk about some of the other earnings which are in focus.
Exactly. Nippon AMC is something we should be looking at. They have performed the best amongst most of the AMCs, and at least in the listed space, they are having the highest market share gains. Piramal Finance, there is a good turnaround quarter happening, improvement in the operational parameters. AU Small Finance Bank, the asset quality has improved, but yes, a little bit of question on the valuations is definitely there. City Union Bank, multi-quarter high margins has been reported, and Phoenix Mills, we already saw that in the fourth quarter, the consumption numbers were stronger, and now we are seeing a profit jump of almost 50% on a year-on-year basis. Websol Energy, that's where we have seen a good jump in the PAT. Recently, Vijay Kedia had increased his stake in this counter. Pratap Snacks, after a long time, we are seeing a turnaround, at least in the bottom line and the operational numbers. Aztec Life Sciences, the losses have reduced on a year-on-year basis, especially if you're looking at the operational profits. And Rosari Biotech, surprisingly, has done well, PAT jumping 33% on a year-on-year basis. And lastly, Jindal Saw, that has been a disappointment over in the mid-cap space. The PAT is down almost 52% as the execution impact has been seen in the counter.
Thanks, Sharad. Such an important set of numbers out there. But Parag Thakkar loves the asset management space, and I'm going to ask him about Nippon Life AMC's numbers because they looked fairly solid.
Yes, absolutely. They have gained market share. Their yields have stabilized and improving. I think stock trades at 40 times earnings, and for an infinite ROIC business like this, and which is growing also and getting market share, I think 40 times is okay. So I think most of the notes which I am reading are talking about targets of 1150 to 1200. I think it seems feasible.
Wow. Okay, infinite ROIC business. I love those lines sometimes. Okay. Well, the AMCs per se haven't had a bad run. It may not be in a spectacular run, but it's not been a bad run. If we can pull up both Nippon Life AMC as well as HDFC AMC's maybe 5-year chart or thereabouts. 1 month, of course, 18%. HDFC AMC is not listed for 5 years, but the maximum possible, therefore, we can get. Can we get that long-term chart for both, please? Both Nippon Life as well as HDFC AMC. And you will probably see what I'm talking about. I think the run has been pretty decent. Okay. Having a bit of a tech lag there. But anyways, essentially, they look okay. Kushbora, very quickly, just before the pre-open session starts in, a quick chart check.
First preference is actually Aditya Birla Sun Life, and second is Nippon. So both of these have a good run. HDFC AMC is in a consolidative phase. So yes, positionally it will do well. But from a momentum perspective, Aditya Birla and Nippon.
Okay, let's go across to Ruchit Jain joining us this morning as well. He's Vice President Equity Technical Research Wealth Management at Motilal Oswal Financial Services. Ruchit, very good morning to you. Let's get a chart check.
Hi, very good morning to everyone. Well, the broader trend for the market still seems to be positive. We have seen that high top, high bottom structure getting formed on the Nifty. And the main thing is that what we are witnessing, the trend is more in the broader markets rather than index. Markets witness some dip of about 2 or 3 trading sessions. Again, we witness good stock-specific activity coming in. I think what only concern for the market that everyone is watching is the rise in the crude oil prices, where the crude prices have risen again from that 95, 90 range to 109. But if you look at the market's reaction to this high crude prices, this time it's twice different. This time it's quite different than what we witnessed last time. Last time when the crude prices were around this 110 was second half of March, when markets had a fear and hence we witnessed sharp correction. But this time, even if the markets when the crude prices have seen a rally from that 95 to 110, we are not witnessing that kind of sell-off in the market. So more or less, I think this time, rather than fear, there is more hopes or expectations that things will cool down on the geopolitical front, and hence we are witnessing a good momentum. So we think that downside seems to be limited for the Nifty. 23,800 to 23,600 is a good support zone for the index. In this correction, market should make a higher bottom in this range, and then we should see a resumption of the broader uptrend. So it's a buy and dip market. Use declines towards 23,800, 23,600 zone as a buying opportunity.
What about stock picks this morning?
Yeah, a couple of names again, which are doing well since with a good price volume action. My first call is a buy recommendation in GMDC. Well, last week itself, the stock gave a breakout from about 6 months of consolidation phase with very high volumes. And you can see that on the day of the breakout, the stock had hit that upper circuit, 20% upper circuit mark. Prices witnessed some correction. The previous resistance is now acting as a support. So I think here we should see a good momentum in the short term. Traders can go long on GMDC at current levels with stop loss below 660 for potential targets around 771. And BSE is my second pick, where broader momentum seems to be on the positive side. Witnessed a good price up move recently. Last 5-6 trading sessions, the stock saw some time-wise correction and again is now resuming its momentum. So BSE, just from a trading perspective, one can go long with stop below 3,400 for potential targets around 3,730.
Okay, so that's with regards to BSE, and in fact, brokerage houses, capital market stocks have been the flavor as well. But on to our brokerage call for the day. HSBC has initiated coverage on a bunch of metal counters, and I think this is a second brokerage which is actually either increased or initiated coverage into increased target prices in terms of metals. I think this week or last week also we had another one. Sharad joins us to tell us more. Sharad, with the kind of run-up that we've seen in terms of metals, is HSBC still of the opinion that there is further steam? And if so, what's the rationale?
That's right, Hiral, and of course, last 2 weeks we have seen at least two broking houses getting very bullish on the metal space, and now we are seeing HSBC also joining the bandwagon. JSW Steel is a buy rating, Jindal Stainless also buy rating is there, and hold coming in for Jindal Steel. Target prices are reflecting on your screen. Also, interestingly, the initiating coverage is happening, especially for the ferrous players. Tata Steel, SAIL, that's something which should be in your radar, initiating a buy rating for Tata Steel, and for Nalco also there is a buy rating. This is of course suggesting a further up move in the metal pack. Overall, they have stated that the steel is in a sweet spot and a multi-year demand visibility is something which is being seen, and a strong balance sheet largely for almost of the companies mentioned here is something to watch out for. And largely, if you look at it, there's a rising demand which might outpace the capacity additions as well, and India's steel industry is on a roll and margins are expected to expand. Middle East conflict, there might be a limited impact on it, and the valuation, the premiums which we are talking about, they should sustain in going ahead.
Okay, Sharad, thank you so much for that. Just going through what is buzzing this morning in the pre-open session. We're about 4 minutes in. Cohance Life Sciences not quitting. Still that excitement about the new boss coming in. That's the person who was running Cipla earlier. Umang Vohra, 6.5% up in the pre-open session on the stock. We were talking about the banks, right? City Union Bank popping this morning on numbers. AU Small Finance Bank also showing a positive mood over there as well, thanks to the numbers. I want to see what a Coal India is doing after the numbers have come in and what the reaction is. On the negative side, Coal India also looking decent. Jindal Saw, we told you that those numbers don't look great. Jindal Saw about 6% down. We just broke a story about how airlines will have to look at maybe rationalizing routes if ATF prices are passed on. Interglobe about 2.5% down right now. Some of the PSU banks, because of those new norms from the RBI, are seeing a bit of a knock. Look at State Bank of India, look at Canara Bank this morning. SBI Cards is the other one. Not too much excitement about the numbers that they've reported. That's also about 2% down, and Paytm for a second day in a row looking weak. In fact, Bank of Maharashtra also coming in the list of banks which is going to see a bit of an impact from the RBI norms. Basically, extra provisioning has to be put in place, and these guidelines come at a time when, of course, one doesn't know the full impact of the West Asia war on the Indian economy and on borrowers across groups. So these are some of the companies that are really moving this morning. Ruchit, you have a view on Cohance?
We did see that 20% upper circuit yesterday, and now we could see a continuation of this up move at least towards 200 EMA in the near term, which is placed somewhere around 550, 570 range. So the short-term buying interest could remain there, and we could see 550 coming in.
Well, amongst leaders of movements, and not just today, but even yesterday, if you saw, one was, of course, Cohance, the other one was Sun Pharma. Such a big move in trade yesterday. And Kush Bora, I wonder if you have a thought on Sun Pharma after the rally done yesterday.
Yeah, so the structure's not positive. It's not exciting, really.
No.
I mean, no, not at all, not at all. If you see the, about 14 to 16 months of the movement, it's a very range bound kind of a setup. 1850 on the upside and about 1600, 1575, that zone on the downside. It's been hovering around that. There is a possibility that after this kind of a move, even if there is some bit of follow through around that 1800 mark, you could see some selling pressure coming in. So not really as exciting. If I did have a position, I would look to exit, book profits, and move out. In the pharma space, we like two stocks, Cenoris and Granules, by the way, both of which we had discussed last week on the channel and have gone on to hit target 2. So right now you could book profits, but on declines, they provide a much better opportunity to enter rather than Sun Pharma at this juncture.
Okay, well, watch out. The much better options out there to look at, not necessarily Sun Pharma. There is, Tamanna had pointed out Supreme Industries in the morning, Parag Bhai. There are notes which are saying that while Supreme has had an issue, Astral may not. And the volume growth as well as profit margins might look okay for Astral versus Supreme. But PVC price is largely coming down, will hit both, right? So would you be negative here on this space?
So basically, as we have discussed earlier, Neeraj, that I bought it when the PVC prices started moving.
You bought Supreme, Astral, or something else?
Supreme, Astral, both.
You bought both.
And I booked out profits also when the PVC prices peaked out. So basically, this was just a one-off cycle, because PVC prices cannot move up by 50-60%, which it did in just 45 days. But it creates a lot of confusion in the market, right? People will start stocking, the distributors do a lot of inventory stocking, and then suddenly the prices start dropping. So there's a lot of confusion in the market. So I would say that the volume growth might be slightly lower, plus this again monsoon coming into the picture for this business also. So I would say that we'll have to wait and watch. And remember, Supreme Industries had inventory. So they got benefit of very good inventory in this quarter. And that's why you saw excellent numbers from Supreme Industries this quarter.
Okay, so Supreme, again, Astral Supreme, both remain in focus. I think let's pull up a Jubilant Foodworks and get the elephant on the table now to see what's happening with that one. 0.5% cut, that's about it. So I think let's see how markets open up. But it seems no direct impact so far. Any view, Kush, in terms of what charts are indicating for a Jubilant Foodworks?
First, you have to ask Kush how he's voting in our poll that we've made up.
Yeah.
Neeraj had me at Jubilant गिरेगा क्या? उसके बाद जो भी रीजन था मैंने सुना ही नहीं. And you summed it up beautifully, saying कि मार्केट को रीजन चाहिए जुबिलेंट बेचने का. तो अब आप ग्लोबल रीजन निकालो which has nothing to do practically with the domestic demographics, and it'll still fall. तो आप मुझे जुबिलेंट, unless there is a very big structural change over a period of time, जुबिलेंट is a shorting candidate. ऊपर आता है तो आप इसको शॉर्ट करके अपने पोर्टफोलियो में हेज के तौर पे रख सकते हो. So that's my view. Very specifically, right now, the 50-day moving average comes close to that 480 zone. If that's broken, immediate downside or niche tak aa sakta, but 465 or so. So it's a shorting candidate on my list.
What did you make of Ultratech?
So Ultratech, yesterday also we discussed, right? And we have been discussing this. I was expecting 5,200 crore EBITDA. It came at 5,600.
Yeah, but we discussed before the results came.
Correct.
Yeah, and then there was a bit of I think a downtick after the. I mean, it went up and then
so basically
a bit of
because
selling
stock
coming
has
in.
moved from 10,700 to 12,000 non-stop. So it on the result there will be some profit booking. So but if it corrects, then definitely I will remain a buyer because. See, some of the companies are doing fantastic, irrespective of the circumstances. Ultratech, Cement, ports mein Adani, banking, ICICI Bank, auto, TVS Motors. These are all great managements executing phenomenally well. These are the companies you should have in the portfolio when they fall, in line with the market.
So is there an opportunity on Ultratech right now, Kush?
There is, I would say, positionally from a near-term perspective, slightly run up. So, you could hold. I would definitely not recommend a sell on this one. After 4 days of struggle around the 200-day moving average, it's finally breaking above that mark, comes at around 12,100 by the way. It's breaking above that mark. So yes, there could be momentum coming in. From a very near-term perspective, like I said, risk-reward ratio not favorable. But yes, if you hold, there's a good possibility that about 12,500 and even 12,850 on the card. So yes, it's got a few things going for it. And now comfortably above the 200-day moving average, it could have some further up run. Downside, stop loss around the 11,950 zone.
Okay, Varsha joining in with more stocks that should be on your radar. We'll go to her in just a bit. But meanwhile, let's just talk a bit about the banks that are hurting today. Bank of Maharashtra, Canara Bank, Bank of India, Union Bank, Bank of Baroda. We told you this in the morning. If you had joined us right at the start of the show, you would have seen how we talked about how these new ECL norms are going to impact all of these banks negatively. Would you see an opportunity to buy any of them, Ruchit? Bank of Maharashtra, Canara Bank, Union Bank, Bank of Baroda, even Kotak Mahindra Bank, all of them seeing a bit of pain today.
So I think I would keep a wait and watch approach for the banking space as a whole. We have seen that the stocks have, especially the PSU banks, have not been an outperformer in this leg of up move since the start of April. They were performing quite well till the month of February or till the month of February. But since then, we are not seeing that leadership coming in. Bank of Maharashtra recently did well post the results, but still I think that it would be a good buy if we get that around 70 mark where the risk-reward ratio would become favorable. But apart from the PSU banking space as a whole, from a trading perspective, do not expect much fireworks there.
Okay, so that's with regards to banking names. Pratap Snacks, we did mention that company has posted a good set of numbers. What are charts indicating, Kush, in terms of Pratap Snacks today?
Yeah, some fatigue. There could be this, upside because of the results, but about 1135, 1140 resistance. Also, that's the zone where the stock's not been able to cross for some time. So you could expect some selling pressure. I would suggest if you have a position, exit right now entirely. And then maybe if it crosses 1050, you reconsider. But right now, there is exhaustion.
Exhaustion there. Parag bhai, Maruti will be reporting numbers today. What is your expectation from Maruti? Because technically you're seeing pressure in terms of Hyundai. Do you expect something good today?
No, so basically, see, till April, I think the car sales and those have not seen any problem. So in fact, Maruti is running short of capacities, right? But the margin pressures are kicking in because of the steel prices going up. And I think going ahead, as Neeraj also pointed out, the base is becoming more and more stronger. And so you will have a base effect also. So I'm not saying that it is a runway story ahead as we move into the monsoon.
Okay, so Maruti not that great right now. I just wonder if there's a view on SBI cards, Ruchit Jain. It reported yesterday, brokerages are not so excited today. The stock is seeing a bit of a downtake. Are you seeing an opportunity there?
Not really. It has been an underperformer. There's no participation along with the broader markets since last few weeks. Also, the pullback moves, smaller pullback moves which we had seen recently are not supported by any kind of volume-based action. So pullbacks are not supported by good volumes, so better to avoid.
Okay, the answer was not really. Ruchit, we'll come back, but the markets are about to start. So let's focus on what the start shows this morning. What quantum of red? Actually, not too much. Or will it change? For now, 0.25%, about 5960 points. Let's see if this worsens. Banks actually are down about 0.6%. I wonder which of those banking stocks are dragging it a bit lower. The market breadth is okay. Mid caps are flattish. Maybe small cap is in the green. 0.25%. Yes, not bad really. The mid strength is real, by the way. Maybe, just maybe, the growth for the Indian stocks is not in the Nifty 50 names. But beyond that, data centers, power, etc., a lot of them beyond the Nifty 50. Let's get the heat map up on the screen, show you what's moving and what's not. See which banks are dragging it lower. SBI is down about 1.2%. There is weakness in Axis, I saw somewhere. That one is looking soft. Keep that in mind. And the life insurance names, by the way, no, I'm not saying that related Bank Nifty, but the life insurance names, all of them are down today. So SBI Life, HDFC Life, both of them looking weak, and both of them on the index in the top 10 losers. Interglobe, oil prices moving higher. Indigo is down. But remember, the relative falls are now lesser. The last time Brent was at 110, Interglobe was near 4,000. It is holding on to 4,500, 4,400 or thereabouts. But a lot of red, very little green. Coal India results, maybe on the back of the results and the brokerage views, up about 2 percentage points. Grasim, I think the Ultratech impact here, 1.73%. Dr. Reddy's Adani Enterprises, again a stock which is showing a great propensity to move up on every single term. Adani Enterprises in the top 3 winners. Geo Financial has had 5-6 days of gains further. And then there is Max Health, a little bit of TC as well. But Tamanna, you can safely say that in terms of 2 newsmakers or 2 big movers, SBI on the downside, yes, but Coal India, the results and the brokerage notes kind of giving that fillip early morning.
No, and also markets not as bad as was being indicated. It's pretty much flat, 22 points down on the Nifty. If you can pull up the intraday as well. So some inherent strength there, even with Brent at 109, 108 levels. Not that much worry. So let's pull up Nifty contributors, Nifty intraday when that data is available as well, and give you a sense of what's happening there. Coal India actually pulling up the markets. L&T, TCS showing some kind of support. But it's the banks that are going to take a knock, right? The State Bank of India, 12 points down. This is, again, the ECL norms from the government which are coming in. HDFC technically should not have too much of a problem, but yet that sentiment continues with banks a bit in the negative on those provisioning norms, because it's indicating that the regulator wants banks to be protected against whatever is coming next. That's the broad message, and maybe that's something that the market doesn't like. So you've seen a bit of a recovery from the dips just as we started, and that's really what I wanted to indicate in this intraday chart, which is that you're completely flat. Let's pull up the small cap and the mid cap if we can as well, and look at what's happening there. This morning, 0.25% up on the Nifty mid cap 150. So if it wasn't banks doing badly, we would have actually been much better. Nearly 0.5% up on the Nifty small cap 250. Look at the advanced decline ratio. It's 1:2. We're fairly positive over there on advanced decline. Pull up the sectoral heat map. Apart from PSU banks, which will be suffering, you might see a decently green screen. There you have it. Nifty PSU bank about 1.5% down. We highlighted this for you as soon as we started the show. This is an important story to talk about today. Nifty bank about 0.5% down, and private banks are also hurting. Financial services, the bottom 4 is all about that BFSI space. An outcome of what the RBI has said. Energy stocks are up and about 1% up. Defense stocks are doing okay. Metal, oil and gas, and a smattering of others are fine. But it's basically the banking space which is hurting more than anything else. And let's pull up specific stocks and tell you what's happening over there. I'm going to start with AU Small Finance Bank, City Union Bank. These are all companies that have reported. AU Small Finance Bank, decent set of numbers. Maybe future NIMs might be in question as they've increased their deposit rates, about 1% up there. City Union Bank, very clearly a good set of numbers, 4% up on that stock. Pratap Snacks turnaround story, but look, the reward is meager. Seriously, just about 1% up on that. Jindal SAW was a tough set of numbers. I'm going to revisit Coal India as well, and Phoenix, which reported. Jindal SAW 6% down right now. Coal India was positive. Phoenix about 0.5% down, though the numbers actually look pretty decent. And Nippon Life AMC was a standout at about 5% pop right now. Cohance Life Sciences, so they have a new boss. The street is excited about it. 20% upper circuit yesterday, followed by another 8% uptick. I mean, this is like a prime batsman before they walk onto the pitch. There's already been, a salute there for what they're going to do. A lot of pressure, no pressure there, Umang Bora, for you. But there you have the stock jumping up. The ECL guidelines. Let's look at what's happening to some of that banking pack, and especially PSU banks. Bank of Maharashtra, Bank of Baroda, Union Bank, Bank of India, all between 1.5% to 2% down this morning because of those new guidelines and those new norms. We'll get into a lot of detail through the show on what those really mean and why it's such a trouble for banks, but you're seeing that across the board and where the weakness is. So if you look at the banks separately from the rest of the markets, it's not looking too bad here.
Yeah, I mean, they're not looking too bad. In fact, from the list that you mentioned as well, Tamanna, Cohance just stands out. 12% up move there. AGI as well, Greenpack, that stock is reacting to the set of numbers that we've reported. So 10% up move coming in there. Web Solar, a 5% up move again on the back of earnings. So it is reaction on the back of the way earnings have panned out. But Kush, a quick view, in fact, in terms of Cohance, I would want to take one with Ruchit as well on that one. After that 20% moved yesterday, another 11% today, would you say book profits?
Yeah, we did say buy yesterday, didn't know itna chal jayega itna fast, right? And it was more of a positional bet, but positional targets achieved in 2 days, might as well book 50%. The momentum and the risk reward ratio on this one fairly strong, and the next meaningful resistance on this one comes in at about 515, which is also quite a distance away. So my suggestion, book partially about 50%, but hold the rest of the quantity. On the downside, I would suggest a stop loss at the 440, 435 zone.
Okay, Ruchit, would you concur with what Kush is saying in terms of Cohance goes?
Yes, the momentum seems to be on the positive side itself, and the volumes speak that there's a lot of buying interest in the stock. And already we have seen a good price-wise correction over last few months in the stock. So I think if anyone has bought yesterday, then they should keep trailing the stop loss and continue to ride this trend.
Okay, so that's with regards to where Cohance life goes. But talking about the banking space, this is a major regulatory reset which is on the way as the RBI has finalized new norms on asset classification, provisioning and Basel III capital rules that are effective April 2027. Piyush is here to tell us more. Piyush, if you could help us understand, firstly, what are the new rules, and two, the kind of impact it could have on private as well as PSU banks, and if you can quantify anything for us.
Sure. What the new guidelines say, essentially the bankers were requesting a delay in implementation of these ECL norms. They were not in favor of implementing it from April 1, 2027 itself, which is why we see the stock reaction happening today. But essentially what the norm says is that banks will now have to move to expected credit loss accounting standard as against the incurred loss model. This is more of a reactive model, and expected credit loss is more of a proactive model where you do provisioning on a loan life cycle basis, not after it gets bad. So what the RBI said that is that the banks will have to categorize stressed loans into 3 categories: stage 1, stage 2, stage 3. Now stage 1 asset, where there is no significant increase in credit risk, a 12-month ECL provisioning will be required, whereas for stage 2 and stage 3, where the credit risk is higher, the banks will have to maintain lifetime ECL provisions. Banks, however, RBI has given this leeway that they can provide for this higher, they can meet this higher provisioning requirement over a period of 4 years. So essentially they have time till 2031 to take the impact on their capital because of this provisioning requirement. Now, as you mentioned, what the impact will be on banks' earnings, first is that banks typically make around 0.4% or 40 basis point provision on stage 2 asset. The RBI said banks have to make 5% provision on stage 2 asset. So essentially this is a very big sort of a jump, and this was a request that bankers had made to consider lowering this provisioning requirement, the prudential floor, but the RBI has not gone on with it. So that is why analysts say that for small banks, mid-sized banks who don't have that much MFI asset, there could be a 30 to 40 basis point impact on their capital position, which is CRAR, whereas banks which have higher MFI exposure like Bandhan Bank is there, somewhat IndusInd is there, all the MFI players, SFBs, there they can see up to 100 to 150 basis impact on their CRAR. Back to you, Hiral.
Thanks for that. Thanks for that. And you know, yes, this is amongst the most important recent developments. And as we discussed in the morning as well, that some of the actions, recent actions, this one included, that the RBI has taken, could it be positive for large private banks, negative for PSU banks, negative for some of the smaller private banks as well, remains to be seen. But large banks certainly come out smelling like roses. What is doing really well, Ruchit, though, is aside of banks, things related to pharma in terms of news flow, they're all right up there, right? Cohance Life we spoke about in the morning before markets. But, well, after that 20% up move, another stiff uptick today, there was also a lot of chatter around Laurus Labs and what it has done. And I want to throw in a third stock out there, Ruchit, because there's a lot of trading activity that has happened in granules of late. The last 1 odd month, granules has had a really good move. Any thoughts on Cohance and on granules?
I think Coins will continue to do well because the stock, as we spoke, that it was already a beaten down stock and a lot of buying interest is there looking at the volumes. So I think that momentum could still extend on the higher side. Amongst the other two, Laurus and Granules seems to be better placed. We have seen recently the stock went through a consolidation phase of about 8 to 10 months. Prices gave a breakout from its consolidation phase, and that too it is supported by good volumes. And irrespective of Nifty Pharma Index, which has still been in the sideways trend since last 10 months, certain stocks have only managed to reach its all-time high levels, and Granules is one of those names. So I think Granules from a trading perspective, it has potential to go higher towards 740. So if any existing long positions are there, then definitely they should continue to hold on. Even fresh buying, I think, could be done at current levels also. Keeping a stop loss below 670, I think 770, 760 can be expected in Granules.
Okay. Let's look at some of the other big movers this morning that are coming in. And on some of those banks, Ruchit, especially AU and City Union Bank, what would be the call?
AU Small Finance structurally looks well, but the only problem is that it has already rallied before the numbers. And many times we see that if the stocks already make a move before any such event, we see some profit booking or short-term consolidation. Last 2 weeks, the stock formed a low of around 840 from where it has rallied to 1080. So I think broader trend remains positive, but we could see some time-wise correction before it resumes its next leg of uptrend. So any kind of decline towards 20 DMI, which is around 990,000 range, that should be used as a buying opportunity in stocks like AU Bank. City Union Bank looks good from a positional perspective. The stock has potential to rally towards 315, 320 kind of level. So City Union Bank, yes, it's positively placed, already up 6% today, but still has potential to rally towards 320.
Okay, stay on with us. The other big story today, of course, is the big AI push. The Adani Group and Google are doubling down on India's AI push to build India's largest AI data center campus in Visakhapatnam. This marks one of Google's biggest bets on India. Rishabh is there on the spot in Visakhapatnam, where that whole groundbreaking event will start in a short while from now, and is bringing us this report.
Right, NDTV Profit is here at ground zero of what is going to be Google's biggest tech investment here in India, about $15 billion being pumped into this site over the next 5 years or so. This is going to be the AI data center hub that Google is coming up with in the Talluwada village of the Vizag district. Now, let me tell you a bit about what exactly this is. This is, of course, a gigawatt scale data center campus that is going to be built in here. This will add a lot of cloud and compute capacity for startups as well as enterprises. Let's take you inside as to what's happening at the groundbreaking part of this as well. What we have here is, of course, this is going to be a partnership with the Adani Group as well as the Airtel Group. So you'll have a lot of this data center capacity that will be coming up. What also this will do is position India as a data center hub. Apart from that, there's also going to be subsea connectivity that will come as a part of this particular data center. What this will also entail is a deeper India-US tech collaboration. That is something that Google has come up with. While in India, this will create high-value jobs. For the US market, this brings in a lot of compute capacity as well. Right behind me is what you can see in terms of the groundbreaking ceremony. What will happen here is you'll have the Chief Minister of Andhra Pradesh, the IT Minister, you'll have senior officials from the Adani Group and the Airtel Group as well. Apart from that, you can see this is the Experience Center. This will take about 6 to 7 years for this data center to operationalize after an investment of about $15 billion. So that's what we're picking up from ground zero here in Vizag.
It's going to roll out in the next hour or so. All updates there on your screen, and it's going to be the major AI data center push that we've been talking about. It's a huge investment that we will be tracking. Thank you so much to all of you for joining us today. Ruchit, Kush and Parag for joining us in the studios. All right, let's talk a bit about MobiKwik. MobiKwik has received RBI's approval for its NBFC application. It marks a key step in expanding its financial services. Before we speak to Upasana Taku about what this means for One MobiKwik, Let me go across to Shivam for more details.
Well, yes, MobiKwik Group has secured a RBI approval for NBFC license, and this marks a very important milestone for the company, as it will help them deepen its financial services offering, and also this will strengthen their full stack fintech model. And with this, they are expanding into regulated lending. The NBFC license will enable faster launch of the credit products and to serve a broader base. And talking about the broader base, the NBFC will be built on a current customer base of more than 186 millions, and this will aim to boost the lending margins, and also this will be done via co-lending model, a model in which two financial institutions combinedly lend funds to the institution or any other individual. So this NBFC will offer secured and unsecured loans across the multiple segments, and the main focus will be on Tier 2 and Tier 3 markets across the nation.
Okay, so that's with regards to where MobiKwik goes. Thank you, Shivam, for that. Upasna Taku, Exercise Director, Co-founder and CFO at MobiKwik, joins in. Upasna, welcome to the show. Always a pleasure to speak to you. This is Hiral on this side. And congratulations on crossing that hurdle. Tell us more in terms of what the next steps would be now that you've got the nod for the NBFC license.
Good morning, Hiral. I think thank you for having me on your show. See, we are on this journey to bring access to financial services in a very simple and easy manner on the MobiKwik mobile app. I think to that extent, we've been building a digital payments business for the last 16 years. We started doing credit distribution in partnership with banks and NBFCs over the last 5-6 years. And to that extent, this is the next step. It's a major milestone for us. We are very happy that the regulator has reposed its faith. I also want to tell you that our NBFC application has been approved in a record 4-month time period. And I'm very excited that given our user base, given the risk and collection capabilities we've built, our tech infra, and also the trust in the brand that we've already built in the last few decades, this is going to help us further extend, and deepen our relationship with both our MSME merchant customers as well as end users by offering them credit products to their liking.
Okay. Upasna, what are the timelines for this? Of course, it's not very, very short term, but I'd still love to understand what are the timelines, and therefore, in some sense, businesses take time to start out, stabilize, etc., or segments that get time to start out, stabilize, etc. The real change because of this, does it happen, let's say, in FY29, or does it happen in FY28 itself?
No, I think the real change will start in FY27 itself. Okay. Because, as you know, we already do digital credit distribution with several banks and NBFCs on our platform. And to that extent, a certain percentage of that, we will definitely want to start doing that via our own in-house NBFC. But of course, you are right. This is just the application approval from the regulator, which is, of course, a very big milestone. From here on, we have to infuse capital, people, the tech infrastructure. And, one can assume that in the next 3 to 6 months, this wholly owned subsidiary of MobiKwik will get operationalized. And, a certain, at the least, I would say 10% of our existing credit distribution business would get, oriented via this NBFC. I think that would be the baseline parameter for us to achieve in this calendar year itself.
There's a set of people who are wondering if this is a game-changing moment for MobiKwik. Is it, Upasna?
It is absolutely a game-changing moment for MobiKwik.
Why so?
Because MobiKwik has built a very large franchise for payments, and we have a wallet license, we have a Bharat Bill payment license, and we have a payment aggregator license from RBI. Last year, we got the stockbroking license from SEBI, and now we have the NBFC approval from RBI. So you see, from a full stack financial services business perspective, whether it is a new age one or whether it is a large established conglomerate, these are the licenses you need. These are the manufacturing licenses you need in order.
We've lost that line. Okay, no. Oh, sorry, Upasana. You were saying these are the licenses you need. We lost you there.
I was saying these are the licenses one needs to serve the full spectrum of financial needs of a customer in India.
Upasana, hi, Tamanna here. First of all, congratulations on bagging this NBFC license. This has been quite a journey that you've been on One MobiKwik. Just trying to understand what the next step is in your mind. You just talked about how this NBFC license is crucial to service the whole gamut of financial needs. What is the ultimate aim and strategy for One MobiKwik as you see it?
See, the ultimate aim for MobiKwik, our vision is very simply to serve our customers end to end on all their financial needs. We don't want to serve every single Indian, but the large user base, the large merchant base that we already have and that we are adding every day and month that we speak about, we want to make sure that they don't engage with us just on payments, whether it is paying on a QR code or a sound box, or whether it is making daily life UPI or bill payments. We also want to make sure that we are there when they need a credit product, we are there when they need to invest. And I think in that spectrum, I think with this license, we have all the foundation and the ingredients we need. Now it is up to us, to really scale the cross-sell of financial product. And like I mentioned, most of our users are tier 2, tier 3 India. And while they are banked, but they are quite underserved on financial services. And I think that is what we are trying to envisaging to close in the next few years in terms of our journey of growth.
So explain to us the timeline, Upasana. As I understand, you have now got an approval after which you can apply for the NBFC license, right? This is an approval to apply for the license. This is not the license.
No. That's not clear. That's not the case. There is an application process which we have already completed. Now, once the application is approved, of course, to disburse our first loan, we have to meet certain conditions, right? Like the NBFC will need a CEO, the NBFC will need a risk officer, it will need LOS, LMS, the technology stack, it will need capital. We have to infuse equity, raise debt. So all the basic ingredients have to go in now, post which we have to go back to the regulator and get the final authorization, post which we can start doing disbursals. And this is what I was trying to tell you, that it will take us few months from here. Okay. But just to clarify, there is no application process pending. Okay. The way to think about it is that the in-principle approval is there. The final authorization will obviously come after there is a team and the baseline foundation is ready, when we can go back and tell the regulator we are ready to disburse loans.
And this is a 6 months timeline that you've set for yourself?
That's right.
Okay. Have you shortlisted your candidates, your CEO, your CFO, etc.?
I want to tell you that we've already been working on all of that while the application process was going on. So, while we are now a listed company, we still work and operate like a startup. So a lot of the legwork is already happening. And therefore, I'm confident that in 6 months, we'll be able to launch operations. And, from there on, we'll try to grow this business and as an independent entity, which will not just do loans for MobiKwik user base in-house, but then eventually it will also partner with other platforms for customers and service their customer financial needs also.
How are you going to compete against all the major financial institutions and majorly NBFCs, Upasana, in this space? Because you've grown fast, but you are newer. There are the big boys and girls who are already there for some time. What is going to be your differentiation as an NBFC?
So let me be clear, Tamanna, our strengths are definitely our digital capabilities, our large user and merchant base, the additional, proprietary data because of payments that we have on our customers, in addition to what is available in the bureau. So even as we launch this NBFC, we are not trying to become a 5,000 crore balance sheet entity in this NBFC. Our go-to model is a co-lending model, in which typically in co-lending model, one can operate in 90-10, 80-20, where, we will be the minority and we will partner with the banks and large NBFCs to help us bring the right products to the customer base. What this does offer us is that it offers us flexibility. We can build our own products. We can do lending from our own book. And once we demonstrate performance on those products, we will be able to scale it by working with others who have larger balance sheets in the co-lending model. So definitely it's going to be innovation and distribution as the key for us.
Upasana, the question then is, one, you're talking about NBFC license. Then recently you had the stockbroking business license that you've got as well. If you have to put all of this together, and let's look at second or third year from here on, what's the size that you're looking at in terms of business?
So what we are looking at is that 50% of the revenue, let's say 3 years from now, should be coming from the payments business. And 50% of the revenue should be coming from the credit and investment verticals of the company.
Okay, so and this is, say, FY28.
Yeah, I mean, I'm just giving you a general view that how we would like to diversify the revenue. Currently, we are sitting at 75% revenue comes from payments and 25% comes from credit distribution. So our wealth vertical is still very small and there is, barely any revenue from there. So I would say 3 years out, I would definitely want to see, 10 to 15% of the revenue coming from the broking and investing vertical. And I would definitely want to see the balance, 35% coming from credit distribution.
Upasana, just a broader question, because this is something that everyone is kind of guessing right now, that what has been the impact of the West Asia war for the last 8-9 weeks? Is it impacting ability to pay back loans or credit appetite? What are you seeing on ground?
So you're right. All entrepreneurs and business people, bankers, we've all been very anxious and nervous, just like politicians, to see, when this war and disruption is going to end. Because, of course, with the oil prices, it hits large economies as well. So far, we have not seen any significant downgrade in the credit performance. So far, things seem in line. But yeah, I mean, currently the war is on a pause. I think that if the war again comes back and continues for months, it will definitely impact all large economies, including India.
Okay, good to hear that as well. Upasana, thank you so much for speaking with us. Upasana Taku of MobiKwik, and a lot of exciting things actually happening for this company. They got their broking nod, now their NBFC nod, that stock actually going up as we've had this conversation. And the focus is to compete with the big boys and girls as well on the NBFC space. Well, if the idea is to serve a larger number of Indians, that's always a good one.
And you do it digitally, and they are, well, frankly, they are at the fore. I mean, it's effectively a digital company which is now taking the shape of all the other things that they're doing.
So it's a very different route, actually, from everyone else. Yeah.
Yeah, good for them. Well, the management, it's a game-changing move for them. So let's see if it indeed turns out to be that way. Okay, let's move on to other things. And, well, not particularly a game-changing quarter for Zensar, I presume. But before we get to the management, let's get in Puneet to highlight the Q4 earnings and maybe the outlook ahead that they've given. Puneet.
Well, thank you for that. Definitely a quarter to forget for IT, and Zensar was also one of them. Muted quarter, revenue declined by almost 1.3%. On a constant currency basis, which takes into effect the other currencies as well globally where they operate in. We've also seen that while the growth was largely led by BFSI, which is 45% of the revenues, all other verticals actually fell in this particular quarter. You've seen the US region, which is almost 65% of the company's revenue, decline by 1.6% at this point of time. We've also seen that there was one big mega deal announced of almost 200 million, and hence I think while the stock is down, it's not out in that sense. So 200 million mega deal announced, and because of that, the deal wins are up 122% on a quarter-on-quarter basis. What to watch out for has been in terms of reversing this decline across other verticals in key regions like South Africa, amongst others. They've also specifically something to watch out for is that while the rupee has depreciated materially in this quarter, you've not seen the EBITDA margin actually fall in this particular quarter for Zensar. So both EBIT and EBITDA are down. So there's a lot to watch out for from this conversation.
Yeah, well, let's try and get Manish Tandon in. He's CEO and MD of Zensar Technologies. Manish, thanks so much for joining in. Appreciate your time. Soft quarter, but since it's quarter four, sum up the quarter and the year for us from how you saw it.
Yeah, that's true. I think we were expecting the mega deal to ramp up. We actually wanted to close the mega deal in Q3 and ramp up in Q4. That got delayed a little bit, but good news is now we are ramping up. So hopefully we'll see a better quarter Next one.
So, okay, so I'm just trying to understand for FY27, for Q1, will the ramp up of that big deal that you just spoke about drive the FY27 revenue? Are there some numbers there?
Yes, that is true, and we are very hopeful about about the mega deal. So it should reflect in the numbers going forward.
Are there some numbers there, Manish? I mean, let's say have you given a formal guidance for FY27 for that matter?
No, we don't give formal guidance. That has been the policy of Gensar, and I think given the current macro situation, it is very difficult for anyone to give guidance. But yes, your analysts have done a good job, and I think the overall analysis is correct that TMT will continue to show weakness for us, and other sectors should do better.
Okay. Okay, let me try and ask you in a different way. Do you sense some bit of pricing pressure ahead because of AI? The belief is that AI may lead to heightened competitive intensity, price deflation, and it will have an impact on revenue growth. Your views?
No, I think the analysts have two assumptions on this SaaSocalypse, if we may call it. One is that all these SaaS products will be wiped out and will be replaced by bespoke applications. And the second main issue seems to be that IT firms will be impacted by that. Whether it's regulatory or non-regulatory, I don't think that the SaaS firms will get wiped out, primarily because these are systems of record. I mean, unless until there is a small system that is SaaS, I mean, these are CRM systems, ERP systems, they are systems of record. They do not get replaced so easily. But what is happening is that companies like us, are building an intelligent layer across on top of these systems. And that is where we need to leverage our IT prowess and technology prowess to take things to the next level. So I think from where I stand, I see it as a net positive for the IT sector. But again, these deal sizes are not, mega deals. These are smaller deals in size. So there will be that yin and yang between growth in AI and shrinking of the old pie, so to say.
Okay. Okay, Manish, can I ask you what is the margin impact anticipated for FY27? Again, a lot of people are talking about how the competitive intensity will go up and that will lead to both pricing pressure and therefore margin pressures. Will you be able to manage? Any thoughts here?
That's a fair assumption, yes. Because, I mean, first of all, we have always taken a view that our margins will be in mid-teens, which is 14 to 16%. These are EBITDA margins. And we intend to mega deal or no mega deal, we intend to stick to this range even during the ramp up. That will be our effort. How successful we will have to see and take a call. But you're right that the impact of ramp ups will finish towards end of Q2, middle of Q3, and then the margins will be more predictable. They may not be very high or whatever, but they will be in the guided range, so to say.
All right. Okay. I'm still trying to get a numbered answer here, Manish, so I'm going to try one more time. Could pricing go lower? Do you reckon you will see pricing pressure in FY27 and 28?
Yeah, I think both both the assertions have some truth to it. One, of course, the competitive intensity has increased tremendously. Okay, we are seeing tier ones in deals which we had not seen them, even on the smaller deal sizes. We are also seeing, people literally buying deals, literally writing checks to get the deal in. So the competitive intensity is going up. I also feel that if you continue doing the traditional work, then your billable hours will come down because of AI efficiency. But as I always say, that the CIO budgets, technology budgets, are not being cut; they are being expanded actually. So ultimately, that should reflect in the IT services sector also. And what is happening is previously projects which were marginal in ROI have suddenly become ROI positive, so to say, and clients are taking up those projects and programs. So I'll give you an example. There's an old legacy system which previously could take maybe $5 million to replace. Today it takes only $2 million or $3 million to replace. So previously this project was on back burner. Now it comes back on the front. So we need to look at it from the lens of overall IT spend rather than just individual projects, because the old yields place to new. So the old business will continue to shrink, and the newer business should grow.
All right. Manish, that's, well, some food for thought for all of us. Lovely answer, that one. Thank you so much for taking the time out and being with us today. All the best for FY27. Well, that's Manish Tandon saying that Q1 and Q2 might be a bit soft. Q3 onwards, the ramp up will start showing numbers as well for them. It's a large deal that they've bagged. They were not able to execute in Q4. Execution starts now, but still will take some time. Well, much like what could happen to a lot of other companies, quarter one and Q2 might have some pressures, guys.
Yeah, agreed. All right, now on to a very seasonal and timely story. If you're feeling the heat one way or the other on your portfolio or otherwise, here are some ideas that could actually help you. It's a strong summer, a weaker than normal monsoon, and both are reshaping sectoral bets. Higher temperatures are boosting power demand, cooling appliances and mining activity, while rural-linked sectors like autos, fertilizers and FMCG face pressure. Mahima joining in with a detailed analysis of sectors that could get impacted. Mahima, these are stocks and companies which could get impacted positively and negatively.
Both, yes, absolutely, Tavana, both ways. So there are, sectors which will get positively impacted because of harsh summers, but weak monsoons will impact a lot of sectors as well. I'll start with power first. Because of harsh summers, power demand will go up, and that is why a lot of these names coming in, like Adani Power, JSW Energy, Tata Power, Torrent Power, etc., will see, because of peak demand in power, we'll see, top line additions. In terms of consumer durable and EMS sector, demand for AC, fan, cooler, etc. will go up. So all of these companies stand to benefit from that. So that includes Voltas, Blue Star, Symphony, Havells, etc. In terms of mining, fewer rainy days imply that more productive mining days will take place. And that is why coal producers, of course, on the back of high demand for power, will also see higher mining activities, and that is why counters like NMDC, Coal India, GMDC, etc. might benefit. Refrigerant chemicals is other sector for which this turns out to be positive. Higher demand due to higher temperature and gases that are used in AC and fridges produced by these companies. So counters like SRF, Naveen Fluorine, as well as Gujarat Fluoro, etc. stand to benefit from this. Pipe companies now, generally agri pipes and pumps usually are directly correlated to summers, and the production and demand for these go up, and that is why Phenolics and Supreme Industries could also benefit. FMCG, as you know, different pockets. There's mixed and different opinions when it comes to summer as well as monsoon. Some benefit from summer, so counters like Varun Beverages, United Breweries, your ice cream counters like Quality Walls, Vadilal, etc., will benefit because of demand going up for beverages, ice creams, etc. But Zydus Wellness also will pick up because of talcum powder demand going up. But on the flip side, you have Imami, Dabur, which will, these are the counters which will, of course, benefit. But on the flip side, you have Colgate, HUL, Jyoti Labs, where a lot of income comes from the rural side of things. And because of monsoons being impacted, rural demand for them will go down. And this could negatively impact counters like Colgate, Jyoti Labs, HUL, Marico, etc. In terms of auto, because of, again, here, weaker monsoons, rural demand will get impacted. And because of that, M&M, Escorts, Cubota, VST tillers, etc., where tractor volumes could go down on the back of that and impact these companies. Fertilizers and agrochemicals could also see negative impact because of weak rainfall. This could lead to lower sowing and lower fertilizer demand as well. And lastly, cement. Here again, it's a mixed pack because overall, less rainfall employs more construction activities, but also impacts the rural demand from poor farm income. So that way, cement will have a mixed reaction to when it comes to harsher summer and weaker monsoon. So this is the overall view of how different sectors will get impacted because of seasonal activity.
Okay. So, it's the scorching heat, lot of beneficiaries do come in, but I think all of this, Mahima, somewhere will be ordered, right, by all of us. And I think one company that benefits out of all of this is Eternal as well. In fact, they will be reporting numbers today. What is the expectation? Because two of the stocks that have, Eternal has been under pressure. It was yesterday down in trade, one of the top losers. Today as well, a somber start is what we're seeing. Mahima, yes, to you.
Okay, all right. So here, basically, the expectation is that overall, in terms of demand recovery and revenue growth, that is mainly going to come from Blinkit. The expectations are also that margins might see a slight uptick this quarter. Now, overall, in terms of the growth numbers on year-on-year basis, revenue might see an uptick of over 2 times. EBITDA might see a growth of 5x, and margins might be at 2.4%. versus that of around 1.3 odd percent. This is the analyst estimates, Bloomberg estimates suggesting this number, and profit might see a jump of 2 times as well. Now, in terms of what to expect, steady improvement in net order value growth is something that all the analysts are penciling in. Double digit both in terms of your food delivery as well as Blinkit on year-on-year basis. High double digit for Blinkit and low double digit for food delivery. Kotak has forecasted that Blinkit store could reach to that 2,200 number mark. That means around net addition of 173 dark stores this quarter. Morgan Stanley, however, says that quick commerce revenue and profitability forecast might be subdued because of competition also coming in because of higher discounting, and Blinkit is the only platform which has gone ahead and increased their handling charges as well. In terms of key things to watch out for, I think whether Blinkit will be able to sustain the high growth that it has done in the last quarters or not. High platform fees and competition, how is that dynamics faring out? And plus, this is the first quarter after Albinder has actually taken up the role as a group CEO, so we'll have to watch out for as to what his comments are going forward as well. So this is the overall view of what you can expect from Eternal's Q4 earnings.
Okay, all right. So Eternal also in focus, 2% down ahead of the earnings, and Coal India, though, on the other side, has delivered a strong Q4. Brokerages are also bullish on the stock. Let's go across to Sharath for more.
Well, yes, it's the top gainer in the Nifty index today. Coal India, especially the operational numbers, have beaten the street estimates. Of course, there are two reasons for it. One is that e-auction volumes have done well, and that average selling price, to put it in simple perspective, realizations, they have gone up as well. Net profit saw a good jump, and brokerages also interestingly have given a thumbs up. Jefferies has maintained buy, but the target price has been hiked from 485 to 500 rupees per share. And of course, an intense summer and a weak rainfall is likely to boost the power more demand, and because of that, the coal generation is also expected to be on the higher side. For FY24 to 26, after a 12% EPS fall, they're expecting Coal India's earnings trajectory to improve by at least 5% CAGR over the next 2 years. And Citi, on the other hand, stated that the volume trends still remain a bit muted, but the PAT has been in line with the street estimates. And overall, the valuations, they offer a limited downside, and the lack of visibility is there on the upside triggers. But net brokerages still have given a thumbs up. And remember, it's a dividend yield play stock as well.
So much for that, Sharad. So Coal India is doing well today, about 4% up on it. We'll do a quick market check before we take a break, because you have markets actually holding up fairly well, 0.25% up now on the Nifty, 24,162. So holding out fairly well. We'll take a very short break. We're coming up on the other side with great conversations. We have Anirudh Sarkar joining in on Talking Point for the big market view, and then also, of course, a host of corporate focus interviews lined up. Don't go away.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो पतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you.
All right, big conversation this morning. Anirudh Sarkar, co-founder and CIO of Equinova Investment Managers, joining in on the show. Anirudh, very good morning to you. I'm wondering how you're looking first at, I'm diving straight in, pardon me, but I'm wondering how you're looking at the kind of knock that banks have taken, or public sector banks have taken, about ECL norms. And I don't want you to comment on individual banks, but I'm zooming out with the smoke signals that we're seeing. This is also the regulator coming in and saying, listen, tighten that belt and be careful, isn't it?
No, I think absolutely. I think it's always, if you look at the Indian banking regulator, I think we have always been one step ahead of anything going wrong. And I think that makes our banking system extremely robust. Having said that, I would say this was required, and this was something which was in the coming, and this was expected to happen. So I would not be too worried about the ECL, the regulatory thing which has been which has come yesterday and which is going to go effective from 1st of April 27. So I think it's the normal business, I would say, for me.
Okay. So you're not seeing any impact or any change of sentiment that you have towards the public sector names? Because they're reacting quite negatively to this.
Unfortunately, the way the markets have been happening these days, on every news, markets have been reacting. But typically, if anyone is looking from a slightly medium to longer term view, I would still bet on the PSU banks. And I think that is where, if someone has not got into it, I think it's a good day to enter it, considering that you have all these banks down around 1%. But I would not be a person who would want to exit out of PSU banks because of this ECL, the guidelines which has come. So I'm still a buyer, and PSU banks continue to be overweight allocation in my portfolio, also because of the valuation comfort, the growth, the ROE improvements which we have seen, and the balance sheet potential growth which is visible from there.
Okay. Okay, Anirudh, so that's as far as banks go. Now that the theory around the rate interest, good morning Neeraj here, interest rate trajectory is maybe different from what it was believed to be in 2025. What's the call on NBFCs? Some of them are showing some very good numbers. Maybe the GST cut is helping people buy more, but is the view on NBFCs constructive or is it not so?
On the NBFC side, and if I just put along with the NBFCs, if I put the smaller banks also, I would say that, there are some very selective names over there where I'm seeing good valuation comfort. In fact, in some of these cases, they have had some good, big, large investors who have picked up good stake and infused a lot of capital in their businesses. But the market has not yet reacted positively to such events. So I would say with a large infusion of capital in some of the good NBFCs, their cost of borrowing will go down. Their balance sheet improves, the lending growth improves. And I think that is where market, because of the overall pessimism around the rate cycle, around the wars and around concerns on growth, market is not yet pricing in those big events. So I would say I'm a selective buyer in selective NBFCs and also those smaller banks.
Okay. Okay. The other thing, Anirudh, I mean, I know we're making this, sticking to financials right now, but the non-lending financials and the asset management firms, the numbers, the larger ones, had delivered some fairly strong numbers. I mean, Nippon is a case in point. I think ICICI proved decently well as well. Are large asset managers, large wealth managers, names that people should consider from a slightly medium-term perspective? Do you like that space? Why or why not?
Absolutely. In fact, I've been a believer in the whole capital market play. And for the last, I would say, 4 years, capital market play is almost like a 14-15% of my portfolio. And when you say capital market play, I think AMCs is one of the best ways to take exposure there. Purely because if you're betting on the asset growth across India, and within that, if you have these few big AMCs which are continuing to grow. Now, as you will know that, asset management industry is a pure operating leverage business. And as your AUM grows, both from the market action and both from incremental inflows, I think it all comes into your bottom line. And that is where you would have seen a lot of yield improvements have happened for many of these AMCs. You have seen decent amount of growth, AUM growth. The other important part is a lot of action has been happening on the ETF part. And ETF is a very, very passive kind of inflow. And that is where, again, good amount of growth is visible. So I would be a buyer in AMCs even at these levels because it's a multi-year way of taking exposure into the equity market culture which is growing in the country. Wealth management, broking is the other two areas where I would say there are some good names and I have allocations in my portfolio because that is, again, this whole bucket of, AMC, wealth management, broking is an excellent way to take exposure into the equity culture. And yes, some platform businesses also, which become the platforms for giving exposure.
So that's with regards to where the entire financial universe goes. Anirudh, good morning. Hiral here. I want to touch base with you when it comes to IT. It has been a no-go zone for you for quite some time now. This quarter post-earnings, a lot of commentary has changed where people are of the opinion, or fund managers are of the opinion, that where there is highest pessimism, you can look at IT probably as a sector where there is pessimism, where you will find value going ahead. Or there is a change of stance coming in that from a no-go zone, you can look at IT from now onwards with the way valuations are. How are you looking at it?
I would continue to maintain my avoid stance for IT, and I would not want to preempt my entry there because when we talk about valuations, in fact, IT valuations looking attractive has become kind of, a very common discussion whenever we meet investors, whenever we meet in our the market community. But where one needs to see is that the valuation is attractive on the PE basis because historically they would be at 25 to 35 PE multiple. From there, when you have seen a decent correction on the PE basis, it looks attractive. But when you superimpose the earnings growth for this quarter, for the next quarter expected, and the next to next quarter expected, that is where my concern is that on a PEV basis, they are still expensive. And if you're growing at the low single digits or the mid single digits, and you're still getting a 18 to 25 kind of a PE, I would still be away from IT stocks. I don't mind getting in 5-10% higher, but I would want to wait for at least 1 or 2 quarters to get visibility that the demand environment has improved. The biggest issue in IT is that, it's not about AI only. AI is definitely disrupting businesses. It's eating into their the margins. It's eating into their deals. The other big issue is that you are sitting at a very large fixed cost, most of the Indian IT stocks, IT companies. And that is where I would say how AI is disrupting their business margins, bottom lines, growth is a very, very uncertain thing, even at this point of time. There are some management giving very positive commentary also, but body language is not giving me the comfort to get in there.
The small other pieces that there's a lot of chatter around the end product prices of some of the chemicals having gone up so much that even if it kind of cools off, the new normal will be higher than the depressed prices earlier. Would you believe chemicals are a good tactical play?
Absolutely. So I would say chemicals is something we have also taken exposure over the last couple of months. And there are two parts to it. One is that the prices have gone up in some selective chemicals. The other part is China has kind of, taken stock of its overcapacity of chemicals. And China, if you see, historically was one of the biggest disruptor of global chemical prices because they were they had a large capacity, they were dumping in the global markets. Now, with most countries having a lot of entry barriers, or I would say putting in a lot of import barriers, China has understood that they need to take care of their, the bulk chemicals which they were doing. So they have also kind of either decreased their capacities in some areas or moved up the value chain. And also they have started focusing on profitability. So I would say one of the reasons of chemical prices going up is both, the logistics disruption and also China taking stock of its output.
Okay, Anirudh, we'll have to leave it there. Thank you so much for joining in. Always a pleasure. We're going across live to an important bet that Google has on India in Visakhapatnam, building the largest campus. Let's listen into Jeet Adani's remarks at the foundation stone ceremony.
Today, India stands at approximately 1.3 gigawatts of data center capacity. Just for context, here today, we are envisioning nearly 1 gigawatt in a single location. That contrast reflects the scale of transformation ahead. India is entering a new league of AI infrastructure, and India's advantage is very clear. Trust, execution, and most importantly, energy. AI may be written in code, but it runs on electricity. The AI revolution is constrained by power, compute, connectivity, and the speed of execution. Energy sits at the core of this equation. It is the largest component in the cost of compute, and in simple terms, the cost of intelligence is the cost of power. And this, exactly, my friends, is India's structural advantage. And this is where us at the Adani Group play a critical role. If India is the opportunity, Visakhapatnam is the frontier. For decades, India's digital gateways were concentrated in Mumbai and Chennai. Today, a decisive shift is underway. With the development of the undersea cable landing infrastructure in Visakhapatnam, a new gateway to India's digital ecosystem is emerging. For the first time in decades, India is opening a new digital gateway beyond just the two cities, redefining how the country connects to the world. But the shift is not just about connectivity, it is about positioning India closer to global data flows, reducing latency and enabling faster, more efficient AI workloads at scale. In the AI era, how data moves around is as important as how it is created. And Visakhapatnam here has a natural edge. It combines port-led infrastructure, access to land, strong policy support, and the ability to integrate energy and connectivity at scale. Equally important is the leadership. Under the vision of Sri Chandrababu Naidu ji, in his 2.0 phase of leadership, Andhra Pradesh is moving with speed and clarity to position Visakhapatnam at the center of India's AI future. What stands out is execution, the ability to move from vision to decision, and from decision to now delivery. When that vision is combined with investments of this scale, it creates a center of gravity that attracts ecosystems, drives innovation, and shapes the next phase of growth. Just as Bengaluru defined India's technology revolution, Visakhapatnam is going to anchor India's AI revolution. Visakhapatnam is positioning itself to help define that future, and what begins today marks the starting point of this large transformation. The transformation here is being enabled by the strong partnerships we are witnessing today. And this is where I would personally like to acknowledge Google and Mr. Sundar Pichai for their continued belief in India's role in shaping the future of technology, along with Mr. Thomas Kurian and Bikash for driving this collaboration forward. This partnership brings together global technology leadership, connectivity at scale, and integrated infrastructure capability. At the Adani Group, our conviction is very clear. For India to lead in the age of AI, it must build infrastructure at scale within the country. This is why we have committed $100 billion to build a platform that supports India's AI growth. We are building an integrated platform across energy generation, transmission, digital networks, and data centers, powered by clean and reliable energy and designed for scale, speed, and resilience. Our role is to enable the ecosystem that AI depends on. Because the future of AI will be shaped by infrastructure and enabled by energy. For AI to transform our economies and societies, it must be affordable. And affordability begins with energy. Lower energy reduces the cost of compute. Lower energy costs reduce the cost of training new models. And lower energy costs reduce the cost of inference. Energy efficiency and scale will determine how quickly AI can move from experimentation to widespread adoption. And as the cost of compute falls, the cost of intelligence falls. When intelligence becomes more affordable, access expands, innovation accelerates, growth becomes more inclusive. And that is the real promise of AI. More people gaining access to intelligence. More businesses able to build and scale, more opportunities created across sectors and communities. What we are building here will support scales, access, and India's leadership in the AI century. India will build the future. India will architect intelligence. And India will democratize intelligence by expanding access to it. Because the true power of AI will be measured by how widely it can be used, and that journey begins here. Thank you. Jai Hind.
So that is Jeet Adani talking in Vizag about the new league when you're talking about AI, where Google as well as Adani Group have come together, and this is one of the biggest infrastructure developments that we are seeing within the country as well. But moving on, you have EU Small Finance Bank that reported numbers. Let's just quickly pull up that stock on the screens and see what the counter is doing in trade, because a good set of numbers, but a couple of concerns that do lie there, because of which the stock is down nearly 0.6%. My colleague Tamanna Inamdar is in conversation with Vivek Tripathi, Executive Director at AU Small Finance Bank. Let's listen in.
In the specific bank problem, that's a overall challenging environment to raise deposit for banking industry as a whole. The constant shift towards the capital market. But we are confident that we are focusing more on the acquisition. If you look at our new acquisition, it's month on month touching about 100,000 customers, which is pretty strong on the CASA side, right? So net acquisition value every month is pretty strong. We are very, very confident that with the diversification even from the larger base of the liability from the commercial banking customers, the so to say that branch banking will be free from running after the larger deposit piece. They will be more focusing on granular deposit, and that has been our focus. Right? So it happens, right? We don't look at quarter on quarter, but what we look at overall, whether strategically we are going in the right direction or not. So all efforts are to go out and acquire more and more, I think retail customers. And I think universal transition will help that. It will help us in terms of acceptability on the retail side, especially on the salaried customers who have a large, SA base in the industry. And also it offers us the opportunity to significantly bring down our cost of fund, right, over the period. I think it's a larger.
It's going to come, and I'll come to you, Mr. Tripathi, on the universal bank transition when you hope that will happen. But just coming to the here and now, and as things stand, with the kind of dependence on bulk deposits, do you see a need to maybe tweak up loan rates going forward?
Absolutely not. You look at our cost of money, right, quarter on quarter sequentially, right? The cost of deposit has gone down substantially. We were not anticipating that we will touch. So our exiting cost is significantly lower than what we anticipated at the beginning of the year, right? So there is a constant, I would say for us, the NIMs, I would say the margins, in terms of the quite a expansion happened, and it should be sort of bottom out scenario for us. We will further diversify our funding base, and second, even on the asset side, we would further have to diversify our customer segment within the, let's say, wheels within the mortgage book, because if you are catering to a customer on the liability side, you need to cater on the asset side as well. So you will acquire customers who tend to be your liability customers. You will cross-sell them, upsell them. I would say more prime segment customers in the metro and tier 1 market, where we'll have to offer a competitive rates, because these customers are getting competitive rates from the competition. So if you're not doing holistic banking with them, the stickiness of the customers can be a problem for you. So we'll eventually have to diversify our asset customer segment as well.
Okay, fair enough. So what is the kind of NIM guidance you're looking at for, say, the next couple of quarters? Till you acquire all of these coveted customers that you're talking about, what is the current NIM guidance looking like?
So we are not giving any NIM guidance. What we are saying that, we stated earlier that we are guided by 1.8% ROA, which was committed for 2027, right, FY27. And our exiting quarter end number says that we have touched that. And our endeavor is to, deliver the change, right? And over the next 5 years, 3 to 5 year journey, we are saying that we want to remain in this zone, right, where we grow to 2.25x to 2.5x of the nominal GDP, and we deliver 1.8% ROA kind of a return. And that has been our endeavor, and that we want to consistently do. So I think sustainability of this number is an important aspect of our overall, working pattern.
Okay, that's fair enough. As we've been speaking to analysts all morning, Mr. Tripathi, and the numbers are robust, the growth of the bank is good. The only sort of concern in the street's mind, and I'm going to sort of talk to you about that, is the profile of your customer base and their vulnerability to what has been happening geopolitically. The high dependence on wheels, for example, the kind of base that you have, which will be impacted by what's happening in the West Asia crisis. First of all, do you see that as a concern? Are you seeing any initial signs of that kind of stress?
So, Tamanna, I want to give sort of assurance and understanding to on the viewers as well, that so far what we have seen on ground, nothing is visible to us. All are, from a repayment behavior, collection feedback from business and credit ground team, the customer impact is not there. However, if the there is a pass on of inflated, I would say, input cost, including fuels. If there is a second order impact, it would be a wider impact in the economy, and that every segment of customer will get impacted. It's very difficult to factor and assess as we speak, but at this moment, there is no impact on the book. And we are as good as we were just 2 months back, right? So it's difficult to say that you have any specific segment which will get impacted first, because we do not have a very large exposures on one gas-fired industry or industry which is completely dependent in terms of raw material from the West Asia, or exporters who are completely dependent on West Asia. So to that extent, we are isolated. But, energy is one area where India is yet to be self-reliant. And obviously, if the input cost goes up, there will be a second order impact on the many things. And that would include our customer supply.
For example, when this whole LPG crisis was happening and, small restaurants, etc. were getting hit, or tile makers were getting hit, were you seeing any of those frantic calls, any of that impact coming in? It may have settled after a few weeks, but that was a first rumble, so to speak.
We also thought that there could be some calls and there are some pockets where we would see this. But, I would be very candid that we have not seen anything of that sort. People could able to manage, or we did not have large exposures on those entities. If you look at our MSME exposures in the MBL, those are generally small mom and pop stores. They are B2C customers, so not much impact there. And on a wheel segment, more than 50% book is a personal vehicle, which is, again, the people are driving for their own business or own purpose. So you are insulated that way. The larger part, again, is a small commercial vehicle, which is a last mile connectivity. So we had a very limited, so to say, exposure even on HCV and MSCV segment, right? So we did not see it that way. Hopefully, if things continue in that manner, I think Q1 would be a testimony, because Q3, Q4 is a very, very strong seasonal quarter for us. Let's see and evaluate, how it happens in month of April, May, and June.
Now, I think that's fair to say that not just you, everyone is waiting to evaluate that. Two questions more, and quick ones from my side, sir. One is the new ECL norms from the Reserve Bank of India. What's the kind of provisioning you will need to comply with these norms?
So, Tamanna, the final circular has just come in. We need a time to assess and understand it. But just to give you assurance that large part of our asset is a retail secured asset, where historically our loss given defaults have been very, very low. The probability of default, correspond to the customer segment we cater. So we don't expect any sort of disruption there. But yeah, we'll have to digest this and understand, and dissect this basis that only we can comment.
Okay, fair enough. And last point, what is the kind of timeline you see to the progression of a universal bank? You spoke about that at the start of that interview and how that is going to change a lot for you.
So, Tamanna, we've made our final applications to regulator in the month of March, and we are just waiting. It might happen this quarter, next quarter, we don't know. But, from our side, there was a relaxation on NHFC structure, which has been given to promoters, and bank has made a formal applications to regulator, and we are just waiting for final consent.
If you get the nod, you are ready to make the transition on your end?
Yeah, we are fully ready in terms of all platform,
okay,
capabilities and product offering. We were there. We're just waiting for a transition to happen.
Okay, thank you so much, Vivek Tripathi, for speaking with us, and I hope that sore throat gets well soon. That was Vivek Tripathi, Executive Director at AU Small Finance Bank, talking about the quarter gone by. Robust performance from this small finance bank. Of course, some clouds may be on the macroeconomic impact of their customer base, but the management says that they have seen no warning signs yet. That's all the time we have on India Market Open. We'll take a very short break, but stay tuned. Ask Profit on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor,
Welcome. You're watching Ask Profit here at NDTV Profit. I'm Mahima Vachharani. And with me, as always, is Puneet Zaveri. And markets probably are holding up in that wait and watch situation right now. The Nifty 50 right now is up by about just 75 odd points. Above the 24,100 levels is what we're seeing on the Nifty 50. Up 0.3 odd %. And let's try to pull that heat map up. Also, a lot of it right now in the broad end of spectrum is also moved by earnings, and also for the benchmarks as well, because Eternal just ahead of earnings, seeing profit booking, probably investors not wanting to take risk before earnings, seeing a downtick around 3 odd %. Axis Bank today seeing profit booking down by about 1.3%. Ultratech down 1.2% as well. HCL Tech, Infosys continues to be under pressure, down both by a %. HUL, just 2 days ahead of its earnings, seeing a downtick around 0.7 odd %. But on the flip side, you have Coal India doing very well on the back of earnings, up 4%. Followed by Adani Enterprises, which is also up 3%. ONGC, GRSE, Tata Steel are some of the names which are up in that range of 2% each. Let's pull up the Bank Nifty and see as to what it's looking like in trade today. Not mirroring the benchmarks for sure, down by about 0.3 odd %, hovering around the 56,000 levels for the Bank Nifty. Let's quickly pull up the sectoral heat map to see as to how sectors are doing at this moment. And you have metals still shining in trade, up 1.4%, followed by oil and gas up almost 1%. Energy, defense also doing fairly well. But PSU banks taking a knock today, down 1.1%, and realty also seeing some profit booking coming in. But let's pull up the advanced decline ratio, because overall the broader end of spectrum right now is doing better. At least the small cap 250 is doing better than what the benchmarks are doing. But 1500 advances, Puneet, versus 1000 odd declines, but slightly the gap is narrowing as we speak. So that's of course for the broad end of spectrum, but what are you picking up?
Well, most certainly, and I think a slight bit of sting has been taken out of the market because of what we are seeing on the ECL norms. So you're seeing the PSU banking index that Brunt as Mahima highlighted, but also there is a clutch of names like Canara Bank amongst others, and hence you're not seeing that part of the index supporting, and you're seeing all those PSU banking index stocks down in trade today because of that. In the broader end of the spectrum, 1500 to 1000 stocks currently. So you could go either way at this point of time. The mid cap and the small cap too have been reflecting what we are seeing in the advanced decline ratio, because while their index has been supportive, it's up almost 0.2%. Small cap also up on 0.5% at this point of time, but the individual names visible in the BSE 500 also talk about the same, because you've seen Cohance Life up another 16%, stock was up, locked in upper circuit of 20%, so 36% move in just the last 2 days because of an appointment of the new CEO, Mr. Umang Vora. He was the ex-CEO and MD of Cipla. Led the transformation over the last decade or so, and that's visible in the stock price today. KNR Construction up 6.7%. Tamil Nadu Mercantile Bank up 5.7% on the back of results. So is Nippon Life, City Union Bank as well. And on the losing end though, Tanla seeing some pullback after yesterday's stellar move in terms of the results. And Rossari Biotech up 5.6%. Again, a result reaction there as well. But at this point of time of the show, let me welcome in Astha Jain, Senior Research Analyst at Hem Securities, on the fundamentals, as well as Sachin Janardhan, AVP Derivative Research at AVP Derivative Retail Research as well. But both of you, thanks so much for joining in. Let me go across and take the first query now. It's on ICICI Bank. A viewer, Suman from Kolkata, holds 33 shares at 1345, asking if we should continue to stay invested or switch out to something like City Union Bank or Karur Vyasya Bank. Astha, very good morning to you. We've seen that the ECL norms largely impacting the PSU banking index, but within this, would you continue to prefer, for Suman to hold ICICI Bank or switch to those couple of mid-cap names?
Hi, good morning to everyone. See, talking about ICICI Bank, I think there is a scope for more upside for this stock to move. Yes, we believe that ICICI Bank is a counter which one should remain invested in. Now, if I talk about the fundamentals also, what we have seen in the fundamental, first of all, their Q4 FY26 earnings were the stellar earnings, and that was ahead of the expectations. Point which we like about the earnings is the asset quality, which was at the multi-year best levels, and in fact their profitability, everything has shown a strong growth. Also, if I talk about the PAT, it has shown a growth of around 8% Y-on-Y basis. I'm talking about your Q4 to FY26 number. In fact, their asset quality was best, so definitely NNPA and GNP ratios has shown a improvement. And the most important point for any bank is its loan growth. And if I talk about the loan growth also, loan growth was very, very strong. It was at around 16%, if I'm not wrong with my figures. So overall, I think ICICI Bank is also well placed at this point of a time. So there is no need to switch from ICICI Bank and go into City Union Bank, etc. Although City Union Bank has posted a stellar set of numbers also, but I think one should remain invested in the ICICI Bank. However, City Union Bank is also looking good to us with a price target of more than 300 at this level. So if anyone wants to make a fresh entry, then it is recommended for City Union Bank. But switching from ICICI Bank to City Union Bank, I think is a bit early.
Okay, all right. So that's the view coming in on City Union Bank. The next one is on SBI Cards. Our viewer Abhishek wants to know whether he can continue to hold after the earnings it's posted. He's saying he's holding 500 shares bought at the levels of 675. Asta, I'll stick with you for this one. He's sitting on a loss for around 5,000 rupees. What would you recommend on SBI Cards?
What we have seen in the SBI card is that, yes, we have seen jump in their profitability. But in fact, what we have seen is that apart from the profitability, also there were other line of items which were not looking so strong. In fact, their expenses have also shown a jump. So my idea here is SBI card is a slow mover. On the basis of the earnings, I believe that it will take some more time to get, some more upward momentum from here. So right now, it's better to stay invested in this counter, but yes, it will be a slow mover, and I think on the basis of the earning, it will not rise faster. So be patient and keep holding this counter for the longer term perspective.
Sachin, just a quick, one on SBI cards as well has been a rank underperformance since IPO. On the charts too, is there any upward momentum from here?
SBI card currently is into a downtrend and making a lower high, lower low pattern basically. If it is not holding at today's low, which is we can say round figure 650, if that is broken, one should exit basically, and we can see lower levels of 600 and 550 levels on the downside.
Got that view, Sachin. But let me also take the next query on MTAR Tech, and this one has been bought at 1844 by Pramit, who's from Pune. Now his question largely being, should he continue to hold this particular counter now that it's crossed 5,000 rupees? So he's almost tripled his money in this particular point of time, and he can hold Asta for the next 2 to 3 years. Should he do that according to you? It's been giving good returns to Pramit at this point of time.
That this counter is well placed to move till the level of 6,000 and above. So, I mean, if here it is a long-term call, then definitely I would suggest him to continue with the present holdings. There is no need to book out the profit, although the profit if he will be booking out the profit, then definitely those profits will be higher. If I talk about the fundamentals also, what the kind of deal expansion with this company is doing, it is really, really very positive for the company. And I believe that going ahead also, the kind of numbers it will be showing, because on the basis of the deal because they have earned some orders from the Bloom, etc. So definitely these orders will help company posting a very good set of numbers, especially the incremental revenue will going to be very, very high. So my idea here is that this stock is such a stock which is well poised to move till the level of 6,000 also. So if there is no hurry to book out profit, then definitely one should remain invested in. However, maybe around 25% of the quantity can be booked as a profit, but it is up to the investor. If the horizon is long term, remain invested.
Okay, all right. So that's the view coming in on MTAR Tech. The next one that we have is on Bajaj Housing Finance. Shivani from Mumbai has purchased 213 shares at the levels of 106 per share. What's the next target for this one? She's also asking if she can add more or average at the current level. Sachin, your view on Bajaj Housing Finance?
So, today, from last 5 to 6 sessions, the stock is actually getting a resistance near the 100-day moving averages. Overall, the trend for the stock is down, continuously making lower high, lower low pattern. From last 1 to 2 months, it is actually trading into a U bottom formation, and the trend will be up only above 100 levels. So a close above 100 will change the trend. Till the 10, it will the stock, every stock, the bounce will be sell on rise only. So the level which one needs to keep on watch is 85 levels. If it is closing below 85 levels, one should exit. As we see downside levels below, it can touch 70 and 60 levels also.
Got the view, Sachin. Stock actually hit 72 as a low, what you see in the latest round of correction in March, and has recovered since then, largely being flattish after reporting results yesterday as well. But let's go across, take our first caller for today from Delhi. Gautam has a stock query for us. Gautam, very good morning to you. What's your query?
Hey, hi, good morning. It's about CAMS. I'd like the question to be directed to the technical expert. It hasn't moved much in the last 1.5 years. I'd like to know the short and medium term, structure for the stock. I'd like to know if there's any upside.
Got that question, Gautam. Sachin, what's your view on CAMS? As Gautam rightly highlighted, hasn't moved too much in this time frame. Any upward momentum from here, or is it likely to be sideways?
The stock actually is in a process of changing the trend from down to up. So we should give some time to change that. At least more 1.5 months it will take to do that. And if it is trading above 800 levels and above at least for 1 to 1.5 months, then we can see a good recovery and we can see the all-time high levels as well. So he can hold basically, there is no problem. The low of 600 level, basically round figure 600, that can be the basically ultimate stop loss for long-term investors as well, or short to medium term as well. And he must hold the stock because we are seeing some kind of positive changes in the stock on a technical front.
Okay, so that's the view coming on CAMS. The next one is on PB Fintech. Sopa from Bengaluru is holding 10 shares, bought at the levels of 1720, sitting on a loss of around 455 rupees per share is what she's, overall loss of around 455 rupees. Wants to know if she can book losses or wait for an upward move on this one. Sachin, your view on the charts on PB Fintech?
So on a monthly time frame, what we have seen right now, the IPO high of 1470 was retested from last 2 months, and current month we have seen the low of 1390 and a sharp bounce back of 17%. So the candlestick pattern which currently it is making is a morning star pattern on a monthly time frame. Basically, on a one should hold the stock with a stop loss of 1350. And we can see the all-time high levels of 2200 and above.
Got that view, Sachin. But let's go across, take the next query now. And Astha, this one's directed to you from Anil. His question largely being, if it's the right time to buy into Cochin Shipyard, would you recommend that?
See, Cochin Shipyard is looking good to us, and yes, we have recommended it to our clients also in the past few days. So yes, Cochin Shipyard is looking good to us. Now, whether it is a investment which should be a lump sum one or in the installment, that need to be seen. So idea here is start accumulating or start doing some sort of staggered buying into this counter. But yes, Cochin Shipyard is looking good to us on the basis of the kind of industry tailwind this company is enjoying. And going ahead, we believe that the numbers will definitely be on the higher side on the basis of the margin expansion which this company will be doing on the basis of order wins. So yes, Cochin Shipyard is looking good to us. One should start investing in this counter in a staggered manner.
Okay, all right. The next one, I think we've got a caller. Anita is calling us from Bengaluru. Anita, very good morning to you. What's your query about?
Yeah, very good morning to you, ma'am, and all of you. I'm having a transformers and rectifier stock, 300 average of 900 quantity. So I want to know what's the point to sell? Shall I hold or sell?
What is the time period that you're looking at, Anita?
Yeah, like short term only, ma'am.
Okay, all right. Then I'll go to Sachin. Sachin, your view on transformers and rectifiers on the charts. She's sitting on profits right now. Should she book them? Wait. What should be the view?
The best strategy for the stock is right now, she should trail stop loss towards 325 levels. If that level is hit, she can exit. Till the time she can hold. Above 360, we are looking for a breakout basically. So that is the reason I'm telling that. So basically, she can hold.
Got that view, Sachin. But taking the next question now, and this one's on Safari, bought at 1568, and asking a long-term viewer. A long-term view is what Vedant is. Astha, from I think it's the stock's down almost 41% from its highs back in November, and largely being in a weakish sentiment in terms of earning stock momentum as well. Would you recommend Vedant to exit and maybe look at some other options?
So what I believe that this company is looking for raising funds also. And yes, we believe that the fundamentals are not in a very, very good shape for this company. So of course, we believe that going ahead also, it will take more time for this counter to, join the northward rally. So yes, one should either exit if it is a long-term, if it is a short-term view, not a long-term one, then definitely one should exit because this counter will gain some momentum only in the long term, not in the shorter term.
Okay. All right. The next one that we have is on Lumax Industries. V. Murli from Bengaluru is holding 100 shares at the levels of 5380. Wants to know if we can add more from a perspective of 6 months, maybe average at the current levels. Sachin, your view on this one?
Overall trend on the daily is somewhat confusing. Basically, the bias will be positive only, but averaging the stock, like we don't see any kind of a momentum right now, so it will be hard to do that. But she can hold basically, and the trend on a weekly and monthly is strong. So do not average, but you can hold.
Okay, all right. So that's the view coming on Lumax Industries. The next one, in fact, that we have is on Cohance Life Sciences. Now, this stock has been flying in trade in the past 2 sessions now on the back of Ciplas Umang Vora joining the company. Our viewer has 75 stocks bought at the levels of 429. Wants to know if we can go ahead and buy more He says he's willing to hold this for the next 12 months. Astha, your view on this entire development? Yesterday it was locked in upper circuit. Today it's seeing gains about 15% as we speak. Overall, should he continue to hold this for the next 12 months?
Yes, because I think FY27 will be the year for this company where they will definitely show very, very strong set of a number on the basis of the product mix. Because what we all know that first of all, in fact, right now also 51% of the sales is coming from the CDMO business. And going ahead also, we believe that the margin expansion will be there, especially on the EBITDA front, on the basis of the amalgamated business which this company has done. And going ahead, definitely that will going to drive the revenue because 49% of the sales is coming from their side. Now, these all are fundamental, but on the basis of the news also, what we believe, definitely markets are liking. But the stock has already shown a run up in last 2 days of around 30% or more. So it's better to wait for some more time, let the stock cool down, and then make any sort of an entry rather than entering at a present point of time. So only idea here is wait for some dips to come and then enter into this counter because it has already seen the run up of more than 30%, I suppose, in last 2 days.
Okay, all right. So that's the view coming in on Cohance Life Sciences. But viewers, it's time to look at the F&O space, and we have Sharad joining by as always to give us a perspective on that. Sharad, the expiry on the cards today for sure, but what are the initial cues indicating?
Well, thanks a lot for that. Yes, it's a very important day. We'll see a lot of rollover data also for both bank, for all the indices. But let's just have a look of how things are panning out. Earlier in the day, we had seen it was even Stevens, but now it seems greens are more than the reds. Of course, HDFC Bank is also in the green. ICICI Bank trying to make an attempt over here. So definitely BankX is trying to hold up, and some reversals are at play as well. Reliance, if you look at it, that stock is also up 1%. But what's not working is Eternal ahead of the earnings. Stock is down 3%, and Ultratech, HCL Tech and Axis Bank also falling more than 1%. But it's a largely stock pickers or stock specific market. Let's pull out the long build up to see the stars. Of course, our dividend buzz was there earlier, but of course, announcement was not there. But still, now we're seeing a good buying happening in certain levels are almost 3.5%. It's up. Let's look at the short covering candidates, and this includes actually there's a short build up. Sorry, this is for Eternal. The stock is down almost 3%. Canara Bank, also most of the PSU banks seeing sell off after the ECL norms were passed by RBI. Apart from this, the long unwinding names include Zydus Life and Union Bank. And of course, lastly, I would like to point out the short covering candidates if we have that. And these are the important stocks. We do not have that. Okay, we have that, and we are having Oil India. The stock is down up 3%, but Nippon Life, look at the numbers. Very strong set of numbers, and market share gains have been there, and the stock is up more than 5.5%. So these are the stocks which should be on your radar in the F&O space.
Got that view. Thanks so much for that, Sharad. Nippon Life, definitely one of the key stocks buzzing in trade today on the back of strong quarterly earnings. Let's go across, take the next question from Bharat. He's holding Cartrade Tech at almost 1,750 rupees per share, and he's holding 500 shares. Now, his question largely being, Astha, should he continue to hold for the long term? Now, it's seen a massive correction, Astha, from the highs. What would be your recommendation now on Cartrade?
If I talk about Cartrade, it was not able to, show some sort of momentum even after listing. It was a very, poor listing, I should say, for this counter. What was not working with this counter is the kind of continuous, financial figures which this company is posting, or the quarterly number which this company is posting, which were not very, very, very strong. I believe afterwards it definitely seen some sort of a momentum, but initially it was not. Here, my idea here is just not to make any sort of fresh entry first of all, and if anyone wants to exit, just exit after watching the results. So here, just wait for the numbers to come in and then make any sort of decision regarding the exiting this counter, but I'm not recommending any sort of fresh entry to this counter at this moment of time.
Got that view, Astha, but let's go across, take another caller now from Bengaluru, and Prashant has a stock query for us. Prashant, good morning, welcome to Ask Profit. What's your query?
Good morning. So my question is on Dixon. I'm currently holding 5 units of Dixon at 10,844 level. And I want to know from charts, I want to add more. So I want to know from charts what could be the next entry point that I can buy. So can I buy at the current level, or what are the charts saying on Dixon?
Got that view, Prashant. Actually, because there have been the stock largely being driven a lot by fundamentals also, so I'll get you the technical view as well. But Astha, very quickly, first on Dixon Tech, because we've not yet received the approval, right, for Dixon Tech, the approval for Vivo JV yet. Now, the company had already mentioned they'll take roughly 45 to 60 days once they get the approval to ramp up. So, what's your view on the stock now? Do you feel that investors should watch out for Q4, probably look at the commentary on Vivo JV and then take a call?
I believe, yes, although we can see some sort of near-term challenges for this company, but if I look after the long-term still looks to be very, very positive for this company. And hence, because we know that there are certain issues which might affect the volume of the smartphone, product for this company. But especially if I talk about the low, mid and range smartphones. But overall, what we believe that the company will be able to cope up with this volume, and hence we believe maybe in the short term we might see some sort of challenges on the basis of the news, on the basis of the volume front. But in the long term, definitely it will be a counter which should be looked upon, and hence there is no need to exit from this counter or booking any sort of profits. Just stay invested in this counter at least for coming 1 to 2 months.
Okay, all right. So that's the view coming in on Dixon Tech. The next one that we have is on Eternal. Shankar from Tuticorin is asking, he's holding 2,500 shares of Eternal. What are the levels of 257? Wants to know if you can continue to hold, exit. As of today is when they post their Q4 earnings, of course. But overall, your view on the fundamentals of Eternal?
Overall view is positive on the basis of the fundamentals, because in the last numbers, because I can just take the right now the last figures which they have posted were on the stronger lines. So the last numbers were good, and what we believe that yes, the kind of inventory model which they have moved to definitely is helping them. And in fact, the food delivery business was also very, very strong because it was ahead of the expectations of the market. So overall, we believe that this quarter number will be also very strong, and we are positive on this counter, recommending to hold this counter.
Okay, all right. So that's the view coming on Eternal. But viewers, time to slip into a very, very short break. But more queries will be answered on the other side. So do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now.
Welcome back. You're watching Ask Profit. For all those who are wondering that we did not take the first rapid fire round, we are taking it now. And to take that forward as well, we on this side of the show we are joined by Rajesh Palavi, of the SVP Technical and Derivative Research at Axis Securities, joining us now. Good morning to you, Rajesh. I'll start by taking the rapid fire round with both you and Astha as well. So try to keep your answers as short as possible. The first one is coming in on GAIL. Our viewer Mohit has bought at the levels of 145 is what he's saying. Targets that he should expect from a short-term perspective on this one, Rajesh?
But there is a breakout on the weekly chart, so I think hold the position. Upside target we could see around 175, 180.
Irida bought at 125 by Soumya from Bengaluru. Rajesh holding 50 shares. Should she continue to hold or exit this counter now?
I think she can trail the stop loss now further higher to 133. Possible target 145 to 148.
Okay, the next one is on IRCTC. Guneet from Mumbai wants to know that it's down a lot, almost 60% from its high point. Is this the right time to enter from a long-term perspective, Astha?
I think IRCTC is well placed right now to make some sort of an entry. Yes, one can do, but at the lower level of around 535 to 530 with a price target of 580 to 600.
Okay.
Ramesh from Bangalore holds Restaurant Brands Asia, which operates Burger King in India. Now he's holding shares at 78. What would you recommend here? Astha is in a loss. Should he exit?
No, not right now. Just stay invested in this counter. I think he will definitely going to see the cost price in time to come.
Okay, data patterns bought at the levels of 2915, 17 shares. Hold or book profits, Rajesh?
I think continue to hold this stock, outperforming stock from this segment. Trail stop loss at 3,800 and possible target is 4,300, 4,400.
Okay.
A.K. Balla is holding Cantabile at 254, Rajesh. He's bought 2,500 shares and asking what he should do with this counter now.
I think try to exit in the pullback towards 265, 270 is the major supply zone. So I think try to exit in pullback.
NMDC bought at the levels of 84, sitting on significant profits. Should I book full profits or wait for higher levels, Rajesh?
I think metal sector is doing good and NMDC is outperforming stock. Hold the position with trailing stop loss of 83. Possible up move can be there towards 105.
Satyan is holding on to Castrol here, Astha, at 216 and holding for the last 2 years. His question largely being what should his strategy be? It has a good dividend yield, but what's your view now?
He's into the losses just on the basis of the stock price, but my idea here is to stay invested because definitely he'll see break even in the coming days.
The Premier Energies 129 shares bought at the levels of 800. Sell or wait from long-term perspective, Astha?
Wait is our recommendation for this counter with a price target of 1100 to 1150.
Ansh has bought into Avantel at 153. He's holding 3,000 shares, Rajesh, and asking a 3 to 6 month view on the stock.
Stock is struggling to cross supply zone of 162. If any breakout comes, then possible extension of rally towards 175, 180. But in 3 month time, I think closely watch this level. But at this juncture, follow the stop loss of 148.
Okay, is this the right time to buy Anantraj from a short-term perspective of 6 months, Rajesh?
I think yes, one can buy. On the downside, 470 needs to keep as a stop loss. Breakout above 520 can take stock further higher to 580.
Gayatri from Palakkad wants to know about Cohance. It's arguably been the stock of the day over the last 2 days. Rajesh, is the up move, while very short term, it's just started yesterday. What's your view on the stock now?
So stock has already rallied around 65% in this month itself. If any cool-off action comes around 480, 475 zone, then it would be a right level to re-enter in this counter. Overall, looks positive for near-term to short-term, but buy and decline.
Okay, all right. So that brings us, of course, to the end of this rapid fire round. Cohen's now seeing gains about 60. I think just 5 minutes or 10 minutes back we talked about the counter, and it was up 15% and now up almost 16.6%.
So I think it's going back to those levels that we saw yesterday as well. But most certainly a big re-rating candidate there in terms of what one fundamental move can do, at least for a stock like Cohen's. It was down 68% before this move started, but definitely one of the key stocks as well. But let's get back to your stock related queries now as well, and let's go to the next question coming in now. It's on Paytm. Now Sanjay, who's from Mumbai, is holding shares at 670, and he's bought 100 shares of this counter. So he's almost in gains of 80 to 90% from that price. Asta, yesterday's move largely on one of cancellation on one of his licenses was already priced in, but we still saw a negative reaction yesterday. What's your view on the stock now? Should Sanjay continue to hold?
Invested in this counter for the coming 1 or 2 months at least, because here we believe that on the basis of the fundamental, this stock can move till the level of 1180 to 1200. These are some of the short-term targets which we are assigning on this counter, because what we believe that yes, the news flow which came in yesterday was definitely negative, but as you have rightly pointed out, it was already priced in by the markets, and hence not a very significant movement we are expected on the basis of this negative news, and stock will definitely go on the upward direction in the coming days. So stay invested in this counter.
Okay, Vatek Vabak is the next one. Our viewer Sanjay from Ahmedabad has bought 50 shares at the levels of 1502. Wants to know the short-term targets on this particular counter. Rajesh, your view on the charts for Vatek Vabak?
So stock has attracted, sustained buying action. This is the 5th consecutive week where stock is making higher high-low formation, and looking at the breakout on the weekly as well as on the monthly chart, we believe that, till stock is trading above 1510 mark, I think the potential upside we could see towards 1650, even 1700. So I think one can hold the position. If you have bought at lower level, trail the stop loss at 1510.
Got that view, Rajesh. The next one coming in now on Aarti Industries. Now, the whole chemical space actually has been focused based on what we've seen certain product price increases, and that's benefited certain companies like Deepak Nitrite. But our viewer here, Sunny, is holding shares of Aarti Industries. Not been too much of a beneficiary in that sense as of yet. He's holding shares at 503. Astha holding 800 shares and asking what could he expect for the next year or so. Now, with what we've seen in other companies specifically, might not be replicable to each and every chemical company here, Asta, but do you think the momentum could change from here?
Yes, first of all, because the results will be coming on the 4th of May. So I think first of all, my main point is that just wait for the results to come in, because it is hardly few days left for that. So there is no need to exit from this counter in such a hurry. Now, what we know about the Aarti industry is that it is a global manufacturer of the specialty chemicals, and now they have started entering into multi-year supply agreement with the various companies. And in fact, in the recent arrangement, also one of the top global agrochemical company by the name of the Innovator, if I'm right with the name, definitely they have entered into the agreement. So with this kind of arrangement with the company is doing, and with the kind of the industry tailwind which this company is enjoying, definitely it makes a case for holding this counter at this point of a time, and wait for the numbers at least, which will going to be announced on the 4th of May.
Okay, all right. So that's the view coming in on Aarti Industries, of course. The next one is on Kalyan Jewellers. Madanlal Shroff is asking a question on this, and he wishes to buy Kalyan Jewellers at the current levels. Is it feasible to buy at the current levels, Rajesh?
So after a strong rally in last month, stock is now, consolidating at 20-day, 50-day moving average support area. 400 is the important level to watch for near-term to short-term perspective. If it continues to hold above 400 level, we may see some buying interest to come in this counter. And once stock manages to surpass 435, then we could see, stock to extend gain towards 465, 470 kind of zone. But if you want to buy here, keep stop loss of 400.
Got that view, Rajesh. The next question coming in now, it's on a kind of like a recent listing on Excel Soft, and our viewer Bhavani from Bangalore is holding shares at 95. Let's pull Excel Soft up on screen now. And his question largely being, what can he expect here, Astha, from this particular counter in the near term? And largely, if he can continue to hold this for the long term is what his question is. What would you recommend? Astha, recent listing, but has been in a sideways momentum.
Because what happens with the listing, I think the markets at that point of a time when the Excel Soft got listed, markets were not very much excited about the IT space. This was the major reason that we have not seen a very, very strong listing from this counter. Its issue price, which I remember correctly, was somewhere at around 120. So still, it is trading lower at the issue price of 120. It was the last year listing of the November 25. Now, if I talk about the fundamentals, basically, when this IPO got listed, it listed at a price to earning multiple of 30. So at that time, it was looking to be on the higher side, keeping in mind that IT stocks were not very, very much liked by the street. Now, this is a global SaaS company, and basically what their focus is on the learning and the assessment market. I believe that this market is well poised to show strong growth from here, but still we need to see how this company is going to maintain its relationship, because majorly this is business is such which depends on its relationship with the global clients. So right now, idea here is just to stay invested in this counter. Although this is going below, it's trading below it is IPO price of 120, but still I believe that going ahead in the coming 3 to 6 months, it will show its IPO price of around 120 and move till those levels.
Okay, all right. So that's the view coming on Axel Softtech. But we've got our next caller. I think Anjali is calling us from Vijayawada. Anjali, a very good morning to you. What's your query about?
Yeah, very good morning to all of you and you, ma'am. So I'm having
Go ahead, Anjali. I can hear you.
Okay, ma'am. So I'm having one share, just wanted to know it's a short term or long term.
Okay, so I believe you have Shriram Finance 800 quantity bought at the levels of 950, correct?
Yes, ma'am. Yes,
okay, got your query. I'll take this up with Astha, especially since yesterday's earnings move with brokerages cutting its estimates, plus the street probably kind of waiting for how the execution of MUFG takes place, and how once it acquires, how growth will take place going forward. Probably that's the cautious stance that the street has taken on this counter right now. Your view on Shriram Finance?
But if I talk about the Shriram Finance book, then definitely they are having a healthy book accretion. Here I'm talking about the loan book, and definitely what we believe that the asset quality is a very stable one in this space. And they will be going to enjoy the tailwinds from the cost funding side. So definitely all these points mainly pointing out right now here is that one should remain invested in this counter. In the short term, maybe it will take some knock, because what happened that this stock has already seen jump in the past few months. So definitely in the short term, it might see some sort of, cautious moves maybe on the downside. But in the long term, it is a good story to bet upon in the NBFC space, because we still believe that going ahead, their growth outlook is very, very positive, especially for coming 2 years. So remain invested in this counter, and in the long term, it can move till the level of 1100.
Got that view, Astha. The next question coming in now, this one's from Gaurav Baheti from Telangana. Now his question on Nitin Spinners holding shares at 438, and he's holding 23 shares. Rajesh, a quick view. What do you see on Nitin Spinners on the charts?
So I think after a long consolidation, stock managed to be breakout of a long consolidation range, and looking at the monthly weekly chart, stock is now approaching almost its all-time high trajectory. On the near-term structure, 435, 440 is the important level now. If it continues to hold above this level, possible rally towards 475, even 490 we may see for this counter. So trail stop loss at 435 and hold the position.
Okay, all right. So that's the view coming in on Nitin Spinners. Piramal Finance is the other one that's in focus. Strong Q4 numbers, of course, and overall strong finish to FY26 as well. The stock is seeing gains of about 8.5%. Growth in terms of, growth book accounts for almost 97% of their AUM, which saw growth of around 33% year-on-year basis. Overall, in terms of, the profitable growth also, there is a clean runway. Management has reiterated its medium-term roadmap for scaling AUM to almost 1.5 trillion by FY28. In fact, my colleague Piyush spoke to Jairam Sridharan, who's the MD and CEO of Piramal Finance. Listen to that conversation.
I want to first begin with your profit has jumped quite sharply to around 502 crore in the reporting quarter. What were the drivers of this higher profit? Because in percentage term, it's around 390% jump that we have seen. If you could give us some color on the growth that you have seen in your bottom line.
Yes, Piyush. See, last year, fourth quarter, we had a profit of little over 100 crores. This year, we had a tad over 500 crores as profit. So as you can see, there's almost a 400% jump over last year. This is on a consolidated basis. So two big things have happened. If you look at our book is comprised of a small proportion, which is our old legacy business, the business which we are running down, and a large part of it is the new so-called growth business. The growth business is right now about 97% of our overall portfolio. And that business has grown strongly in profitability, and it has also become a bigger part of our business. And so that business has grown by 33% year on year from an AUM perspective, and profitability ratio has also improved by about 30 basis points there. So that's one big part of why the profits have grown. But the other important element as well is that our old legacy business, which by end of last year was about 7,000 crores, has now fallen below 3,000 crores. And that part of the business is an unprofitable business. So when that unprofitable part goes away, then the rest of the business's profitability really comes into its own. So that's what you're seeing right now. Both those factors, an unprofitable business becoming very small and the profitable business becoming even more profitable and growing very strongly. Those two dynamics together have resulted in this outcome where 100 crore profit last fourth quarter has translated into a 500 crore profit this year.
Exactly. I wanted to actually ask you about the legacy book, like you mentioned, has come down to 3% of AUM. When do you expect it to run down completely? And one more query is on the wholesale and retail mix. It's in favor of retail 85% as of now. In FY27, will the proportion tilt further towards retail? What would be the wholesale and retail mix of your AUM?
Yeah. So on the legacy business, this business used to be 95% plus of our portfolio about 4 or 5 years ago. It is now down to less than 3% of our portfolio. So most of the cleanup and getting rid of that old unprofitable book is now pretty much done. Sometime during the course of this year, that it will become less than 1% and it will become immaterial. So that should happen during FY27 itself. So we are very, very close to the very end. And once that happens, we will stop talking about it as a separate unit, because at less than 1%, it becomes completely immaterial, right? So that should happen sometime during the course of this year. As far as retail versus wholesale is concerned, we've reached about 85% retail. We have always said that we want to be 80 to 85% retail and the rest wholesale. We are now at the top end of what we are comfortable with. In the short run, you might see retail outscore and become a little bit larger even than where it is right now. But eventually, it will probably come back to about these levels. So about 80 to 85% is what our comfort zone is. That's basically where you should expect retail to be in the long run as well.
Okay, I wanted to understand your borrowings. They stood at around 79,945 crore, which was up around 22% odd percent year on year. For FY27, so what is your borrowing plans for the full year?
See, we expect to borrow about 30,000 crores during the course of this year. And so our overall borrowing stack will probably cross 1 lakh crores by October, November-ish. So we have fairly large borrowing plans, in short. Right now, when you look at our sort of sources of borrowing, we borrow from banks. Domestically, we borrow from the domestic debt capital markets. We borrow from the international markets in the form of ECB loans and ECB bonds. We borrow from multilaterals, and we borrow from insurance and pension companies, etc. Those are the various sources. We will continue to borrow across a wide diversity of sources. At one point of time, Piyush, about 60%, a little over 60% of our borrowing used to come from banks. You will notice that this quarter, we have ended with bank borrowing at less than 45% of our overall borrowing stack. So our reliance on banks has been reducing as we rely more and more on market sources. That's what we hope to do this year as well.
Well, that was the management of Piramal Finance. Definitely the stock flying in trade today on the back of quarterly results, up 9.2% now as we speak. But take across the next question. This is Vivek from Chennai, and his question is on Servotech. It's asking if it's a good time to enter and what's the long-term prospect. Astha, we've seen been a very volatile counter, seen a recovery in the last 3 months in this year itself, but still down almost 20% in the last 1 year. What's your view on the stock now?
Sorry, we don't track this counter, so I'm not able to comment on it.
Anything on the charts, Rajesh, that give you any view? I know it's a very, very volatile counter, but any view?
So Servotech managed to surpass its previous swing high, which was formed in the Feb 2026. And looking at the near-term, short-term structure, strength is there. Almost this is the 5th consecutive week where stock is registering gain. Higher high-low formation is taking place. So one needs to hold with a stop loss of 89. On the higher side, 105, 108 would be the next target.
Right, the next one is from Prakash, who's writing us from Bengaluru, asking about L&T Finance. It's got 1,000 shares at the levels of 290. Should I hold or exit is the question. Astha, your view from a long-term perspective?
Perspective is looking very strong on the basis of the kind of number this company has posted. Definitely one should remain invested in for the price target of 310 to 320.
Got that view, Astha. The next question now coming in. It's on Jain Irrigation. Our viewer holds shares at almost 423. Asking what's an outlook on the stock now. What would you recommend, Rajesh?
So Jain Irrigation is now negotiating with its falling trend line on the weekly chart, which is placed at around 34-35 level. So if stock manages to give breakout above 35, then we could see some upward momentum towards 38-40 kind of zone. But it's an underperforming stock. Series of lower top, lower bottom formation is already there in the prices. So wait for 35 if you want to buy. And if you're already in the trade, you should follow the stop loss of 32 rupees if you're on the long side of trade.
Okay. All right. So that's the view coming on Jain Irrigation. The next one that we have is on Canara Bank. Abdul Rashid from Kerala wants to know if this is the right time to enter from a 6 months perspective. What should be the target and stop loss on this one? Your view on the charts, Rajesh?
So overall structure for Canara Bank is on the bullish side, though there was some profit taking from higher level in recent past. But looking at the long-term structure, yes, one can buy and accumulate in this decline. 125 needs to keep as a stop loss. On the higher side, once stock manages to surpass 148 level, then I think next target on the higher side, we could project around 165 to 170 also. So buy and accumulate would be the strategy with stop loss of 125.
Got that view, Rajesh. But time now for the second round of the rapid fire in this edition of Ask Profit. Astha as well as Rajesh, keep your answers on buy, sell and hold so that we can take as many in the next 3 to 4 minutes. First question on Shipping Corporation of India. Raja holds shares at 276. Astha, what's your view on the stock now?
Price target of 315 to 320.
Okay, the next one is on PNB Housing, bought at the levels of 480. Buy, sell or hold at the current market price. Thomas wants to know, Rajesh?
I think hold. A very strong run up in last couple of weeks. Hold with stop loss of 1020. Possible target is 1100 to 1120.
Aditya Birla Mutual Fund bought at 853 by a viewer in Bangalore. What's your view, Astha? Good result. should he continue to hold?
Yes, of course, a hold is recommended from our side for Aditya Birla at this moment of time.
The Bellrise 1000 shares bought at an average price of 133. Aditya from Tamil Nadu wants to know whether to hold from a long-term perspective. Astha?
Definitely, it's a hold from the long-term perspective. The moment the IPO came afterwards, we have seen a sharp run-up. We believe that this counter may move till the level of 250 to 260.
The next question coming in now, it's on EPAC Durable, bought at 397. So he's currently sitting on a loss. Rajesh, should he average now? We've seen 2 days of good moves.
Yeah, underperforming stock, but yes, from lower level, stock has shown some recovery. Keep stop loss of 280 if you have bought at lower level. But again, on the higher side, 330 maybe act as a major supply zone, so where one should review it.
Okay, the next one is on AGI Greenpack. Bought it from a long-term perspective. Kumar from Frankfurt wants to know if we can continue to hold this counter or not, considering the aluminium crisis. Astha, your view?
Yes, AGI Greenpack is a hold from our side with a price target of 700 to 710.
Grasim bought at 725 by Sriram. Should he add more now, Astha, at this price?
Grasim is looking good to us. Add more, but maybe at the lower price of around 2800 also.
Vishal Megamart holding 500 shares at the levels of 140. Shall I hold from a slightly medium-term perspective? Rajesh, on the charts?
Yeah, yes, one can hold on the position. Stock is moving in upsloping channel, so I think 120 needs to keep as a stop loss. Possible target 135, 140.
Glenmark Pharma bought at 1800 odd levels by Neha. She's asking a 1 to 3 month view, Rajesh. Should she book out her profits now?
No, it's outperforming stock within the pack, and the way stock is attracting buying at a higher level also, I think trailing of stop loss around 20 to 80 would be the right strategy to carry the position.
Okay, BSC bought at the levels of 3300. 300 shares is what Rakesh Gupta is holding. Whether to hold, add, sell? Astha, your view?
Target of 3650 to 3700.
HPL Electric bought at 500 and is currently down from that price for a viewer. He's asking if he should average now, Astha.
The lower level, not at present moment of time, maybe at around 360 to 355.
Is it a good
Averaging
time?
is
Okay, got it. Is it a good
Stock has run up so much, so I think wait for some corrective move towards 105 or 100 level, then one can look to buy. But keep stop loss of 98, 105 or 100 level, then one can look to buy. But keep stop loss of 98 if you are buying at lower level.
Usha bought into Voltamp Transformers at 12,400, holding 49 shares, Rajesh. So she's currently at a loss, asking if she should continue to hold.
We believe that if stocks now trades above 11,000 mark, I think possible up move towards. We believe that if stocks now trades above 11,000 mark, I think possible up move towards.
Well, that's the end of the rapid fire as well as this edition of Ask Profit. Rajesh as well as Astha, thanks so much for helping us solve 55 queries in the last hour or so. We appreciate your inputs. But viewers, all the time on this edition of the show, thanks so much for watching. We will continue with the remaining set of questions at 2 p.m. in the
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices.
Hello and welcome back to KYC. I am Sharad Dubey and you are watching NDTV Profit, where we get you the hottest companies in KYC and maybe create alpha for you as well. But as per our format, I'm going to give you some hints. Try to guess the company. It's a very interesting company I have got. It's a Pune-based heavy engineering company. Of course, a lot of companies are there in this cluster, but more details about it. There's a literal township named after the company. Pretty interesting, right? I'll give you some examples also how it actually pans out, and it's backed by Ashish Kacholia. He has more than 1% stake in the company as per the March shareholding pattern, and it deals in defense, nuclear and aerospace, industrial and also industrial products. A lot of discussions about this company, and I've given you a little bit of hint. There is of course Tata Nagar is there is Bata Nagar, there is Kirloskar Wadi. An interesting company is Walchand Nagar. Yes, the company I'm focus is Walchand Nagar Industries. Everybody's talking about it recently. The stock also has been buzzing. But why are we calling this company? What is the interest of mine to get this company in KYC and decode it? First question is the structural turnaround. Is there any trigger happening from the fourth quarter? The management doesn't speak a lot. That's why we have got this company, and they had given us a little bit of hint in the Q3 numbers as well. Now, buzz in the street is that there might be a fund infusion plan as well. If yes, we'll try to understand why does the company need it. Also, the growth outlook for the defense and the aerospace business. We have spoken a lot about this. A lot of its peers have given a good rally recently. So has the company done that. Operating leverage, that is where the return ratios start turning positive. For a long time, the concern has been there. So that's something that needs to be addressed. The incremental benefits for the private players in the nuclear segment. Remember last year there was a Shanti bill in 2025 December. Company was a beneficiary of it. There was a run up. After that, of course, markets turned volatile, but then the stock price is back. But it's a perennial problem with this counter. The promoters share place, that's on the higher side. How are they reducing? That's something which becomes a very major trigger for the counter and the order book status in the fourth quarter and the outlook ahead. So these are the important questions we will be going through, and of course the capex and the expansion plans for Walchand Nagar Industries. And to put that in perspective, we'll be joined in by Chirag Doshi. He's the MD and CEO of this company, where Chirag will decode and answer all of our queries. But more queries are there, so let's understand the business, how much of this business is all about and what are the important for factors and against factors. It's a historical company. It's established in 1908. It's a heavy engineering company. The cluster area in the Pune district, that's where it's located. Of course, they have something called defense, nuclear, aerospace, DNA as they call it. That's where the focus they are lying. But of course, they have other businesses also. This includes foundries, gears, centrifugals, castings, gauges. Remember, there is a seasonality at play as well for these sectors. So that's how we are going to get these businesses in two portions. The company is also having an ace investor, Ashish Kacholia. He's having roughly 1.5% stake as well. But let's get into the details about it. You know, the company has worked with ISRO for over 50 years. So of course, they're having long-term associations with the government authorities. They have been instrumental in Chandrayaan 3. There is Aditya L1, Gaganyaan program mission. So they have been there in the space programs. And interestingly, Chirag Doshi has been reappointed recently as an MD and CEO for next 3 years as well. So this of course augurs well for the stock. They are a beneficiary of Shanti Bill, and this is definitely for the nuclear business which we spoke about in 2025, and there was this news flow coming in. But the question remains is what is working for the company? There's a potential of private player in the nuclear space. We'll try to understand from the management as well. The second reason what's working for the company is a high retail interest coming in. That is where a lot of conversation is happening. Improvement in working capital ratios, that has improved. At least we have seen that in the third quarter. Hopefully fourth quarter we'll say something. And there's another buzz in the street of a fundraise for Walchand Nagar Industries. So that's what's working for the company. But what's not working for the company, that's also a big concern. There's a cyclical nature of the key business segments. I'm not talking about the DNA segment. I'm talking about the foundry segment where the numbers have been impacted. Higher promoter pledge, that remains a big concern for this company. And also, no major participation is coming from FISDIs. There's a lack of analyst coverage as well, and that is where the question or the concern rises. And the biggest one is the weak return ratios. They have been plaguing the companies until as the ROE, the ROC doesn't improve. There seems a concern, and another concern is definitely the valuations. They are also expensive. So we have given you the entire picture of what's working for the company and what's not working for the company. Another important number or the ratios we talk about is the KYC ratings. Let's see what are the ratings we are going to give the company. It's going to be income statement, balance sheet, cash flow. These are the important numbers to look at when we judge a company in KYC. Key operational ratios, because I've taken a couple of ratios, just not the return ratios, to give you an entire picture about how the company is functioning. Shareholding, street cred, कितना पैसा बना 5 साल में या मार्च के लो से कैसे पैसे आया. We'll try to get you all those details and the valuations. We'll try to see how things are panned out at least in that 5-year period. And last but not the least is the outlook segment. So these are the 8 ratings where we'll judge the company. But let's take you to the first parameter, and that's the income statement. And this is where we see there is a downtick coming in a little bit, and these are, remember, losses which I'm talking about. The red numbers you can see, these are the losses, which is the downtick which is happening. Top line we see there is a kind of a moderation happening from FY24 to FY25. There is a seasonality at play. But largely we see net there is no stability as such when it comes to the numbers. That's why the CAGR numbers are purposefully removed. But the Q3 numbers is something which I like. There was a little bit of turnaround. Some margins are also did come in, and that is where the management was showing a good strength over here. See, over here it has been in the negative. But look at that, the 19% up move coming in, and slowly the company is showing operational profits. And when these situations happen, that is where we get the maximum alpha. When things are from very bad to bad, that is where the stock starts moving, and that's why I'm going to give you that reason. But net right now, income statement, it's a neutral rating when it comes to Walchand Nagar Industries. Let's talk about the balance sheet. It's been decently maintained. The borrowings have actually come down from around 241 odd crore rupees. It's down to 193 crore rupees. Working capital ratios have improved, and so has the balance sheet ratios, and it's evenly placed. I would say 109 crores of cash balance is also there, and net the management is strong when it comes to the balance sheet. So it's a strong thumbs up when it comes to the balance sheet. So we spoke about the income statement, we spoke about the balance sheet. Now let's take it to the third one. That is the cash flow statement, and that is where a little bit of concern starts coming in, because their cash outflows are more at times. Your PAT numbers are down, so the conversion ratio from PAT to cash flows, that becomes an issue. And if this issue pertains, then definitely the return ratios get, you could say, impacted. So cash flows, it's a negative rating or a thumbs down when it comes to our analysis. Let's talk about the operational ratios, how things are moving. There has been an improvement in the debtor days, so that's one side is positive, but the other side, which has been perennial for this stock, is the lower ROEC ratios or in the negative. That has actually spooked the street, and this has continued for a really long time. So the company's operational leverages, if they start improving, the ROE numbers also start going up. So it's a neutral rating when it comes to the key operational numbers. Let's talk about the shareholding. What has happened? A little bit of concern is that promoter stake is quite less. That's what some analysts speak about, but I wanted to get a little bit into the details. The concern is not the lower promoter stake, it is the share pledge. That needs to reduce, and that's an overhang for the stock. Another overhang is the FIs, DIs. There isn't much participation here. So unless the numbers start coming in, unless the turnaround happens visibly on the numbers, you might not see FIs and DIs, but retail, it's a favorite. That's around 67% of holding is there in the retail as well. But net, let's give this a neutral rating for shareholding, because the promoters haven't sold any stake. And it's not that, major participation from FIs or DIs have come in. So it's kind of nullifying our thesis on the shareholding part. But apart from that, let's move on to the street cred. Let's give you the picture of how much returns have been made. And overall, if you have been holding the stock for a long time, it has done well. Last 5 years, you have made almost 4 times the money, 275%. Congratulations to you. And if you look at the March lows, this is the numbers you should look at. From that level onwards also, it's up 68%. This is the rally which we saw in the defense aerospace theme as well. Last year itself, stock is up 14%. But remember, the highs which were seen in the counter, that was 2024. From there, the stock is still down 47%. So definitely concern is there, but it kind of negates our analysis. So net, it's a neutral rating when it comes to the street cred. Valuations, let's see what's happening here. And valuations is a concern for me. The 5-year average is at 63 times. Current, if you look at it, the 12 months trailing P is at 87 times right now also for Walchand. And if you look at the peak which was there, the 2024, the euphoria which was there in this industry, the stock almost had 100 times of P when it comes to the trailing P numbers. So valuations are not at all cheap, and maybe that is why it's better to stay away. At least the earnings should start coming in, then the valuations might turn cheaper. But as of now, valuations, it's a strong thumbs down. Let's talk about the outlook. Let's see what's there in the outlook. And outlook over here, the pointers are quite less. The outlook has not been shared for FY27 yet, and that's what we'll try to understand from the management. They are likely to improve from the fourth quarter, the margins front, and that is what we had seen in the con call also. Now, they're a beneficiary of the private sector entering into the nuclear segment, and that is where the interest lies for the market going ahead. And that's why I picked up this company in KYC. The structural turnaround, that's expected to happen going ahead, and the street is also talking about it. Rumors or buzz is there that there might be a potential fundraise as well. So now, net, company has very less to lose from these levels. So it's a strong thumbs up when it comes to the outlook. बट पूरा रेटिंग क्या है, वो कितने नंबर्स हैं, let's talk about them. And of course, let's give you a revision of how things are panning out. The balance sheet has been maintained nicely. Income statement Q3, their good portion has started coming in when it comes to the turnaround. Cash flow is dismal for the company. Key operational ratios are balancing each other out. While shareholding, of course, the promoter shareholding pledge is a concern. But street cred has been neutral. In the March lows itself, the stock is up more than 60%. So if you even have done a 1 month investment in stock, congratulations to you. Valuations are expensive, but outlook remains strong as well. So net, the total rating is 4 out of 8 for the company. And of course, the company needs to prove on the future. And of course, the street wants something more as well. And to put that everything in perspective, we'll have Chirag Doshi. He's the MD and CEO of Walchand Nagar Industries. And interestingly, he has been associated with the company for more than 2 decades. And a little bit of snippet about him, apart from that, is he has an education from INSEAD and Harvard Business, and he also owns and operates fine dining restaurants in New York and Mumbai as well. That's pretty much interesting. But we'll take a break and then we'll start with our conversation with the management.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
Well, we are back, and joining us is Chirag, MD and CEO at Walchand Nagar Industries. Good afternoon, Chirag. It's always a pleasure to have you at NDTV Profit. And first and foremost, the question I want to ask is, in Q3, you had given us a little bit of hints about the turnaround in the company. And the first question is, by when we can see fourth quarter? Of course, the numbers are not out. We do not need to share the numbers, but give us the flavor of the turnaround for Walchand Nagar and how it is happening.
Yeah, Sharad, thank you for having me on the call. I think I had talked about it a few months ago, and I think it's playing out exactly the way we had planned. It has been a journey for the company to sort of reach this stage, but I think we're now very much at the end of our turnaround. Q3 gave us a glimpse of where we would be headed. Obviously, the top line and bottom line numbers aren't where we achieved to be, but at least it was a positive reaction to a lot of the hard work that we've put in over the last couple of years. I think Q4 will be similar, if not in a similar vicinity. And we expect that next year onwards, we should be positive on a quarter-on-quarter basis as we sort of fulfill our expansion and growth initiatives.
Right. So just wanted to get a little bit more perspective on this growth and expansion initiatives. Chirag, if you could share with us.
Yeah, so as we've always talked about DNA being now the DNA of Walchandnagar. It's defense, nuclear, aerospace. We're fully entrenched in the nation's plan of being Atmanirbhar Bharat by 2047 in all those sectors. We've already done one fundraise in 2023-24 and built out some infrastructure that will cater to the aerospace and defense growth that will happen in at least the areas that we service, which is the missile program, all the launch vehicles, and some of the launches that we do for BrahMos and other programs. The next phase that we look at is obviously the nuclear Shanti Bill growth that will happen. I've already talked about it, I think, on this channel couple of months ago, that we are going to do another fundraise in the next 3-4 months. It will be a larger fundraise. It will go specifically to invest in a brand new nuclear manufacturing facility here in Walchandnagar. And that should take care of our contribution at a highly scalable level to India's nuclear program over the next decade, 2 decades that will be required.
Right. Just wanted to clarify that, Chirag, you had mentioned that earlier as well. So this fundraise is expected to happen in the next 3 to 4 months, and this will be for the nuclear business, right?
Yeah, mostly. I think I would say 75% of the fundraise on the capital expenditure side will go for nuclear expansion. The good thing about our business is that a lot of the machines that we invest in are very fungible and can be used for our defense requirements as well as our larger aerospace requirements. But yes, I think 70 to 75% of our capex will go specifically for nuclear and nuclear requirements.
Right. So 75 is nuclear, 2025 is for defense. Okay.
And some working capital, of
course. That would be there. Apart from that, Chirag, let's also talk about the operating leverage part. Of course, you cannot share the margins outlook for Q4, but there was a good hint that this operational leverage will play out because your margins were, going here, there, it was in the negative. Then there was a turnaround in the third quarter. A street is always concerned about the return ratios for your company. So will we see the same performance in the Q4 to put in perspective?
Yeah, I mean, look, our business can be a fairly good margin business. I think the problem we faced is over the last 3-4 years, if you look at my numbers, and I know you kind of showed some numbers earlier, the problem has been obviously our debt, right? And that's what's been eating into most of the positive margins that our defense, nuclear, and aerospace businesses have been generating. We've now brought that debt down from 400 crores to nearly, I think long-term debt is only 40 crores and the rest is just, working capital debt from the banks. That 40 crores we hope to pay off in the next 12 months. So we will be technically a long-term debt-free company. And our middle lines aren't changing because, we don't need to add too much manpower. We've maintained our manpower in the company, even at these reduced turnover levels. And so the team here and the people here are ready to sort of grow the company and it'll just keep adding to our margin numbers at the EBITDA level going forward. And then, of course, at the PAT level.
Right. So once that happens, then of course we're going to get good return ratios as well. Nicely put, from 400 to 40 crore the story. But of course, one more, a lot of investors in your company write to me that in the share pledge is a concern. So if you could give me, since your debt is also coming out with a timeline share pledge, is there a reduction timeline at play?
Yeah, sure. I mean, it's actually very clear on the share pledge. The share pledge is a hangover that came from the time when we had KKR as a structured debt provider in 2018-19. That's kind of trickled over to our, to Neo Capital, who's given us our debt today. I think as soon as that is paid off, the pledge goes away. And there may be a small pledge to the banks in the future, but as long as our credit rating improves, and we become investment grade, that goes away as well. So I suspect that the share pledge, the promoter share pledge next year will be non-existent.
Share pledge will be non-existent next year, and
as long as we pay off the debt, right? That's the most important.
Right. So both of them are, of course, interconnected for our viewers. And just to put that in perspective, accounting 101, that's what Chirag ji has explained us. But apart from this balance sheet numbers, the nuclear segment, we spoke about the Shanti bill, but right now also there's a good buzz in the street on the private players entering in, because we heard about the missiles. The DRDO spokesperson said that now a private company can do missiles, ammunitions. Now, what does Walchandnagar do? Because you have been already involved with missiles, and now a private company can do without much tie-up with a public company. So how does Walchandnagar feature in that?
So on the defense side, obviously, we will continue to supply to rocket motor casings to BDL, who will continue to probably be the largest player in the missile game. We are in 13 different missile programs. Those will all come to scale, other than Akash, which is of course already scalable, and BrahMos. We should see the next 12 to 24 months a lot of scalability on the missile side. We're not currently in a position to get into manufacturing our own missiles, but that is something we aspire to do over the next 3-4 years as a DCPP partner to the government. As far as nuclear is concerned, there's a lot of buzz. We're getting ready for all that is being announced in the country. We will continue to remain a core equipment manufacturer for the nuclear industry. We will expand our offering of what we offer currently versus what we want to do in the future. But we don't see Walchandnagar in the near future being a nuclear power producer. I think we leave that to the larger private sector companies, some of whom have made announcements in the last few weeks as well. And our idea is to just expand our offering, increase the speed with which we can deliver components to not just NPCIL and NTPC, but also then to any of the private sectors who want to, private sector players who want to get into the business of power generation. So, it's a 10-15 year game, and we are, kind of preparing today to be ready for when those orders come in, I would say in the next 12 to 18 months.
Right. And speaking of orders, what's the recent order book, third quarter, or if any addition orders have come in the fourth quarter? If you could just give us a sense of, how the order book is looking like currently.
Yeah, so I think March end or April 1st, start of this financial year, our order book has been about 600 crores. I would say executable order book over the next 18 months out of that 600 is about 400, 420. Last year was a bit of a slow year as far as order booking was concerned. We were hoping that we would have got a few government orders that were promised last year, but I think there has been a slowdown in that. But I sense it's more of a postponement rather than booking this year with Walchandnagar.
Right. So that means a large
booking this year. With Walchandnagar.
Right. So that means a large. Thank you very much, Chirag, for taking out your time and clearing a lot of doubts raised at KYC. Regarding the stock, but definitely for the next 12 odd months, the management has given a strong commentary. For interesting story, regarding the stock, but definitely for the next 12 odd months, the management has given a strong commentary. For interesting story.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the level.
Muted moves for benchmarks today, even as broader indices really outperform. PSU banks and Nifty bank really top sectoral losers today, while energy leads the gain and metals shine. PSU bank stocks under pressure after a significant overhaul to the banking regulation. The Reserve Bank of India issued 14 final directions for asset classification provisioning and income recognition for commercial banks. Oil prices edged higher as traders weighed fresh US-Iran diplomacy. Crude hovers near $109 a barrel as the Strait of Hormuz remains virtually shut. Coal India is buzzing in trade after a strong Q4 earnings beat. Profitability came in well ahead of the expectations. E-auction volumes and better average selling price boost fourth quarter numbers for the company. Brokerages remain upbeat. Adani Group and Google are doubling down on India's AI push to build India's largest AI data center campus in Visakhapatnam. This marks one of Google's biggest bets on India. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Poddar and let's take you through the markets today. Yes, sluggish moves on the market. Take a look at Nifty 50. It is trending in the red zone. In fact, in the last 1 hour of trade, it has lost almost 100 points and marginally down, 0.2% down. Let's also take a look at some of the counters which has fallen from the day's high along with the Nifty, and that's also one of the contributing factors on this fall. that is seen in last 1 hour or so. So from the Nifty 50 contributions, take a look at that particular contribution plate at the current moment, and Reliance Industries is one of the biggest gainers coming in along with Bharti Airtel, while on the downside, Eternal, ICICI Bank, Axis Bank are some of those companies which are really in the red and dragging down Nifty 50. In fact, it's Eternal which has really taken a beating from the top. All right, it's time for earnings, and Sally S. Nair, the MD and CEO of Tamil Nadu Mercantile Bank, joins in for a discussion on a very strong set of numbers coming in for the company, and that stock is also reflective. Ms. Nair, good to have you on NDTV Profit. First, to the growth drivers that really led to the strong performance coming in this particular quarter.
Of course, as you see that FY26 has been a good year, particularly the quarter four. We are trying to better our results virtually every quarter. The following quarter will be better than the previous quarter, and I think that's something that we have delivered even in quarter four. And the quarter four, as you just mentioned, is a performance that spans virtually across all parameters. Your total business has been up 17.37%, deposits 15%, and advances 20% plus. So this has come out on a very strong gold loan growth. The gold loan has been supporting us, and this is a very profitable business for us, earning us ROA in excess of 2.05%. And apart from the gold loan, which today stands at 46% of the portfolio, what has contributed to the strong growth is also the MSME. If you recall, our first quarter, we had in the early on in the year, FY26, we have been putting a lot of structural changes in place, including setting up the loan management system, the credit management centers, the relationship team to foray into the market to get those MSME business. So a lot of structural changes were put in place, and that really cost us in the first half. In fact, the first quarter we degrew, and we sort of leveled in the second quarter, and pretty much what we see in the MSME growth, 15% is what we clocked eventually for the year, and that has come in quarter two. And a strong revival of the MSME and continued growth in gold loan, and along with that, our control over the credit quality. And if you look at what the slippages that has happened during the year has more than compensated by recoveries. We had about 80 crores plus of slippages, 85 crores of slippages, and it has been compensated by recovery of 93 crores. So the result of that is the credit cost has been maintained at very low. I think practically compensated by the provision right back. So credit cost is just about 1 basis point. So, a variety of factors has contributed, and that's where we are, and at 28% growth in net profit eventually, riding on all these parameters.
So, Mr. Nair, of course, you slightly touched upon the asset quality, and your NPAs have seen a slight improvement on a quarter-on-quarter basis, and your provisioning has also increased. In terms of the control on the credit quality or the asset quality picture going forward, how would you put it, and what are those numbers that you're projecting?
Let me also, I did mention the credit cost, obviously riding on the NPA number. NPA number has at the end of the year, FY26, it stands at 0.73%. 0.73%. And the net NPA at 0.18. We practically halved the net NPA and brought down the gross NPA by about 52 basis points. Okay, so that is the headline story. But below the headline, there is another story in the making, which is the SMA. SMA of this bank is at 1.29%. When I say SMA, I'm talking about SMA 0, SMA 1, and SMA 2. Typically SMA is what eventually gets converted into NPA. So SMA continues is at 1.29%. I don't know how many banks can claim that sort of an SMA in the country. So portfolio at risk one day, that is SMA 0, 1, 2, and the NPA together is just 2.02% of our advances. So that's something I think we feel proud about. So when we look at FY27, as I mentioned earlier, SMA is what gets translated eventually into NPA at 1.29% in SMA. We are confident that FY27 also the GNPA number is going to be good. Okay, but going forward, so it's going to be well under 1%. I have no doubt about it that it's going to be well under 1% for FY27. But as we step on the accelerator for MSME, a bit of an expansion, a bit of an NPA is something that we can't wish away. But FY27, well under 1%.
All right, so that's the picture. Now, what about the profitability aspects and the net interest margins? What's the guidance there going forward?
When we look at the net interest margin, I think 4.18% is something, riding on a variety of factors, including the fact that the Reserve Bank of India also helped us with a bit of a repo cut, the 1.25% repo cut that we have seen, translating into a certain repricing of the deposits. I think cost of deposits actually came down quite significantly, 20 basis plus. But on the other side, our yield on advances held on. I think that's the reason why our net interest margin stands at where it is at 4.18. But going forward, as we look at with the inflation rising, the neutral stance coming into play, and we have to wait and see how the repo rate movement happens. But we are anticipating a hardening of the deposit cost of deposit at least by 5% or 5 basis point plus, which is going to impact in some way the net interest margin. But we are confident that we will be able to maintain the net interest margin in the 3.90 to 4% range, closer to 4%. That's on the net interest margin, and eventually translating that into the return on assets. We are hoping the return on assets would also moderate a bit. We delivered 2.05%. I think that will moderate a bit, but we are still looking at, clearly in excess of 1.90% and maybe closer to 2%. In that band, 1.9 to 2%.
All right, NIMs around 4% is what you're saying, but MSME book has been strong continuously since last half. How is the picture looking when it comes to the pipeline of MSME business for you now?
Now, as I said, if you look at the 15% growth that we delivered in the MSME is entirely more or less coming out of the quarter 3 and quarter 4, which is the half year of FY26. And I think, the changes that we have put in place, the structural changes we have put in place, the LMS is now on the ground. The phase 1 has been implemented. The credit management centers, which is centralized processing of the credit, particularly MSME and pretty much the retail, is already in the offing. It's already has already been set up, and this gives us, the ability to ramp up the MSME, particularly the MSME space in FY27. And if you are looking at the order, I think that's getting reflected, and I'm sure you're going to see a lot of action in MSME, and MSME is a story that you're going to watch for in FY27. 15%, as I said, what's delivered in FY26, it is the effort largely of the half year, and you will have to watch what's going to happen in FY27. I'm not going to give you a number, but then we will have to wait. But let me tell you that FY27 MSME is definitely going to be much better than FY26.
Your outlook is so robust when it comes to the MSME. What has been the impact of the West Asia crisis on the MSME space because of crude-led inflation?
Yeah, like I said, you're not talking to the MD of, State Bank of India or ICICI Bank or an HDFC Bank, who has to be too concerned about the macroeconomic factors, right? The portfolio is still small, and we still have a large space in between these big players to grow. So we don't see the West Asian crisis impacting us to that extent. When I look at my own portfolio, the impact of the West Asian crisis on the portfolio direct impact is just about 10 basis points. We have an exposure of about 55 crores plus to the West Asian countries. But having said that, the indirect impact is something that we are waiting to unfold. And I'm sure the government will take effective steps to alleviate the miseries of the MSME from that perspective. But like I said, being the player that we are still to acquire that critical mass where the macroeconomic factors will directly impact our growth story itself. We do have a lot of space still left to play around despite the changes that's happening in the external environment.
All right, Sally Nair, always a pleasure speaking to you. All the best for your next quarter. Thank you so much for joining us. So take a look at that particular stock. At the moment, above 6% high in trade, 6.5% on strong set of numbers going in. NIMs could soften a bit in FY27 is what the company has projected. All right, let's take it straight to MobiKwik. Take a look at that counter as well, 3.3% up in trade. And here's an NDTV Profit exclusive. Peak 15, which is a private equity player, has fully exited MobiKwik through a block deal worth over 130 odd crore rupees. About 7.7% equity has really changed hand, with domestic and global institutions really picking up the stake. And my colleague Piyush Shukla joins in with all the details coming in. Piyush, so what are you gathering from sources?
That's right, Nisha. Sources are telling NDTV Profit that Peak 15 has fully exited its stake in MobiKwik with a bulk deal that was conducted earlier this day. At around, the deal size was around 130 crore rupees. Around 60.8 lakh shares changed hands, equivalent to around 8% of total equity. The buyers include Florentry, Viridian Asset Management, Diamond Asia, and Karma Capital. The average sale price was around rupees 214 per share. The deal, as we are aware, comes after MobiKwik announced that it has received the RBI's approval to start a NBFC. MobiKwik shares actually gained quite a lot on that news, rising as high as 18% on Monday. This is the last PE player which was left on the cap table of MobiKwik, because ADIA had also in September 2025 exited the company's counter. These are some of the details we are gathering, Nisha.
Piyush, thank you so much for getting us those exclusive details on this particular counter on MobiKwik and Peak 15 finally exiting this particular counter, and that is really taking away the overhang from the counter as well, and the stock is up. But remember, in 5 days, the company has really gained over 10%, and as Piyush was mentioning, that is on account of the RBI clearance given on its license. All right, let's take it straight across to markets then. That's MobiKwik for you. How are markets really faring, and what should be the strategy at the current moment? Nishal Maheshwari, market expert, joins in. Nishal, how are you seeing the market, or with the volatility really continuing with 1 day of gain and the next day of weakness, and a lot depends on the crude prices as well?
Thanks for having me. I think this is a consolidation phase, basically. Nobody is clear whether the war is over or not. But I think market is clearly saying that not much is likely to happen. I think most likely the resumption of war is not what market is discounting at the moment. So obviously the run-up has been almost 2,000 points from the bottom. So I think some amount of profit taking is happening at the moment. And I think this consolidation will continue for some more time.
When consolidation is going to continue, also, Nishal, a lot of people are penciling in the sustained period of this particular war, which is now getting into a large part, 1/3 part of this particular quarter being already covered. They're penciling in the impact coming in on the present quarter numbers. How much of that is weighing on the market right now?
So I think most of the broking houses have cut the numbers for the current year. And when they started, they were at anywhere from 15 to 18%. Now, more or less, everybody's low teens, basically, a high single digit. So I think 9, 10, 11% kind of a number. So, and this is, you have to understand, it's coming from a low base of last year of 7% growth. On top of that, basically, we are now penciling in around 10, 11% kind of a growth for the current year. So I think a lot of that is already been penciled in, and I think largely getting discounted also.
And Nishal, really, if we take a look at the advance decline ratio, today is like split between half and half, 1:1. Half of the market is advancing in the green and half in the red. How do you stay on the green side? What is the strategy at the current moment?
So I think this is a result season. So continuously follow the companies, basically either you are invested in or you are interested in. And if the numbers continue to get delivered, basically, I think you should be holding on to your stocks. Now, there are certain sectors basically which are doing well, and which is now emerging also as a long-term investment theme. I think energy as a theme is emerging for the long term. So we have to see basically after this 2 shocks in the last 5 years of oil, I think government will come out with something more comprehensive about the energy security. And that is the theme which is getting played out in the market very, very strongly. And that is the theme basically I think one should remain invested in.
Right. Thank you so much, Nishal Maheshwari, for joining us with your expert take on the market. Always a pleasure speaking to you. Thank you. All right, let's move on to one particular counter which is really beaten down in trade today, 8.5% down when we talk about Unicommerce, and we have the management joining in. Kapil Makhija, the MD and CEO of Unicommerce, is right here. Kapil, good to have you on NDTV Profit. What is it that your investors are not liking about the performance?
Thanks for having me over. Pleasure to speak to you. You see, Unicommerce is a story that has been in the making for many years now. We have demonstrated a strong performance in the last 5 years, 5x growth, and not just 5x growth. Today, our adjusted EBITDA that we reported for FY26 is higher than our revenue that we had in FY21, and we've added significant cash on our books in the last 5 years. Particularly, we spent cash to acquire a company called Shipway, and in just 5 quarters, we have been able to add cash, which was pre-acquisition levels. So overall, a strong performance. At the same time, we continue to invest in the business to drive this growth momentum going forward as well. We have seen both of our businesses, Unicommerce and Shipway, demonstrating double-digit growth. Shipway growing faster than Uniware, and we want to continue on this growth trajectory. For that, we are investing in AI, in ensuring that we are able to provide AI native use cases as well as AI native products. We are already an AI first company. At the same time, we continue to invest in sales and marketing and getting some mid to senior talent to drive, to bring the execution depth. Along with it, we are also embracing AI internally to improve our GTM efficiency as well. So in the short term, we are investing in the business. So there may be some impact on our profits, adjusted EBITDA and PAT. But at the same time, we are laying down a very strong foundation to be able to deliver a consistent growth. The kind of journey we have demonstrated in the last 5 years, we want to continue to be doing that. While we are investing, we are also guiding that our profits for FY27 will be larger than what we delivered in FY26.
All right, so your profits for FY27 will be larger than 26 figures. Now, Kapil, of course, Shipway as well as AI investments, they had eroded a part of your margins in the earlier part or during the course of the last financial year. And of course, this is your first full year as a multi-platform company. So from here on, what are going to be the growth deliverables and also the AI investment returns as well as Shipway contribution that is really going to add to your heft?
Sure. I just want to clarify. Shipway, after when we acquired them, they were loss-making. We turned them around. We delivered a PAT profitable Shipway business for 3 quarters. But we also realized that we do not want to continue it to be profitable at the cost of growth. It operates in a large market of 4,000 crores, and it's a relatively new challenger in that market. So we want to continue to drive this growth momentum. Our growth levers are fourfold. One is building AI native products and expanding our use cases to offer better value to our customers, drive faster client acquisitions. We have had the best quarter last quarter. We have the highest ever client acquisitions or client onboardings, 149, versus when we listed, we were onboarding only 80 to 85 clients in a quarter. So we have nearly doubled that rate. The third lever is looking at selective acquisitions to be able to expand our product portfolio, as our vision is to become a one-stop shop for e-commerce enablement. So we keep scouting for opportunities. Two is to continue to have the financial and cost discipline to continue to demonstrate the operating leverage. These are our four pillars of driving growth for the business, so that we can not only drive growth in revenues, but also demonstrate growth in profits and cash, as we have done over the last 5 years.
So Kapil, in one of the growth drivers, you have also mentioned selective inorganic acquisitions. Now you've just digested one, and it has now turned profitable. Now, what are the missing pieces when it comes to acquisition that you're looking at, and what ticket size would you be looking at, and how will that help? Like, give us a sense on what are the missing pieces there.
So the beauty is that e-commerce is a fast evolving industry. So there are new white spaces that keep getting created. With Shipway's acquisition, we've got an entry into pre-purchase journey through a solution called ConvertBay. But that area is still wide open. We are very heavy on the post-purchase side, post-order. So after the order is clicked, that's when our solutions come into play. But the pre-purchase journey is something that we are barely catering to. So that could be one potential white space for us. And we have few white spaces in the post-purchase journey as well. It could be related to, let's say, omnichannel loyalty, planning, and many other areas. This is not indicative of the spaces that we're actively considering, but there are many white spaces that are present today and newer white spaces that keep getting created. As an example, quick commerce until 2 years ago, I think many people questioned the longevity of the model. Today, we see many categories having quick commerce being a salient contributor to that category. And that's why we very quickly launched a quick commerce offering. And today, 40 to 45% of our enterprise base uses our quick commerce / B2B offering. That's the power of technology. That's the power of changing or a dynamically evolving ecosystem of e-commerce. So there will continue to be new white spaces getting created. The idea is for us to offer meaningful value to our base of enterprise clients. And that's with endeavor only we had acquired Shipway, and we'll continue to look at more inorganic opportunities accordingly.
Right. So look at more inorganic opportunities also. And of course, the growth path is set with first full year of multi-platform performance that you have shown. Kapil Makhija, it was great chatting with you, and all the best for the next quarter.
Thank you so much. Thanks for having me.
And the stock is down 8.5% in trade. So keep an eye out for that particular counter. And Nifty 50 still in the red and out of time completely when it comes to markets at 12. But keep it with NDTV Profit. Lots of news and market action on the other side. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Varsha Chandanani and Sharad Dubey, standing at the NDTV Profit market pit with all the action in the market today. Well, banking stocks, interesting day in market today. Banking stocks will be put to the test with them being in focus after the new RBI ECL guidelines within banks. If you see, there are also big earnings which will be in focus. But Sharad, coming to you on this, how are you viewing markets? What are the key trends?
Well, good afternoon, Varsha. It's always a pleasure to have you. But look at Nifty index. There has been a range-bound move was there, but now it seems like some important short-term levels have been broken down, and we are trading at the day's low level. Let's see what's happening in Nifty Bank in the charts. Nifty is already down almost 90 points. Nifty Bank, the sell-off is much more, and that is also trading at the day's low level. Remember, today is monthly expiry as well. But let's just figure out the important factors to watch out for in the day's trade. Earlier, it was a range-bound movement. Now you see Nifty has dipped more than 150 points from the day's high level. Nifty Bank, of course, the technical setup is much weaker than Nifty if we talk about it. And to get into a much more perspective about it, the PSU banks, they have been impacted by the ECL norms. This is what Varsha had mentioned earlier, but a good sell-off is happening, and one of the biggest losers sectorally. Broader indices, however, are showing strength, and that is where a little bit of value buying is back in the markets, especially in the small and the mid-cap space. Rollovers, monthly rollovers for both Nifty Bank ranging between 68 to 68%, 66 to 68%. That's what you should be looking out for. And for stock specific, there are 3 stocks having the highest rollovers. This includes CG Power, JSW Energy and Marico. These are the stocks having the good rollovers going ahead in the next series. Buying is seeing in the energy related stocks, especially Coal India is leading that pack. You should have a look at that. And of course, ONGC Oil India going up on the higher Brent crude prices. Earnings to watch out: Eternal, that's down 4%. Maruti Suzuki numbers haven't been out yet, will be coming in the afternoon. That's also down 0.61%. So you should be focusing in these 2 counters as well. And of course, the fatigue continues. US-Iran diplomatic talks are continuing, and that's an important development to look at. But Varsha, this is the entire setup looking like. But of course, markets are in a confusion or directionless, as I would say.
Absolutely. Well, thank you so much, Sharad, for that view. But, moving on, let's look our watch list for the day. Let's see which are the stocks buzzing on the back of news. Well, you have PSU banks, as Sharad was mentioning, the RBI ECL norms impact has been there, and this is what PSU banks have been under pressure. Then Coal India is on the back of buzzing on the back of higher FSA price, e-auction volume. Even Nippon India AMC is in focus due to market share gain continues for the company. Cohance Life Sciences gains. This is after Umang Vohra's appointment. This is the second day the company is in focus after the appointment. Key development when it comes to this company. Adani Total Gas is in focus on the back of Q4 numbers, where The revenue was up 17% year on year. Pyramid Finance, turnaround quarter for this counter. Keep a watch on that. City Union Bank is in focus. Of course, multi-quarter high margin for the company. Even Orient Green Power is in focus on the back of 9.9 megawatt wind projects that the company has commissioned. Mobivic, again, this is buzzing on the back of volumes, high volumes for this counter. EPAC Durable, again, buzzing on the back of volumes for this counter as well. AGI Greenpack, if you see, volumes are buzzing at around 8 times of its 30-day average. Maruti Suzuki is in focus. Company is expected to report its Q4 results today. Eternal also in focus on the back of, results expected today. But Sharad, coming to you, which are some of the stocks, under focus when it comes to rapid fire?
Thanks a lot, Varsha, for that. And now joining us, we are having Saumil Mehta, who will be taking us with the rapid fire segment. Good afternoon, Saumil. It's always a pleasure to have you in our show. First, I would like to start with PSU banks. We are seeing that ECL norms impact and the sell-off is there in this space. Good time to nibble in and add some positions in this PSU banks, or do you think the valuations are a little bit expensive? Technically, what does it look like?
Good afternoon to everyone. PSU banks are looking a little tired now. I would stay away for a little while, but if you are an investor or if you are a long-term, medium-term positional buyer, probably just hold on to your positions with trailing stop losses. But for short-term, I think there could be a small dip, so be very cautious.
Right, and Saumil, what about Coal India? Numbers have been good, realizations were good, the ASP numbers went up. Do you think there is going to be a up move from here in the current levels also?
Absolutely. Coal India has been doing really good, taking supports at averages, consolidating, breaking out of those consolidation patterns. A great setup, always in a channel, trading in a channel, upward channel. Trend is up in the short term, medium term, both. I would expect a target of at least around 500 and above. You can keep a trailing stop loss around 20 daily moving average, which is 445.
Right, and your views on Nippon India AMC, strong set of numbers and one of the best market share gains in the equity segment. Of course, AMC stocks have run up also. Do you think there is more fuel left?
I think in the very short term, yes, I would expect it to go till 1100 levels, which is the upper end of the Bollinger Band. So I would stay long in the very short term. In the medium term, it looks a little tired. Probably a halt would be expected. The support should be around 980.
Right, and your views on Cohance Life Science stock has been on a tear for the last 2 trading session after Umang Vora has joined the company. He's from ex-Cipla, he's the ex-CEO of Cipla. But good time to book profits in this counter now?
Yeah, I think my target for Cohance is around 575, 580. So you can still hold on to it in the short to medium term outlook. However, at 580, we have 200 daily exponential moving average, which will be a hurdle for the stock.
Right, and your views on Piramal Finance, a good set of numbers coming in and it's holding up nicely on the charts also. Do you think this will sustain going ahead?
See, I don't have much data on Piramal Finance. However, in the very short term, it has broken out of a consolidation, which is a good sign. I'll be expecting the stock to go up till at least 2080, 2090.
Right, and your views on Eternal, of course, earnings are expected to come out. But of course, how the positioning is looking like. The stock is down 4% right now.
Eternal has been in the downtrend for a little while. In the very short term, we saw a pullback till 200 daily moving average. However, it has started making low top, slow bottom in the last 3 or 4 trading sessions, trading below 10, 40 daily moving average. I'll be bearish on this stock, so stay away.
Well, that's for the rapid fire segment. Thanks, Saumil, for that. But Varsha, what are you gathering from the Google trends?
Well, interesting stocks, Sharad, I would say, which are trending on Google currently. You have, let's see, which are those stocks trending on Google. Well, you have, HDFC Bank. There you go. HDFC Bank, Sun Pharma. you have Paytm, you have Varun Beverages, of course, Sun Pharma we are currently seeing some kind of profit booking after the recent yesterday's move. This was on the back of Organon deal that the company has done. But Paytm, Varun Beverage, HDFC Bank are all buzzing on Google. Well, Somil, coming to you on this, I just want your views when it comes to HDFC Bank and Varun Beverages. So how are charts indicating for these two counters?
Let me start with Varun Beverages. VBL looks great to me. It has started a new move on the upside for in the medium-term outlook. So I'll be bullish here, but not in the short term. Short term, there would probably a small halt or a small dip. Support should be around 475 and 465. So that's a support zone. 200 daily exponential moving average is at 468. Very crucial level to watch out for Varun Beverages. My view would be positive for a target of 570.
Right.
And HDFC Bank. You asked for HDFC Bank. So HDFC Bank, I'll be expecting a very range-bound movement. The range is between 760 and on the upside, it is 830 levels. So that is the range I'm looking for. However, it's not been performing as expected. However, I'll be expecting the stock to take support around 760 levels.
All right, got that view. Well, thank you so much, Somil, for joining in and having a conversation with us. It was great having you on the show. Thank you so much. Well, moving on, let's focus on Himadri Specialty now. Company has commenced production from their anode manufacturing facility. But, to discuss more on this and what lies ahead for the company, we are here joined by Anurag Chaudhary, who is Chairman and Managing Director and CEO at Himadri Specialty. Well, Mr. Chaudhary, welcome at NDTV Profit. Always pleasure to have you. Starting the conversation with the, anode material plant, which commenced operation in April 2026. What's the customer qualification timeline, and when should commercial revenue meaningfully start for this?
We are pleased to announce we have started commercial production of 200 metric ton anode plant on 23rd of April 2026. It's a big achievement for the company. It's a culmination of years of research and development efforts, and lot of hard work has gone into it over the years to make it happen. The best part is it's a fully integrated complex, right from raw material to finished product. So we are producing our own raw material from coal tar pitch, a very highly technical grade coal tar pitch we are making, which is converted into coke. Coke is converted into anode material. And the commercialization of this product shows the strength of the company to transform research and development activities into a commercial scale operation. Looking forward, we'll announce a bigger plant with capex also in future.
Right, and Anuragji, the LFP cathode expansion, that is also something which the street wants to know a little bit. Your views on the key numbers to watch out for?
We are starting with 2,000 metric ton basically because that's the commercial scale required for validation from the customers for sample C. And post that validation, you can go for full scale commercial line. So we can see FY29 as a full year of operation for the LFP 40,000 metric ton plant.
Mr. Chaudhary, coming to differentiation, what differentiates Himadri's anode offering versus global competitors?
Today, if you look at the profile of anode material which Himadri is going to make, on which a lot of R&D efforts has gone, is all types of anodes, right from natural graphite to synthetic graphite. In synthetic also, we have both the raw materials, petroleum-based and coal tar pitch-based, then silicon carbon, which can be blended either with all of them or either of them, depending on the requirement of the customers. So Himadri brings to a table a unique proposition for its customers, where a tailor-made anode, depending on the end use, can be designed and meet the customer's requirement.
Right, and Mr. Chaudhary, if you just want to talk about the Birla tires, this positioned as a B2C extension, by when will we see the break-even happening?
So during the current year, we expect EBITDA break-even. So last year, 29th of May, we started production, and we are ramping up capacity on quarter-on-quarter basis. So we expect 3,000 crore top line in next 4 years.
And sir, when over the next 5 years, how should investors view Himadri? I mean, as a specialty chemical company or an advanced battery materials platform?
5 years down the line, Himadri will have a lot of new businesses which will have significant part to play in terms of top line and bottom line. So many projects which we are in the R&D stage, which are in the advanced stage of commercialization, will be starting production. And this all like anode material, synthetic anode, natural graphite, silicon carbon, then LFP, then Birla tires, and many more materials are there in the pipeline in R&D, which will be a transformational journey for Himadri from here to 2030. And we expect a lot of growth in the years to come.
Right, and lastly, just want to talk about Durofresh segment, and that itself is the entry into the branded consumer segment I'm talking about. What are the medium-term revenue aspirations from this venture?
We have been the largest player of naphthalene in India, with have a 68% to 70% market share over the years. Now to consolidate our position and have a value-added product, we have introduced naphthalene mothballs and have given the brand name Durafresh. And the market traction has been very encouraging. And next 4 to 5 years, we expect the brand to have the top line of around 150 plus crores. And there will be a significant bottom line to this product also.
Right, and so liquid coal tar pitch exports are the strategic growth lever. Which geographies are actually driving this incremental demand?
We'll be focusing for liquid coal tar pitch to the global market, right from South Africa. For the time being, Middle East is not happening, but still the Southeast Asia, all those markets will be the focus market. Australia, these will be the focus market for the time being.
All right. Well, thank you so much, Mr. Chaudhary, for joining in and having a conversation with us. It was a pleasure having you, and all the best for the business. Well, moving on, let us invite the guest for our show, Girish Sodhani, who is co-founder at Ensure Capital. Girish, you heard the management of Himadri Specialty. A lot of triggers working in favor of this company. You have anode facility, then of course the battery chemicals playing out, and Birla tires also in focus. Just wanted to have your view when it comes to this counter for next 2 to 3 years.
So for the Himadri chemicals, I think the valuations are a little bit higher sides because the PE ratios are a little bit in the highs. But come into the fundamental terms, the healthy balance sheets, shareholding patterns are giving a little bit boost for particularly discounters. Come to the EBITDA margins as well as the PATs, they are projections very strongly with the more than of around 35 to 38% year-on-year basis. So overall the structure was important. Now come to the news base. Because the growth plans are still there for the financial year 26-27, the company already had the strategic carbon black expansions of 70,000 metric tons in the West Bengal plants. Apart from that, the Birla tire integrations are there. Export expansions are still in the Mysore ports. So overall, the structure was very, very important. And the most very much important, that is the battery recycling kind of a plants that gives a little bit boost of their particularly margin sides. So overall structures was very strong. In the terms for the next 2 to 3 years down the lines, yes, the Himadri chemicals are very strong candidate. But for the fresh allocations, I looking out like for the next, let's wait for the few trading sessions because all stocks is already run up in last few sessions. So just hold it for the fresh allocations. Just if you're getting a chance of around 525 to 530, that will be a very strong bet for the next 2 years down the line.
Right, so 2-year view is coming in for Himadri Specialty, but another stock in focus is Coal India. Top gainer in the Nifty index, strong set of numbers coming in, and interestingly the brokerages have also turned bullish in this counter. Remember, it's a dividend play as well. And looking at the numbers, there was a good EBITDA beat also, especially on the FSA front and the e-auction volumes front. That is where the street is bullish on this counter. Girish, wanted to take your views on Coal India. Numbers have been decent, operationally a beat as well, and also a dividend play. And these markets, do you think it's a good time to enter or hold this counter?
Yes, because the Coal India, what the expansions plans are still there, like a 1 million metric tons they are looking out for the financial year 2027. Apart from that, there is a capex plan also of around 16,000 crores market. So over the dividend oriented cap, and it's a completely a basket where you can invest for the like looking out for the next 3 or 5 year down the lines. But obviously the stock is still moves in the last few sessions. So I don't think so that the fresh allocations are there. But if anyone's hold this particular counter, I think this is a very strong candidate. You have to put it in your portfolios.
Right. Well, moving on, Zydus Life and Lupin is in focus. If you pull up the stock of Zydus Life, it's down almost 3%. Even Lupin is under pressure, is down almost 1%. Now, Astellas. So the news is Astellas, which is again MNC company, has settled with MSN, which means the US generic of Mibirigon will be in picture. So now Mibirigon is a drug which has a limited competition, but now because of this settlement, lot of generic companies will come out with the Mibirigon drug. Now this will accelerate price erosion and competitive entry in the US market. Now Zydus Life, if you see, has the highest risk in this. Why I say this? Because Mibirigon, if you see, contributed almost 20% of FY26 EBITDA. They have a highest US market share, maximum earnings sensitivity. Analysts estimate 12 to 20% of EBITDA now under pressure for Zydus, and a significant downside to FY27 earnings forecast. While for Lupin, if you see, meaningful but lower exposure for this drug, contributed almost a low double-digit percentage of consolidated EBITDA. Earnings impact visible but less severe than what Zydus Life may go through. FY27 profit estimates are likely to be cut. Overall impact on Indian pharma companies, if I were to talk about now, because high margin and limited competition generic will turn into a crowded molecule, and so Alkem, Aurobindo already have US FDA approvals for this product. So a lot of generics will come into the picture, and faster entry means steeper price erosion and margin compression for all the companies. So it's a very in a very easy language, a drug which has a limited competition will come up in a generic segment, and a lot of companies will come up with this drug. So Girish, just wanted to understand your views when it comes to Zydus Life and Lupin, if you could share with our viewers.
For the come first to the Zydus Life now, extremely margin compressions are there. We have already seen this particular margin pressures from the last, I think, 2 to 3 quarters itself. Because from the 30% to just reduce from the 22%, it's a heavy numbers. Again, there's a regulatory and the approval delays are there. Because US approvals, we already saw that there's a maximum pressures from the US FDA propositions, especially drugs like Asparts, and these are extended time frames. They gives a little bit dumps, and particularly these type of product lines. Now come to the Lupins. Yes, I think Lupins looks like a very attractive for the longer period of time, approximately of 1.5 years. There's a reason behind it, the highest contributions of almost 35% market shares in the maximum drugs like a Baygon's, packed similars. Launches are completely belongs, and as well as the new launches are still pending in the financial year 2027. So strategic capex plans are still there in the Lupin, as well as there's a little bit focus on the revenue fronts also, looking like almost we are targeting approximately 20-22% year-on-year basis revenue should be increases. So in the comparison between the Zydus and the Lupins, I think the Lupin is a more favorable for the longer period, at least
Right.
1.5 years.
Right. So Lupin is one of the top picks coming in from Girisha, but Nippon India AMC, very strong set of numbers, and the market share gain beating the peers also. Of course, a little bit of valuations is something we all talk about it, but nevertheless, the numbers have been really strong for the AMC space, especially for this company, and it's good momentum also today. Girish, your view for Nippon India AMC, is there is there a little bit of more valuation catch up at play, or do you think it's at elevated levels right now?
In the terms of obviously, if you are looking out for the next 3-5 years down the lines, I think you can enter in this, but not at this level itself. But this is a good counter. But for the shorter periods, obviously, it's completely showdowns. And because there's a reason behind is that the operational margins are already putting their highs, the growth numbers are still there, but there would be obviously a high competitions market also. So starting valuations is completely a very higher betas, and obviously the stake dilutions, FI is already reducing their stakes from this and booking their profits. So little bit concerns on that front also. So not for the longer period of time. Yes, if you are looking out for the next 1.5 year, I think the Nippon, avoid Nippon, and you can shift to any other sectors as well as the stock.
Right, understood. Well, Eternal is in focus. Let's, pull up that stock and let's see what that stock is doing because it's set to release its Q4 results. And Mahima gives us details on street expectations from results.
Basically, the expectation is that overall, in terms of demand recovery and revenue growth, that is mainly going to come from Blinkit. The expectations are also that margins might see a slight uptick this quarter. Now, overall, in terms of the growth numbers on year-on-year basis, revenue might see an uptick of over 2 times. EBITDA might see a growth of 5x, and margins might be at 2.4% versus that of around 1.3 odd percent. This is the analyst estimates, Bloomberg estimates suggesting this number, and profit might see a jump of 2 times as well. Now, in terms of what to expect, steady improvement in net order value growth is something that all the analysts are penciling in. Double digit both in terms of your food delivery as well as Blinkit on year-on-year basis. High double digit for Blinkit and low double digit for food delivery. Kotak has forecasted that Blinkit store could reach to that 2,200 number mark. That means around net addition of 173 dark stores this quarter. Morgan Stanley, however, says that quick commerce revenue and profitability forecast might be subdued because of competition also coming in because of higher discounting, and Blinkit is the only platform which has gone ahead and increased their handling charges as well. In terms of key things to watch out for, I think whether Blinkit will be able to sustain the high growth that it has done in the last quarters or not. High platform fees and competition, how is that dynamics faring out? And plus, this is the first quarter after Albinder has actually taken up the role as a group CEO, so we'll have to watch out for as to what his comments are going forward as well. So this is the overall view of what you can expect from Eternal's Q4 earnings.
Thanks a lot, Mahima, for that. And of course, we are having Maruti Suzuki's numbers also. In some time, Maruti Suzuki will be announcing the numbers, say, in the next 30 to 40 odd minutes. But Girish, just wanted to take your views, for both the previews for both Eternal and Maruti Suzuki. Either of them, where do you think fundamentally there is an alpha to be made?
So for the Eternal, obviously, I'm looking out for the avoid as of now. There's a multiple reason behind it. The new leaders are still in the positions. I think that after the new leader joinings, I am looking out for the next 2 to 3 quarters to look at what the exactly strategy is all about. Higher margin pressures. Obviously, stock in the very high P ratios. So obviously, it's a little bit expensive, as well as there's a heavy dog fights are still going on in the e-commerce section. So I'm looking out that let's wait and watch for this particular sector for the next 2 to 3 quarters post, and then you can enter and trade your positions.
Right.
Come to the Marutis, obviously come strongly build-ups.
Okay. Definitely. Thanks a lot, Girish, for taking out your time and giving your fundamental views on the stocks. Folks, that's all. We are out of time right now, and that's a wrap for Trending Stocks from me, Varsha, and the entire team which has put together this show. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market opening, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices.
Good afternoon, you're watching NDTV Profit with me, Shreyansi Singh, and it's time to take a very quick look at the markets at this point in time. When you talk about the Nifty, it's actually a lackluster day of trade that you're looking at for both Nifty and Sensex, and you do have benchmarks that are underperforming broader indices. As you can see with that 87-point cut also coming in for the Nifty. When you talk about Sensex as well, similar picture that you're looking at. And with that sharper cut to a darker shade of red, if you will, when you talk about the sectoral picture, it's actually tilted in the favor of red, at least at this point in time, in sharp contrast to what it was in the morning. So PSU banks, those are the ones that are leading losses, about 1.9% downtick coming in for PSU banks. Bank, auto as well as IT, all of those sectors are under pressure, trading with some amount of pressure, all of them. And financial services, consumption as well as realty and rural sectors, all of those sectors also under tremendous amount of pressure, especially PSU banks. Those are the top sectoral loser at this time. When you talk about oil and gas, that's the one sector that's remaining resilient, along with energy and metals, of course, shining yet again. You do have pharma as well as FMCG just about, in the red right now, and you do have pharma that's resilient, like I mentioned. But when you talk about some of the list of top losers as well, something like a Union Bank of India makes it to that list with that 3.7% knock coming in, JK Cement, Schneider, India Cements, all of those counter trading with some amount of pressure. When you talk about the Nifty 50 complex as well, something like Eternal, that's down about 3% thereabout. And that's ahead of its earnings. Shriram Finance, 2.5% cut also coming in. Axis Bank, HCL Tech, Interglobe Aviations. Those are some of the counters that are also trading with some amount of pressure. On the flip side, what's doing quite well is something like an ONGC, Coal India, Dr. Reddy's and Adani Enterprises, as well as Nestle India. So that's the overall picture that you have right now. But with that in mind, let's also talk to you about a major regulatory reset that is on the way, as RBI has finalized new norms on asset classification, provisioning and Basel III capital rules that are effective April 2027. Let's get you some more insights right now when it comes to all of this. Dinesh Khara, former chairman, State Bank of India, is joining us, and as well as Jatin Kalra, partner, Grant Thornton Bharat, joining us on the show right now. Thank you so much, gentlemen, for taking time out and joining us, and a very good afternoon. Mr. Khara, I'll come to you first things first. I wanted to try and understand, first of all, what you think about this particular move and what you think forced the RBI's hand really this time around, because we've seen a lot of back and forth when it comes to this one. You're looking at 2 drafts, 1 final circular, spanning a period of roughly about 6 years that you're looking at. So what do you think really brought along this particular move?
First of all, thank you very much for having me on your show. And when it comes to the ECL guidelines which have been announced by RBI, yesterday, I think I would say that this was perhaps the best of the time. When we look at the banking system profitability, when we look at the capital adequacy, and also the kind of set book which they are having, perhaps this is the best of the time if at all ECL norms were to be introduced. And apart from that, they were RBI had given enough headway in terms of prior notice, and they were preparing the banking system for adopting ECL at a point of time. And I think from that standpoint, many of the banks had started providing for, they had started going for excess provisioning. And that is one of the reasons why the banks which are carrying excess provisions on the book, they will be impacted the least. And those who have yet to really step up their provisioning, they will have to step up that provisioning from now onwards till 1st of April 27, which is the date for the launch of the new regulation. So that's the broad sense. But when I look at the impact of it, broadly speaking, my sense is that about the banking system profit overall has been about 4 trillion plus last financial year, 24-25. 25-26, I expect it to be somewhere around 4.8 odd trillion. So with that kind of a number, the impact of this provisioning is expected to be somewhere around 50 to 60,000 crore. So I think they are much within the absorbing capacity of the banks. And when it comes to the capital adequacy ratio, it has been somewhere in the range of about 16 to 18%. So on that particular piece also, this will have an impact of about 50 to 70 basis point. And it can be spread over the next 4 years. So I think to that extent, the impact on the banks will be quite minimal in terms of its the capital adequacy.
Right.
And I think part of the profitability concerns can be addressed with adopting more pragmatic dividend payout ratios. So I would say that the regulator has been very, very pragmatic and very, very mindful in terms of its overall impact on the banking system.
Absolutely.
And now when they have introduced it, they are actually ensuring that the banking system is resilient in terms of the future shocks.
Right, no, absolutely. It does seem like a very prudent measure. That's the word coming in there. And it's at an opportune time. That's the word coming in from Mr. Khara. But Mr. Khara, I also wanted to try and understand a little bit about the global perspective as well, because you do have other banks globally that follow this model. Against that entire backdrop, how are you then looking at it?
So actually, when it comes to global banks, they have, when it comes to PD, LGD and EAD, they actually make use of their legacy data and their past experiences to predict the future likelihood of the PD, EAD and LGD. And based upon that, the provisionings are decided. And it is something which also defines the risk appetite for those banks. And I would say that it is more of a remit of the board to really define what should be the provisioning. So intention is overall to ensure that the banks are well equipped to deal with the kind of stress which might unfold in the days to come. So I think this is what we have seen globally also. So I think eventually, as of now, it is the Bank of India has given a basic minimum provisioning which would be required. But over the period of time, when the banks will have the matured models in place, they will probably have their own, they will decide in terms of what should be the provisioning which they intend to carry out so that the balance sheet stays resilient to the future shocks.
Good afternoon, Mr. Khara and Mr. Kalra. Mr. Kalra, in your remarks yesterday, you had mentioned how the RBI has given a certain glide path towards following this new norms. I want to understand two things that you have said. The framework reflects a thoughtful calibration by the regulator. They have responded meaningfully to the industry feedback on prudential flows, cooling off period for upgrade of NPA loans. However, the transitional arrangements that are needed to spread the capital impact over multiple years does help, but most banks will have to tirelessly develop the databases, models and upgraded systems for this transition to happen. Can you elaborate on what are these newer changes that banks will have to make for complying with the new norms?
Sure. So with the new norms coming in, banks would have to create their own credit risk models, looking at past history of how loan performance has been for them at a portfolio level. Now, that level of credit risk modeling is something which has been introduced, at this level for the first time for banks, requires a great deal of data modeling, requires new model systems to come in. And also the thing that it has to be forward looking. What that means is, let's say historically on personal loan, I had defaults ranging around 2%. I can't stop at that. I also have to look at how my next year is going to be. So do that forward looking modeling, depending on how the macroeconomic circumstances next year are expected to be, adjust the provisioning rate based on that. So that predictive modeling based on macroeconomic factors and all really requires a lot of work from a data side, from process side, models and everything. Now that one of the requests from banks, of course, was that we should have longer period to be able to implement these new norms. RBI said no, we'll want to start from 1st April 27 only. Of course, RBI has been saying that for quite some time, and what that means is that the remaining period left would need to be utilized very carefully by banks to make sure that they are able to implement it appropriately and with the required standard desired here.
So, Mr. Kalra, in your study, which players do you think are better placed? Private banks, PSU banks, in terms of this transitioning, building newer models, like you suggested, who will be, who needs to prepare better? In terms of capital hit as well, who is better poised? Some of the lenders we do understand over in Q4 also they've built proactive provisioning. They have not specified it is for ECL, but we have seen a few lenders like Union Bank, even Axis Bank in this quarter making certain higher amount of provisions. So in terms of peer-to-peer comparison, PSUs or private banks, which are the better placed ones?
It really depends on the mix of products that they have, lending products. Banks which are heavy on, let's say, unsecured retail lending are going to have a larger hit on the capital as compared to, those which have wholesale lending and especially to better credit segments. Overall, what we have seen is most of the banks are aware that, of course, they need to do it and have been planning at some stage. And from a capital impact perspective also, it should be manageable from most of the banks, whether it's 30 basis point hit on the capital, 40, 60 or 100 basis point. That is going to vary depending on the bank's product mix. But for most of them, we do believe that the capital hit is something that's going to be manageable for them. Like you've rightly said that with 4 quarters left before implementation, banks are going to look at increasing their provisions potentially to prepare themselves for the capital hit there. RBI has allowed a 5-year glide path in terms of the capital hit can be spread over 5 years as opposed to taking that immediately on 1st April 27 only. But we do think that some of the banks may actually consider taking all of that hit immediately and not really utilize that 5-year glide path.
Yes, no, absolutely. And that makes sense in terms of how we should be looking at it as well. But Mr. Kalra, I'll come right back to you. I wanted to touch upon a point that Mr. Kalra mentioned briefly. The shift to an expected credit loss model, it could be looked at as a big philosophical change as well. Are you looking at Indian banks as truly ready when it comes to the PSBs as well to handle this forward-looking risk assessment at this point in time?
Yeah, very much, because, it has been some of the PSBs in particular have the system of really going through their data for quite some time. They have got the details relating to the legacy data, which actually helps them in working out their PD, LGD, and EAD. And based upon that, they're in a position to have a predictive model also in place. So I think irrespective of the private sector or public sector, I would say that the banks which were the managements who were mindful in terms of having the systems and processes in place to have more effective assessment of the risk and also defining their risk appetite very carefully, they would be much better placed as compared to the one who have not really invested well in terms of assessing their legacy data and also at going for some kind of predictive model. So I think my sense is that agnostic to the ownership, whether it is public sector or private sector, much of it depends upon the managements of the bank, if at all they have invested, for understanding their loan book and the profile of the book well. So that is something which is going to make a difference.
No, absolutely. And so from your intensive experience, I wanted to try and understand what you think about this one as well. Will this reduce the tendency to delay recognizing stress? Do you think banks are going to be finding ways to evergreen loans? What is the perspective that you have on this?
No, I don't think so that banks will really make an attempt to evergreen the loans. And we have already seen that the bank books have been cleaned significantly. I would say that the kind of NPA, gross NPA numbers which are there for the system, they're probably the lowest ever in the history of the banking system. So I think from now onwards, the lessons which were there in the past have been learned well. And I don't think so that banks will attempt to evergreen their books. And moreover, this is one area where now all this is system driven, and also the early warning signals are in place. So, there are enough guardrails which have been put to ensure that the bank should be in a position to really visualize the likely scenario of the loan book and should start ensuring that adequate preventive provisioning is done as compared to the reactive provisioning which we have seen in the past.
Mr. Kalra, I want to go back to the draft proposals. The request was to delay, which has not been accepted. Of course, they've given a certain glide path. The second request was on prudential flooring of provisions. Stage 2 banks right now make 0.4% provisions. It has been increased to 500 basis points. So the RBI did not actually listen to these requests that the industry was making. In terms of banks, you mentioned how the certain category of lenders will face higher capital hit. But in this RBI not budging down, what is the message that the regulator wants to send? One, and second, we have seen Indian NBFCs already follow the ECL model. So when this model was implemented for NBFCs, did they see a material hit on their capital and profitability?
Certainly. So definitely one of the requests from the industry was that the flows for stage 2 be brought down. Now the concept of flows is India-specific concept, like, RBI has requested that at least minimum 5% provision should be carried on accounts which are in stage 2, which have significant increase in credit risk identified on those accounts. The industry wanted it to be brought down from 5 to something like 2, 3, 4. The RBI, of course, has stuck to 5% as being the flow. They have adjusted flows for certain segments, like, for example, housing loan to retail customers. They brought down flows for that. Any exposures which are guaranteed by the state government, there's lower flow for that. Gold loans, there's lower flow. Loans which are backed by FD, you have a lower flow. So for some low risk products, they have brought down flows or adjusted it downwards. Having said that, for a reasonably large portion of most banks' portfolio, 5% is going to be the minimum ECL required if they are in stage 2. That definitely results in higher provisioning requirement. And, that is something which the industry would now need to prepare for, having that come in the final guidelines. When NBFCs adopted it, they did not have the flows be there. But still, considering quite a few NBFCs are relatively retail heavy, they did have significant increase in their provisions with the introduction of, the ECL norm that they had.
No, absolutely, and that makes a lot of sense in terms of the way that we're looking at this right now. But Mr. Khara, I just wanted to quickly, before we wrap, get your closing comments in as well. You've mentioned that this is an opportune time to be looking at this, and there's a little bit of a minimal impact that you perhaps are penciling in when it comes to this one, but anything additional incremental beyond this?
Well, I think now onwards, the bank managements will have to really think in terms of their risk appetite very carefully, and based upon the past data and also the models which will predict the LGD, EAD, and also PD. So I think the strategies which bank will have to adopt in terms of building up the loan book, they'll be required to be more mindful in terms of what all risk they will take, and also they will be in a position to connect their future portfolio in terms of the decisions which they are taken now So I think the bank managements will have to have a significantly more important role to play in defining the trajectory and the destiny of the bank.
Makes a lot of sense in terms of how you should be looking at the impact of the norms as well. Thank you so much, Mr. Khara, as well as Mr. Kalra, for joining us this afternoon when it comes to the impact that we're penciling in for these norms as well. But let's also talk about Rallis India, that's in focus on the back of reporting a steady set of numbers for the fourth quarter. And this is largely supported by volume growth as well as cost optimization. In fact, we're going to be going into Gyanendra Shukla, MD and CEO at Rallis India, starting with 2 years ago, industry was under excess inventory pressure, and that's also something that we're looking at. There's a lot to analyze when it comes to some of these numbers as well, whether you talk about the demand hit or the way that the volume growth is also functioning. Are things changing at this point in time, and what is the Middle East impact that you're looking at?
So, so there are two questions. Yes, there was an oversupply of inventory, which I think got balanced last year itself. And since the war has started, in fact, now there's a more scrambling for inventory going on because supply chain is disrupted and manufacturing steps also have slowed down and cost has gone down. So while inventory is available to meet our seasonal requirement, but it is coming at a higher cost. As far as Middle East situation is concerned, we do not sell a lot of products in that part of the world. But because most of the crop protection products are dependent on petroleum supply chain, it does impact raw material cost, it does impact logistics cost. So we have to see how it will play out, depending on the season and all, whether we'll be able to pass on the cost increase to mitigate some of the cost or not. That has to be seen because season is still a little far away.
Right. Mr. Shukla, hi, this is Varsa this side. Pleasure to have you at NDTV Profit. You have an aspiration to grow revenue in double digit. When can you see that growth? Maybe in FY27?
So, look, I think I keep saying, look, my aspiration is to grow double digit, right? But having said that, if you start splitting our business into three segments, which is crop protection domestic, crop protection export, soil and plant health, and seed. So seed certainly has grown mid-teen, 15% year on year. Even our B2B business has grown 15%. There are challenges, weather-related challenges in Indian market in the Kharif season and even in Rabi season towards the fag end. As a result, that has grown slightly lower, mid-single digit. Otherwise, on a overall company basis, we continue to aspire double digit. And we plan for it, and we believe we'll certainly. So, aspirational goal is you keep trying, someday you'll reach.
Right, but sir, continuing on that. So, will FY27 revenue growth be volume driven or price driven? Considering the rainfall also, because FY26 was a volume driven growth.
So, I think you have to see segment by segment. For seed, as well as soil and plant health, it will be both volume and price. Whereas in crop protection, it is highly likely given the challenges of rainfall. I mean, it's too early to predict that rainfall, whether we'll have a negative contribution or not, but it is quite possible that it will be more price driven rather than volume driven.
Right. Mr. Shukla, what EBITDA margin range should we build in for FY27? I mean, considering FY26, you are hovering around 12%. Will you be maintaining that?
So what I said, constantly keep saying is that I want to improve EBITDA margin by 5% basis point on the base of 24-25. This year we have seen significant improvement. Now we are in a industry which is very cyclical in nature, weather related, commodity prices related factor. So the way we are progressing our business as seed component and soil and plant health business continues to grow, I think I'm still on the target to meet that 500 basis point margin improvement on the base of 24-25. This year we had a significant jump. It is very, very difficult to say we will be able to deliver similar level of margin in the current year, but yes, seed and soil plant health, I'm more confident that revenue and margin will continue to expand.
In fact, sir, the seed business delivered strong growth of around 23% during the quarter and 15% in FY26. What's the outlook here?
So seed and soil and plant health, I keep saying that we want to continue to grow high double digit growth. I mean, mid-teen to high double digit growth. We were able to achieve last year 15% in spite of supply constraint. This year supply situation is slightly better, but then weather situation we don't know. But I guess we will continue to aspire to grow in that range. And part of the reason we think we can grow because we've got our business very focused. We are trying to do few things, but deeper and well.
Right. Well, thank you so much, Mr. Shukla, for answering our questions, and all the best for the business. Thank you. Well, Shreyansi, considering the volume-driven growth that the company has, we are seeing good traction in Rallis India. The stock was buzzing in trade, though it has come off. It's almost up, almost 0.74%. But FY27 looks to be good for this company.
No, absolutely. And that's what the upbeat commentary from the management was also coming in, Varsha, here when you talk about this particular counter. But let's also get you some more news and updates. In fact, the Adani Group and Google are doubling down on India's AI push to build India's largest AI data center campus. And that's in Visakhapatnam as well. My colleague Rishabh caught up with Nara Lokesh, IT Minister, Government of Andhra Pradesh. Let's go across and listen into a slice of that conversation.
I believe the $15 billion investment is merely a catalyst in building this entire ecosystem. Andhra Pradesh has the base chemicals. So if you look at it, we have the renewable energy bit. We have amazingly well-educated youngsters who are looking for opportunities. And third, we are also doing a session with Google and the larger ecosystem. So looking at cooling tower manufacturing, the entire ecosystem around power electronics and all that. So how do we capture this entire ecosystem here in the great state of Andhra Pradesh? So the idea is from chip to data center. How do we capture this entire ecosystem here? Because it's clear, for every job that directly gets created through these data centers, about 6.2 jobs get indirectly created. It has a huge ripple effect. And we believe that in the phase one, we will be able to create close to direct and indirect, close to 200,000 jobs.
Awesome. Also talk to us a bit about the 6.5 gigawatt target that you have for the state. You're already at 1 now with this one. Talk to us about how you get there.
No, I believe that the investment by Google has definitely given us a lot of tailwind. And for the first time, we're seeing a lot more inbound calls than outbound, where a lot of large companies are looking at now making substantive investments in Visakhapatnam in the entire data ecosystem. Apart from this, as my Chief Minister has guided us and directed us, he specifically said we have to keep certain allocation out for entrepreneurs. Okay. So there's a lot of youth in India. They really want to start their own startups in this entire ecosystem.
Alright, and there you go. So that's a slice of that entire conversation coming in. But that's all the time that we have on the show for now. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock.
Good afternoon. You're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar, and my co-anchor Mahima. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade, either on the back of price or volumes. So let's see what's on the show today. Firstly, we'll be speaking with the management of Muffin Green. Now, why we are speaking with this company? Because recently, Tata Mutual Fund has bought some stake in this company. Now, this company is focused towards EV financing. So what's the growth going forward is something that we'll discuss with this management. We'll be also speaking about EPAC Durables. The stock is up nearly 50% in the last 1 month. Is it largely because of a harsh summer that is expected to boost AC demand and in turn benefit EPAC Durable is something that we'll discuss with the fundamental guest on the show. And then we'll be also speaking about MobiKwik. Now, the stock is up nearly 54% on the back of RBI approval. But what does this mean for the company is something that you will get to know on the Small Cap Buzzers show today. Apart from that, we'll be also covering multiple results that have come in the small cap side. First, it's Websol Energy. Profit has surged nearly 3 times on a YOY basis. What led to this? Apart from that, it's Rallis India, volume-driven revenue growth. Is it a turnaround quarter for the company? The stock was up at the starting point. Right now, it's largely flat. And lastly, when it comes to Unicommerce, the counter is under pressure. It's down nearly 9% from its IPO price. The Q4 numbers were quite stable, but not a good growth. That is something that we have seen in the fourth quarter of FY26. So this is what we are going to discuss on the show today. Now, if you look at the market, it has been quite a dull trade today. We are down around 90 points. Market is continuing to hold above the 24,000 level. Do remember, it's a nifty expiry today. So we could see some wild moves coming in the last half an hour of trade. If you look at the sectoral indices, it's the banking stocks that are leading the fall. Nifty PSU Bank, Nifty Bank and Nifty Private Bank all down in trade on the back of the ECL norms. While on the gaining side, we have the PSU index, oil and gas index and energy index, which are up anywhere close to 1% in trade. But it has been a good day even when it comes for the Nifty small cap index. It has been outperforming the benchmark, up around 0.6% in trade. Right now it's just up around 0.2%. But Mahima, which are the key stocks that have been buzzing here?
Right, so Swami, as you rightly mentioned, the broader markets slightly are holding up. Of course, off from its day's high point, but the small cap 250, as you rightly mentioned, is up by about 0.2%. But some specific names, you have Unicommerce E-Solutions, which by the way, we are going to talk about on the show today on the back of how earnings have fared, is seeing a downtick of around 8%. Analon Healthcare is also seeing a downtick of around 6%. Yesterday, we spoke to the management and of course, we talked about the outlook, but there's corporate action which is leading to this correction in the stock price as well. There is counters like MHRI, which is also down by about 2 odd percent. You have Asian Retina, which is also down by about 7 odd percent. You have Rosary Biotech, which is also seeing a downtick of around 6 odd percent. But on the flip side, you have counters that are holding up. You have AGI Greenpack, which is up almost 14.5 percent. You have Electronic Marts, which is also up 12.3 percent, probably on the back of this summer rally that we're seeing on all of these counters. You have EPAC Durable also buzzing on the back of that, up 10.5 percent. Something like a Uflex is also doing well. G&G Electronics also up 8%. Lakshmi Dental also up 8%. So Infobeams Tech also seeing gains about 7 odd percent. Dishman Carbogen also up 6%. So a lot of these names are buzzing in the broader end of spectrum, either on the back of news flow or some industry trends going ahead. But, like we said, we're going to speak to the management of Mufin Green to understand as to what the future of the company looks like and what lies ahead for the company. To discuss exactly this, we're joined by Gunjan Jain, the CFO of Mufin Green, joining us right now. Gunjan, thank you so much, first of all, for taking out the time. My first question to you is as to, from a slightly, forward-looking perspective from FY27, what is the AUM growth that you're targeting? How much of that overall will come from your different segments, your EV financing, supply chain, and other green lending verticals as well? What is the kind of internal targets that you have in place?
Sure. Thank you for letting me join this conversation and give a brief about Mufin Green and its growth. So, like for the financial year 25-26, also we reached the benchmark AUM of 1540 crores, and we are profitable. We got the equity infusion done in the financial year 25-26 with 315 crore. Plus, our rating was also upgraded to A minus from CRISIL. Plus, we got one PTC round done from the Aditya Birla, where we got the rating of A plus from CRISIL. And we are seeking the securitization transaction in the near future. So the next financial year, what we are expecting is to multiple X our AUM as well as our profitability. Considering the cost of borrowing, which has started reducing, since we are now bankable to PSU's bank and we are able to get the funds as low as 9.5%, and the PTC and DA structured deals are also getting close at 11%. Plus the pivot of our portfolio from EV segment to digital segment, over there also our OPEX is very much negligible. So next financial year, we are targeting to increase our AUM from 1500 crore to 2300 crore with multiple X of our profitability.
Okay.
Right. Now, the reason why we are having this conversation today specifically is because recently one of the big mutual funds have bought a significant stake in your company, that was Startup Mutual Fund. So just trying to decode what's the growth plan going forward. If you could just take us through, how are you seeing Mufin Green over the next 2 years? What changes for the company? How much can your bottom line increase going forward?
So as I've mentioned that we have started reducing our borrowing cost and we have already reducing our OPEX, and our projection for the AUM is also somewhere around 2,200 crore. So what we are expecting to reach the profitability of somewhere around 80 crore plus. This is a conservative side which I'm telling, but we are expecting much more than that. And for the consecutive financial year, for sure it will be over and above the same.
Okay. With regards to, this concerns that analysts have been generally flagging about EV financing, right? That a lot of these loans, are stopped in the middle of repayment, and a lot of these go as default. What is that ratio looking like for you right now? Has that improved over FY26? And what's the outlook going ahead in FY27? Because in the last couple of months, we've also seen two-wheeler sales for EV going up. So that means there's more growth coming in for you, but at the same time, the risk of that also goes up.
One thing I would like to highlight that the disbursement of the EV financing, we have already strict our credit policies in last 1 year. Now our focus is majorly on the digital product. So at present also 40% of our AUM is into the medical premium financing, and the EV segment remains as low as 30%, which will reduce further also. We are having a conservative approach over there where we have strict our credit policy and we are making the minimal disbursement over there. So we are not expecting any challenge in terms of any increase in our credit cost because of the EV segment, because eventually that portfolio will be less than 20% by next financial year. And that also we are doing as per our strict credit policy. So we are not seeking any challenges in terms of collection over there.
Okay. Recently, I believe you have had a tie-up with the government of Assam. In fact, you have been empaneled with the government of Assam to offer instant loans. So these loans, which segments will you focus on this one? Will it be specific to EV financing, or will it also be towards the insurance product of yours as well?
So we have done the integration with the Rajasthan as well as the Assam government, where any of the government employee who wants to take personal loan, they can simply apply through their HRMS app and they'll get the personal loan within the same day. So it is not linked to insurance policy, it is not linked to EV, it is the personal consumption requirement of theirs. And we are secured by the government organization. We are anyhow getting the EMIs from the treasury of the government. So we are secured.
So you are saying that if, say, a government employee takes a loan from you, the EMI portion will be directly cut from his salary and provided to you. So will government be involved in this?
So no, the basically our EMI will be part of their salary structure itself. If they are taking loan through the HRMS itself, so our EMI
backing,
will
right?
be part of it. Yes.
So no, I'm asking, is the government backing the loan that the employee?
Not there, but government is ensuring us that first we will get our EMI and they'll get their salary. They are not safeguarding us. There are few instances in which we may not be able to get the EMI. In that case, government will not pay from their own pocket.
So you said that you have empaneled with the state of Rajasthan as well. When did that happen, and how has been the growth in these loans in the state of Rajasthan?
We empaneled with the Rajasthan government in the month of January, and till date we are having the AUM of somewhere around 35 crore in this particular product. And the product is running very good.
Quite a staggering number. In 3 months, if you have been able to get 35 crore from one state, then and any other state that you plan to empanel such loans?
Yes, we are in talks with multiple states, and it is not the right time to tell me the state names, but yes, we are in talks with multiple states to be onboarded in financial year 26-27.
Gunjan, what is the exposure when it comes to your loan book with regards to government? Because I believe that if policy changes happen, I just want to understand as to how growth will be impacted then.
So currently it is only 30 crore, but yes, we are in talks with multiple states. If one of the big state will be empaneled with us, then the number will for sure will change. But yes, what we can say is that the entire digital product, whether it is Mediclaim or the loan to the employees of the state governments, in total they'll be somewhere around 60 to 70%. And rest will be our EV oriented corporate loans and solar panel financing.
And how are you looking at your overall improvement in borrowing costs, considering that you've done a recent fundraise?
Borrowing cost will reduce for sure. It has already started reducing over the period of 1 year. We have reduced somewhere around 1.25 bips by onboarding the DFIs like DFC, USDFC, DWM, FinFund. State Bank of India in the PSU segment have given us 150 crores. IOB is onboarded with us. We are in talks with multiple PSUs and they'll be onboarded soon. Plus the PTC transaction which we did with Aditya Birla, where our first rating was A+ from CRISIL. The same was landed to us 11%, and in next transaction I expected the cost of borrowing to be lower side. So yes, our target is to reduce the borrowing cost, and we are getting ample support from all our existing lenders as well as new lenders. And it is achievable. Like for this financial year also, we are expecting to reduce it further by 1% at least.
Okay, interesting. All right, Gunjan, thank you so much for taking out the time and helping us answer all those questions with regards to Moving Green.
Thank you.
All right, so that of course was the management of Moving Green, but let's also welcome in our guest for the day, Tapan Doshi, research analyst at CA Tapan.in, joining us now. Tapan, a very good afternoon to you. You heard the management of Moving Green. Any view on this one and the entire space as a whole?
Good afternoon, Mahima. See, if you see the EV financing demand is quite strong, and if you see AUM growth also for them, it's almost 25 to 30%. See, hopefully they'll be improving the margin, and the way they were talking, they were quite confident. Also, if you see the scale up is going to increase in future also, so hopefully they are able to maintain the margins, because from last 1 year, if you see the profitability has been impacted. Of course, Green NBFC CAGR is more than 20% plus, But the only thing which I am facing issue is that the valuation quite high. If you see price to book value is above 6 and ROE is around 7. So at this ROE, and again, no, price to book value looks on a higher side. So for me, I think currently we can give a pass. Hopefully it may come down. Then someone want to get in, they can get for a long term. But yes, things look good, but we have to wait for the correction.
Okay, all right. So that's the view coming on Mufin Green. But time to take a look at the F&O space, and we have Sharad joining by to give us a perspective. Sharad, over to you.
Well, thanks a lot for that. You see, there is a kind of a movement happening in the markets. Last time at 10:45, we saw there were much more greens than reds, but now it's kind of reversing. But overall, you can say Sensex is in the red. But yes, Reliance has caught up. The stock is the top gainer coming in the Sensex index, followed by Bharti Airtel and Tata Steel also. But what's not working, the sell-off has intensified, especially for counters such as SBI, Axis Bank and Eternal, where the numbers are going to come out today as well. So we'll be tracking that. Apart from that, stock-specific moves, let's see what's happening there. Long build-up is there on Crompton Greaves. Stock is up 5%. And Glenmark Pharma also. Remember, the rollovers are one of the highest for Crompton Greaves also. It's 90% plus for the next series. Also, apart from this, short covering, we have, short build-up, we are having Zydus Life. That's where the sell-off is happening. We have already discussed Eternal. That's under the pressure. And apart from this, let's look at the long unwinding candidates, the PSU banks space. They have taken a big beating on the ECL norms and HCL Tech. That stock is also down 2%. What's there in the short covering is Nippon Life. Of course, it has come down. It was up almost 5%, but nevertheless, it's still holding up in the market and stock is up almost 4%. While Oil India, largely on the Brent crude jump, is up almost 3.9%. So these are the important stocks which you should be tracking in the F&O space.
Well, thank you, Sharath, for that. Moving on to EPAC Durables. Well, with rising temperature, the share prices of EPAC Durables have also been on an uptrend. The stock is up nearly 10% today. Is it because of a harsh summer that could lead to more demand for ACs and thereby benefiting EPAC Durable? Is that the reason? Let's get in Puneet to understand more.
Well, thank you for that. It's also up almost 50% in the past month. So that low hit in the end of March, 38 March specifically, we started to see some up move there. And second such move that we're seeing in 2 consecutive days for this particular counter. Definitely harsh summers could be one of the big boosts that we could be expecting going into Q4 earnings also, when we'll get more color about what's the demand scenario like for EPAC Durable. But just getting in that, because there was a lot of slow start essentially at the start of April, where we've seen trends largely being subdued for the summer portfolio, and this was impacted also largely because of what we've seen in the couple of previous quarters. So Havels has actually reported its results already for Q4, operates the Lloyd's brand, and some key commentary coming in from them was that April first half was relatively slower, and now they are starting to see pickup, especially in the south and west of India regions. They've also specifically mentioned that for EPAC, of course, they have other products apart from ACs, but that contributes majority of almost 60 to 70% of the company's revenues as well. For the 9-month picture, when you look at it, it's been a very, very horrid picture in that sense, to say the least, because ACs are down 36% in terms of revenues at 737 crores, while the other smaller domestic appliances are up with a similar percentage of 36%, but a lower share at just 279 crores as well. What to watch out for in Q4 is something key, because while inventory was built up in Q3 ahead of the BE standards, Bureau of Energy Efficiency standards, which came in from January 1st, which was a kicker essentially, that Q4 was slightly softer because of the build-up that was already there before Jan 1st. We've also seen prices increase by 8 to 15% in Q4. So how does that have an impact on demand will be something to watch, but commentary will be very crucial for EPAC Durable. Stock price definitely reflects what we've seen in Havels as well as over the last couple of quarters due to the BE standards coming.
Okay. Tapan, post this sharp up move, is there more room here? Should investors put in money at this point of time or completely avoid this counter right now?
So with all the AC stocks are going up, and one of the key reasons these stocks have fallen a lot. Of course, last 1 year, if you see, the profitability is not so great. But because of the AC demand and we have a hot summer, I think this is what is taking all these stocks up. But we have to keep an eye on the Q4 results, because it is an anticipation that things will be better. Now, if I see the overall valuation is on a higher side. It's not an inexpensive stock. And again, no, the problem is we have to see the volume pickup, how much inventory is going out and all that. Hopefully they'll able to maintain the margin also. So of course, if someone has a stock, please hold the stock because the currently demand is strong, but you have to see the Q4 result if you want to take it further also from here.
All right, okay. So that's, of course, the view coming in on EPAC Durable, the stock trading around 9.5% higher. And it's, in fact, held those gains throughout the day of the trade, as you can see in the charts as well. But time to slip into a very, very short break where we'll be talking about more small cap buzzers on the other side of the break. So do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor,
Welcome back. You're watching Small Cap Buzzers here at NDTV Profit. Now, MobiKwik has been in focus since it's gotten the RBI nod for the NBFC application, and we have Shivam joining by to give us the perspective. The stock, of course, has cooled off from its day's high point, but Shivam, what's worked? I mean, considering this news, how big is it, and what, how does it, make this a positive news trigger for MobiKwik?
Well, yes, the stock has given a positive move of 13% in past 2 days, and it has touched a 4-month high on intraday session on intraday basis in today's session. Starting with the key points that are important and that has led to this up move in this stock, that RBI has given an approval for NBFC license to the MobiKwik group, and with this, this is a major milestone that the company has achieved, and it will strengthen the company's full stack fintech vision and will also expand, will help them in expanding in the regulated lending business. The NBFC license will enable to make them to launch a new lending division, which will be MobiKwik Financial Services Private Limited, and with that they will be launching more credit products and serve a broader base. And talking about the broader base, the NBFC will be built on a current customer base of around more than 186 millions, and with this the company aims to boost their margins, and also via the co-lending model. Also, the company will offer secured and unsecured loans through various segments, and the company's main focus is in Tier 2 and Tier 3 segments across the nations.
Okay, all right. Shivam, thank you so much for those insights on MobiKwik. But, in fact, the company is aiming to infuse capital and provide end-to-end solutions for its customers, says Upasana Thakur, the ED and co-founder and, of course, the CFO of MobiKwik. Listening to what she had to say.
Our NBFC application has been approved in a record 4-month time period. And I'm very excited that given our user base, given the risk and collection capabilities we've built, our tech infra, and also the trust in the brand that we've already built in the last few decades. This is going to help us further extend, and deepen our relationship with both our MSME merchant customers as well as end users by offering them credit products to their liking.
So you heard the management, of course. Tapan, your view on MobiKwik considering this news development?
The news is quite positive for MobiKwik. Till last quarter was the quarter where they become profitable. Hopefully, they'll have a good lending growth through NBFC license, and profitability will be there in next 2 years. Because there is a lot of inconsistency in the profitability front. If you see revenue, CAGR mostly should be in a double digit for next 2 to 3 years. And because of high competition, one has to look at how they are able to capture the market and all that. So one has to be a little bit careful in this stock. Of course, if someone have a high risk taking ability, then only better you go to it. Of course, if it becomes consistent profitability, I think stock may go up. But as I told you, if someone has a high risk capital, then only go for this stock.
Right. Moving on to a couple of counters that have been buzzing on the back of strong earnings. But I guess Rallis has fizzled out post the numbers. Let's get in Varsha with more details on what led to this strong numbers for Rallis and Repsol.
Well, overall, a good set of numbers when it comes to Rallis, though the stock has come off a bit. But speaking about the Q4 FY26 numbers, the numbers were driven by, of course, volume growth versus value growth. Revenue growth was supported by volume expansion and the stable pricing that the company has seen, and the demand was mixed across crops and geographies. A lower pest pressure impacted demand in some crops, I would say. Talking about the growth split, the growth was driven by 5% volume and 1% price growth. Onto the FY26 numbers, though, performance was driven by volume growth and cost optimization. PAT increased almost 184 crore versus 125 crore in over FY25. Talking about B2B exports and their custom synthesis, the business grew 17%, and over here, if you see, the growth was supported by volume expansion in international business division and also improved realization across key molecules, which includes custom synthesis. Talking about seed business, saw 15% growth in FY26 and 23% in Q4 FY26. Onto our next counter, which is Repsol Energy. A good set of numbers, but margin pressure is what company has seen. If I were to talk about numbers, revenue was 401 crore, EBITDA was up 86%, though EBITDA margins were at 36% versus 45% last year. So there's a huge downtick in terms of margin, but we all know that as we scale up in terms of revenue, because of the product mix, margin may have to take a hit. While net profit was at 125 crore versus 42 crore last year. Onto the key highlights, there was a high capacity utilization of solar cell, almost more than 90% of the capacity utilization which the company has seen. Solar module, in fact, saw 74% of utilization in Q4, more than double what they did in Q2 FY26, and their second line was commissioned in September 25, taking to the overall capacity of 1.2 gigawatt. Lastly, onto the order book, Q4 FY26 order book stand at around 1,161 crore, out of which solar module is at 695 crore, followed by solar cell at 466 crore.
Right. Tapan, quickly your view on Repsol and Rallis India.
Rallis India, again, this quarter it was a loss. Of course, it has been lesser loss, and overall, I think still the struggle will continue, even though it's a peak season. Hopefully, margin improvement will be there from here. But I think the overall revenue growth is not so great. So my take is, I think one can avoid Rallis if they want. Talking about Repsol, of course, strong comeback. But the stock also fallen a lot. Hopefully, things will be better. Capacity expansion going on, and solar demand is also there. But so one can hold the stock for a little bit longer if someone is in Repsol.
You're right. Tapan, thank you so much for helping us answer, helping us understand all those small cap buzzers that we discussed. But with that, viewers, completely out of time on this edition of Small Cap Buzzers. If you have stock-related queries, then do stay tuned. Ask Profit comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
बनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel.
Hello, welcome. You are watching Ask Profit. You can go ahead.
No, it's okay. Welcome back to Ask Profit, the afternoon edition. My name is Puneet Zaveri. With me, as always, is Mahima Vachajani. And over the next half an hour or so, as we try to decide who starts the show, we'll start taking your questions as well at this point of time. So do start sending in on the number that's flashing on the top of the screen. You can also call us as well on the number, which is the landline number flashing up there as well. But very quick check of how the markets are doing, because it's been a decent session at this point of time for the markets. We've seen buying at the upper end, but then starting to see selling over the last hour or so. So Nifty is down to roughly around 0.4% at this point of time, just barely with the slowest margins actually keeping the 24,000 mark. When you look at the heat map also, that shows you that some key stocks like Maruti as well as Eternal will be in focus today on the back of their results, and could come any time now. Generally, Maruti does come during market hours, so we'll continue to monitor those earnings. Stocks down 1% now, almost 0.5% as we speak, but ONGC, Coal India as well as Adani Enterprises are the top three gainers. So is Nestle doing well in trade, while Eternal actually just before earnings is the biggest loser on the Nifty 50 today. The key commentary on the quick commerce will of course be something that we'll be watching out for, and Mahima will be tracking that. But Axis Bank, HCL Tech and Indigo are the other losers today. In terms of what we've seen in terms of the sectoral heat map as well, PSU Bank continue to be and bearing the brunt essentially at this point of time for the markets. The Nifty Bank is also down on the back of those news flows coming in on ECL norms by the RBI, while the CPSE and oil and gas actually has now increased to the biggest gainer for today. But the advance decline ratio also very interesting, because almost 1,500 stocks were advancing in trade today in the morning versus 1,000 declines. That has essentially reversed completely in the last 3 to 4 hours of trading session. So last hour becomes very crucial. But Mahima, overall, the broader markets is also showing you what the advance decline, the pressure visible on the advances today.
Yeah, absolutely, and probably expiry also playing its part, right? The mid cap 150 is completely, turned into flattish mode right now, but almost trading at its day's low point. The small cap 250 still holding up a tad bit, but off from its day's high point completely. Let's quickly try to pull up the BSE 500 and see as to what that picture is looking like and as to what counters are doing well. Cohen's Life Sciences has also given up the gains it's seen in the morning, but still trading around 12% higher. Tata Chemicals, Uflex are some of the names that are doing fairly well. On the flip side, you have Rosary Bartek, India Cements, Tanla Platform, Gujarat Alkalis that are seeing a downtick of 3 to 6% each. But let's start taking your questions. We're joined by Akshay P. Bhagwat, Senior VP of JM Financial, and Radharaman Agrawal, Managing Director and CEO at Swayam Advisors, joining us now, who will be answering all your stock-related questions. Welcome to both of you, gentlemen, and a very good afternoon to the both of you. The first question that we have is on banking names. Our viewer, Sai Kumar, wants to know that from a one-year perspective, this is a good time to make an entry into something like an HDFC Bank, ICICI Bank, or Axis Bank. Akshay, I'll come to you on this one. Do you think any one of these, or maybe a few of these, advisable to make an entry right now?
First of all, good afternoon. Yeah, from an entry perspective, I think ICICI Bank is the best among the three. If you're looking from a one-year perspective, then the suggestion is do not buy at the current price, but you need to divide your buying in three tranches if possible. So 1299 is the current market price. From the current market to 1200 in this 100-point range, divide your total buying cost in three tranches. That is the advice.
Okay, all right. So that's the view coming in on the banking space. We've got our first caller. Sanjay is calling us from Mysuru. Sanjay, very good afternoon to you. What's your question about?
Hi, ma'am. Good afternoon, ma'am.
Go ahead, ask your question, Sanjay.
Ma'am, Kalyan Jewellers India shares 1,217 in average price of 407, ma'am. Shorter 3 months, ma'am. Please technical analysis, ma'am. Seller hold, ma'am.
Okay, got your question, Sanjay. Akshay is sitting on mild profits of around 6,000 rupees right now. Would you advise him to continue to hold Kalyan Jewellers?
See, it's more of a neutral setup on technical charts, and if your time horizon is limited for a month or just around it, the suggestion is better to take an exit.
Exit is what Akshay recommends as well, but let's go across, take the next question now. This one's coming in on Zydus Life. Now, stock was one of the biggest movers, I think, this week itself. Almost 12 to 13% we saw on one single day. Today is down 3%, and our viewer wants to know if it's the right time to actually enter this counter. Radharaman, very good afternoon to you. Would you recommend that?
Yeah, good afternoon. I think he should hold on a bit in terms of there was a run-up which happened. So you should wait and maybe appropriate time, let the correction come in a bit, and then you should enter that stock right now.
Okay, all right. The next one that we have is on Zydus Life Sciences. Okay, sorry, this is done. The next one that we have is on Vedanta. Our viewer, Shiv Kumar from Bengaluru, wants to know as to what levels is it attractive to buy Vedanta from a long-term perspective is what he's asking. Radharaman, considering that the demerger is set to happen on 30th of April, would you recommend a buy right now on Vedanta at these levels from a long-term perspective?
Yeah, from a long-term perspective, one can look at Vedanta, but at the end of the day, one should look at, because you are getting into multiple set of companies, right from aluminium to power, and then the whole zinc piece. So effectively, the investor should be looking at that you will get a demerged entities into this, and one should be looking at holding for long run and then decide which ones to hold on and which ones to discard. So effectively, he'll be getting into multiple companies with different sectors. So it's better that we look at and identify that before getting into it. And there's already a run-up which has happened in the stock, if you look at from before demerger. So if you want to hold it for a long-term period, definitely can look at, but not for a short-term or a medium-term.
Not for a short-term or medium-term is the view coming in on Vedanta for now. But let's go across, take another caller from Hyderabad. And Aruna has a stock query for us. Aruna, very good afternoon to you. Welcome to the show. What's your query?
Yeah, very good afternoon to all of you, sir. Thank you. Yeah, I'm having Biocon. I'm having a holding of Biocon, 350 average of 400 shares.
Okay.
So what is the short-term and long-term view on this? And if I want to add, what is the price to add?
Got it. Well, so Aruna, you bought it with the fundamental view, right? When you bought it initially, and then you want to view now if it's a good time to add more. Is that correct?
Yes.
Yes, got it. Well, Radharaman, coming back to you on Biocon, because we've seen the stock largely trade in this range also between 300 and 400. But would you recommend Aruna to continue to hold, and is there a good time to buy as well?
I think she should refrain from buying and adding now. She can hold the current position. And she bought it at the almost similar price. So I think she should hold on and then wait for a time to come. So there's no point adding right now, but she can hold on to the current position.
Next one is on Home First Finance. Usha from Bengaluru is holding 300 odd shares at the levels of 1134. Wants to know from a 6 to 12 months perspective, can she add more at the current levels? Akshay, your view on Home First Finance?
See, from a 6-month perspective, I think you can consider adding more. But for short term, that's for a week or for the next 15 days, you can expect slight correction in the stock where you can average. The levels based on technicals would be somewhere around 1075 roughly. So if you get that dip of 1075 plus minus 20 odd points, consider buying it from a 6-month horizon. The possible target projection works till around 1400 for this time horizon.
Okay. We've got our next caller. Bharat is calling us from Andhra Pradesh. Bharat, a very good afternoon to you. Go ahead, ask your question.
Good afternoon, madam. I am holding 100 shares of United Spirits at the price of 461. So I am looking for 6 months view.
Okay. Got your question, Bharat. I'll take this up with Akshay again. Then, Akshay, your view on United Spirits with regards to where charts go?
So on the charts, the clarity is 1250 is a massive support for the stock going by the last 1.5 years of price action. It is recovering time and again from the support zone. And right now from a 6-month horizon, there are 2 targets which you can consider. The first target should be around 1465. That's a strong resistance, hence it's target 1. And if that breaches, then you can hold on for targets till 1550. So roughly these are the 2 targets you can work with from a 6-month horizon.
Got that view, Akshay. So that's a view coming in on United Spirits, a technical view. But next question coming in from Urmila. She is holding HDB Financial from the IPO and holding 90 shares. So that's roughly around 740, I think, the IPO price. Asking what she should do on a long-term basis. Radharaman, coming to you, because we've seen this quarter being very strong for the company. Stock has also rebounded from the lows of almost 580. But would you recommend her to continue holding her existing shares, and if is there enough evidence now to buy more at this price?
I think she can continue. Maybe if required, she can add from a medium to long term perspective. The results were quite good, and in fact, the outlook also remains positive. So I think either she can add and maybe take it forward, but from a medium to long term perspective only.
Okay, the next one that we have is on REC. Shankar Kinger is holding around 4,200 shares of REC at the levels of 430. Should I add more of REC or take fresh entry into PFC from long-term perspective? Radharaman, considering the merger that's going to happen, REC getting merged into PFC, would you recommend him buying REC more, or should he buy more of PFC? Or maybe he can even sell his stake in REC and go ahead and buy PFC?
I think she can do a combination of both REC and PFC. And given there's a lot of tailwind in the power sector now, and there's a lot of momentum coming in, so I think both the stocks can be looked at for buying purposes.
You also have the ratio as well for both those counters already out there, so it's more like an arbitrage play now. Eventually, all companies, both REC now merging into PFC eventually once the time frame happens. So that's something to watch out for both these counters. But the next one, Akshay, this one's an interesting one. Our viewer is asking this, the question. Is largely on consumer services companies. So Devyani, Sapphire, as well as Jubilant Foodworks. What's a better stock to pick in terms of charts is what the question is from a near to medium term. What would be your opinion?
So out of these 3 charts, I think Jubilant Food is the best if you are going strictly by the price charts. The reason being that Jubilant Foods, if you see the price charts, going by the last 2 to 3 years of price history, there is a very strong support at the levels of 410. And time and again, there is a tendency of the stock to show a strong bounce back from the support zone. Lately, we have seen the similar kind of price action happening at 410. And if the same pattern continues, then in all likelihood, you can work with upside of around 580 to 600 from a short to medium term perspective.
Okay, in fact, Sapphire Foods just posted earnings a few minutes ago. Overall numbers looking fairly well in terms of where the 4 numbers go, that is revenue saw an uptick of 11%, EBITDA an uptick of 17%. Margins have also improved. Of course, there is a one-off gain that has also come in at 12.8 crores, but overall numbers seeming fine. I think the same-store sales growth and volume growth is something that we'll be looking at once the presentation or press release is out. But that's with regards to where Sapphire goes. But Infosys is the other one that Venkat from Chennai wants to know about. He's got around 40 shares, wants to know from a long-term perspective, can he continue to hold? Radharaman, your view?
I think IT has gone through a deep correction if you look at, and it is continuing given the whole AI piece. So I think he should hold on. This price not to cut the the current piece, and he should hold on. But the thing should be, he should not be adding at these levels. He should wait on the current positions.
Got that view, but the next one is a very interesting one. This one's from Venkat Raman, who's a senior citizen from Bangalore, and very interesting that he has almost 15% of his portfolio in the auto stocks, and he's given 11 names across the one. So you have the majority ones, Ashok Leyland, Bajaj Auto, M&M, you count it, and he has it in his portfolio. Now, he's saying that out of the 11, almost his gains of almost 10, except Tata Motors right now. Now, Radharaman's question is very interesting. He has 11 shares, he wants to cut it down to 5, and he has all major OEMs within this. So, the two-wheeler pack, the four-wheeler pack, he has all of those names. What would your recommendation be in terms of preference of order for those 5 to 6 holdings that he can hold and 5 to 6 he can let go? What's your opinion?
So I think auto has been doing quite well. If you look at, given the whole GST push, there's a lot of tailwind which has got in the sector. So from a four-wheeler, two-wheeler perspective, he should do a 2 split. One, he should get into maybe 2 or 3 four-wheeler companies and 1 or 2 two-wheeler companies. So if I look at in order of priority, you can look at a M&M and Tata Motors to that extent, and then typically on a two-wheeler, you can look at a TVS and iShares to that extent.
Okay.
So maybe he can look at a split 4 to 5 stocks only, and he can add maybe a Mahindra to that extent in the portfolio. So he should restrict his holdings to maybe 4 to 5 stocks only.
Okay, all right. There's, we were just talking about Fire Foods, and that's the KFC same-store sales growth that's come in at a 14-quarter high. We've been seeing persistent negative same-store sales growth coming in for something like a Sapphire Foods, but this time it's coming at 4%. So there's some recovery when it comes to the consumer sentiment overall when it comes to Sapphire Foods. Overall, KFC, of course, at 14-quarter high, but overall same-store KFC overall same-store sales growth at 12-quarter high, and KFC same-store sales growth at that 14-quarter high is what we're seeing. Probably some recovery is what we should expect in the counter, though that's not reflecting yet, but let's wait and watch when it comes to the stock performance. But let's move on to the next one. We've got SBI Life Insurance as the next query. Our viewer wants to know if this is the right time to make an entry from a short-term perspective. Akshay, your view on SBI Life?
So for SBI Life, the price charts are signaling that we are potentially trying to bounce back from a support zone of 1760. Yesterday, that validation has come in terms of price action at the support, and in all likelihood, from a short-term perspective, 1900 to 1925 can be the pullback targets. So continue to hold or buy with stop loss below 1740.
Got that view, Akshay. That's on SBI Life, but go across to the next question. This is Arvind, who's a regular viewer, and he's asking on CSE. Now, largely being if it's a good time to add is what his question is, Radharaman, and we of course he's asking that if there could be any potential price rise post elections as well. But largely, what's your view on CSE? Is it a good time to buy?
So I think it's a good time to maybe add on the CSE counter. The counter is also a lot of tailwind. And the elections also getting through. And normally you've seen that CSE, the rates also go up post the election. So I think the elections are getting over. And with that, one should be looking at maybe some increase in the tariff as well. So that should be good in terms of adding to that extent.
Okay, the next one, Kotak Mahindra Bank. Jose wants to know about this counter from a long-term perspective. Radharaman, your view on Kotak Mahindra Bank?
The banks look positive. I think the bank is expected to do well, and one should do an addition to the stock from a medium to long-term perspective.
The next one coming in, actually sticking with the banking space, is on Canara Bank, and Srinivas from Hyderabad is asking us this question. He's holding shares at 141, holding 5,700 shares. So stock just a tad below that level. Radharaman, we've seen those new ECL norms come in, and largely all the PSU bank take a knock. Would you recommend him to lighten his position a little bit? He's holding 5,700 shares, or continue to maintain and probably wait for Q4 earnings?
I think he should wait for the Q4 earnings. I think the ECL norms will set in, and that will apply to all the PSU banks. So it's more of a temporary blip which is going to happen, and he should wait and move ahead. The bank, the numbers have been steady, and I think he should wait and take it forward.
Okay, Radharaman as well as Akshay, it's time for our rapid fire round. Try to keep your answers short as possible. The first one's on Cohance Life Sciences. Mr. K. Chaudhary has bought 400 shares at the levels of 472. Exit or hold from a short-term perspective, Akshay?
Hold for targets of 540.
NCC bought at 144 by Mohit. Akshay, his question is it advisable to reach 220 by the year end?
Difficult. At least 190 looks possible.
Good entry price for MTAR Tech. Ramana from Bengaluru is asking. Akshay?
MTAR Tech, you can continue to hold.
Sanjeev Pathak is holding on to Electro Steel shares at almost 81 rupees, Akshay. He's asking if it's a good time to exit. He's holding 3,000 shares of this counter.
Yeah, it's an exit.
Federal Bank, what are the levels of 99? Continue to hold for a long-term perspective, Radharaman?
Yes, hold on.
Spandana Spurti bought at 575 by a viewer. He's asking a 2-year view. Radharaman gone through his fair share of challenges. Should he exit, book his loss, or wait for some more time?
You should hold on.
RVNL bought at the levels of 290. 540 shares is what Agnihotri is holding from a short-term perspective. Akshay, continue to hold.
Book out around 320.
SJS Enterprises bought at 1714, Akshay. And a viewer is holding 400 shares. This is Murli. Should he continue to hold for some more time, near to medium term?
Better to book out.
Union Bank, 250 shares bought at the levels of 180. Raj from Bengaluru needs the technical support for this one. Akshay?
Union Bank, the technical support for short term is 165.
Vari Renewables bought at 1731 rupees per share. Sada Sahib is asking if he should hold his 400 shares here. Radharaman?
You should hold on.
Okay, the next one is on Garden Reach Shipbuilders. Sachin from Uttarakhand wants to know from a long-term outlook, can he continue to hold at this counter? Radharaman, your view?
So you should hold on Garden Reach.
Advait Energy, is it a good buy at the current level is what Manjeet is asking. Akshay, what would you recommend?
I think it's better to wait for a dip of around 2 to 3% before fresh entry.
HDFC Bank, 3 to 6 months target on this one. Epan from Kottayam is writing us. Akshay, your view?
I think first 740, 720 is the right price point to enter the stock.
Lalita from Bangalore is holding on to Samman Capital at 185. Now, Radhaman, we've seen the announcement at 140 rupees is where the new promoter has bought in. Would you recommend her to exit or hold on for some more clarity?
Hold on.
TCS bought, at the rate of 2050 and 170 shares what Raghavan is holding, and he's bought it 6 years ago. Should he continue to hold, Radharaman?
You continue to hold, yeah.
Raj from Bangalore is asking a question on Union Bank. He's bought at 180. Akshay, what would you recommend a near-term view?
165 can be tested. There you can add more.
KPIT Tech, from a 1-year perspective, is this a good hold? 100 shares bought at the levels. The levels are not given, but 100 shares have been bought, and he's sitting on a 40% of loss. Akshay?
Exit.
Mr. Gupta from Pune is holding sale at 120 rupees per share. Radharaman, on the stock, should he continue to hold given the buying price?
I think you should book it now.
Book it now, okay.
Geo Financial Services, 3 months view on the chart. Akshay?
Positive view, possible target zone 275 to 290.
Akshay, a question for you. Aisha Motors, is it a good time to enter now with a slightly more longer term view, 9 to 12 months?
No, wait for dips till 6600, 6600.
6600, got it. Where it bounced from those levels right where we saw the end of the Israel-Iran war. So it could be an interesting level to watch. But Akshay as well as Radharaman, that's all the time that we have on this edition of the Rapid Fire as well as Ask Profit. Thanks so much for helping us solve almost 31 queries in the last half an hour, and overall taking the total to almost 86 queries for the day. But viewers, that's all the time we have on this edition of the show. Thanks so much for watching. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday.
Welcome, you're watching India Market Open. What you're seeing on screen is more to do with expiry than any real concerns, I would say, on the index. And of course, the RBI guidelines on ECL weighing heavy on banks. Very good afternoon to all of you. You're seeing about a 90-point crack on the Nifty, staying above the 24,000 mark though. But advanced decline ratio is looking good. Sharad, this is a market that's not quite nervous but more cautious, I would say.
Exactly, and we have 3 more trading sessions in the week. But one thing, Tamanna, is the 2:1 advanced decline ratio. Look, the mid cap is still in the green, and even the small cap indices we see value buying is still happening. Of course, it's a stocks pickers market, and Q4 numbers is something which we'll be watching out for. 2 important earnings is coming, Eternal and Maruti Suzuki as well.
Yeah, actually 2 more trading sessions, Wednesday and Thursday.
Right.
Unless you're planning a trading session on Friday. Okay, let's pull pull up the heat map for you and look at what's happening there. Eternal, Maruti, both under a bit of pressure ahead of their numbers. Eternal, the top loser, 3.5% down. Indigo, nearly 3% down. Airlines and their association have written to the government saying we need help. Otherwise, we're going to have to start closing down routes. That's really playing out on screen. HCL Tech not looking good, nor is Axis Bank. If I'm looking at the gainers list, ONGC crude at 111 last that I saw, and we'll pull up the latest Brent prices for you. 5% up there. Adani end going strong on a day when this Google data center has been announced in the groundbreaking ceremony taking place in Visakhapatnam. Coal India, great results. Nestle, also good results. Still going through. Good results were actually last week. RL, DRL. So it's the heavyweights that are holding up.
Exactly. Speaking of heavyweights, even Reliance is holding the Nifty properly. Even Hindalco and Bharti Airtel, we see a good up move has come in. Pharma names, we are seeing a little bit of value buying coming in the last 15 to 20 odd minutes as well. But Tamanna, today is the monthly expiry for Nifty and Nifty Bank. So we should be looking at the rollover data also in some time.
Yeah, the rollover data becomes very key. Let's pull up the sectoral heat map if we can, and then take a look at the broad indices as well and what's happening there. PSU banks taking a knock because RBI's new norms means they will need higher provisioning, and the way they calculate their risks changes. This is a guideline and the banks were hoping it will happen later. They wanted a postponement. RBI saying, no, you need to do it now. Bank Nifty, private banks, all of them taking a beating. Nifty IT also under a bit of pressure. It's all in gas, energy, metals that's largely working. Small cap and mid cap, I just want to pull in the intradays to show you what the movement's been like, because mid cap...
It has just turned green.
Yeah, completely flat right now, but off the day's high and very range bound kind of trade. On the small cap as well, extremely range bound kind of trade, but off the high entirely.
Yes, let's just pull up the BSE 500 index to show you the stocks, and after that, of course, we'll move on to the triggers also. And lastly, we see Cohance Life, second straight day up move coming in. Uflex also a back of earnings. These stocks are doing well. Even Tamil Nadu Mercantile Bank, good commentary coming in, of course, and no guesses. ONGC and Oil India are doing well. And what's not working is, of course, the earnings impact, especially if you look at Rosari Bio, Tanla Platforms, and ahead of the earnings, Eternal is also down 3.5%.
Yeah. All right. Some of the other factors that we're looking at today and what's happening in markets. Nifty is holding on to 24,000 on expiry day. That's very, very positive. Overall, though, it's a dull day. Volumes are completely flat. The Nifty is range bound and value buying is being seen across mid and small cap names. I would say banks are the culprit of the day, largely PSU names because of those ECL norms, the new lending norms and the contingency lending norms that the RBI wants. Now here's what will happen if 24,000 breaks, and you're seeing the index hovering around those details. If 24,000 does break, 23,700 to 23,800 becomes crucial. Dips towards this zone are expected to attract some amount of value buying. The immediate hurdle now at 24,115 to 24,150. Decisive moves above this now become essential. Let me talk a bit about the Bank Nifty. It's a laggard showing indecision even during broader market recoveries. Currently, it's locked in a battle with its long-term moving averages. Support at 55,000, resistance at 56,000. We'll talk a bit about the rollover data in a bit as well, because that becomes crucial. But yeah, here you have it. That's the April rollover data coming in. 67% on the Nifty, 74% on the Bank Nifty as well. But let me go across to Sunny Agarwal very quickly before we get the rest of our conversation on. Sunny, very good afternoon to you. Would you say that Nifty expiry is weighing more heavily on the markets than any other real factor? And what are the results that you're now keeping an eye on?
Yeah, good afternoon, Tamanna. I think, yeah, definitely, I think expiry on one hand. On the other hand, we have seen that crude oil have spiked to more than $110. So that is another factor which is weighing on the benchmark indexes as we speak. And at the same time, USD INR is also under pressure as we speak. So maybe that are the few factors that is putting pressure on overall key crude oil sensitive stocks. And in terms of numbers, today my eye will be on Eternal number. So Eternal will be declaring the result. Maruti again, market leader on passenger vehicle side. So that's an important number to track during the day. So these are the two numbers which I would like to track as the day progresses.
Right, Sunny, good afternoon. Sharad here. Of course, auto numbers will also be coming out in the coming days as well. This sector, of course, looking, especially in the fundamental portion, it's out of touch right now from the markets. We saw that last month also in the sell-off. But is there any value emerging in the auto sector?
Yeah, within auto sector, what we feel is that the two-wheeler as a pack may continue to do well going forward. So what we believe is that Eicher post GST rationalization, in fact, their 350 and CC and above portfolio has seen some dent in terms of volume growth post increase in GST during the GST rationalization phase. And now that portfolio is back on track. International territory continue to do perform well in terms of volume growth. So Eicher Motor is the one stock which we feel can be an outperformer going forward. TVS Motor, no doubt, I mean all the three segments, whether it is an ICE, whether it is an electric two-wheeler segment as well as three-wheeler segment, also continue to deliver a strong set of numbers. So TVS Motor again is a one stock which we feel that can be added on. As we speak, there are some concerns on El Nino, which can have some impact on tractor volume growth, which has been a clear-cut strong outperformer during FY26. So that is the reason we are seeing that stocks like M&M or for that matter, tractor-related companies like Escort or Swaraj engines are under pressure as we speak. Commercial vehicle, on other hand, there is an expectation that post-election there can be some spike in diesel price, and that can lead to some postponement on demand on commercial vehicle side. So again, that pack is under pressure as we speak. So I think two-wheeler seems to be relatively well placed as we progress ahead towards the monsoon over the period of next 2
Yeah, that's interesting because you're one of the few voices who is positive on autos today, Sunny. A lot of people we've been speaking to have worries about second-order effects on the entire space because of the West Asia war, etc. But I'm going to focus on Eternal. You started this conversation by saying that Eternal is something that you're looking at. It's set to release its Q4 numbers. Also important in terms of the commentary from the management, because this is Albinder Dhinsa Solo, right, who's running Eternal now. What is the street expecting? Mahima is joining in for more on that. Mahima.
Basically, the expectation is that overall, in terms of demand recovery and revenue growth, that is mainly going to come from Blinkit. The expectations are also that margins might see a slight uptick this quarter. Now, overall, in terms of the growth numbers on year-on-year basis, revenue might see an uptick of over 2 times. EBITDA might see a growth of 5x, and margins might be at 2.4% versus that of around 1.3 odd %. This is the analyst estimates, Bloomberg estimates suggesting this number, and profit might see a jump of 2 times as well. Now, in terms of what to expect, steady improvement in net order value growth is something that all the analysts are penciling in. Double digit both in terms of your food delivery as well as Blinkit on year-on-year basis. High double digit for Blinkit and low double digit for food delivery. Kotak has forecasted that Blinkit store could reach to that 2,200 number mark. That means around net addition of 173 dark stores this quarter. Morgan Stanley, however, says that quick commerce revenue and profitability forecast might be subdued because of competition also coming in because of higher discounting, and Blinkit is the only platform which has gone ahead and increased their handling charges as well. In terms of key things to watch out for, I think whether Blinkit will be able to sustain the high growth that it has done in the last quarters or not. High platform fees and competition, how is that dynamics faring out? And plus, this is the first quarter after Albinder has actually taken up the role as a group CEO, so we'll have to watch out for as to what his comments are going forward as well. So this is the overall view of what you can expect from Eternal's Q4 earnings.
Okay, let's watch out for Eternal. A bit of pressure on the stock before the earnings. I must say about 3.5% down right now. Vinay Rajani joining us this afternoon. He's CMT, Senior Technical and Derivatives Analyst at HDFC Securities. Vinay, very good afternoon to you. Let's get a Nifty and Bank Nifty view first.
Yeah, so Nifty is into consolidation for last since morning. We can see that it is finding resistance and it is 50 days exponential moving average, which is placed around 24,200. So it's just a consolidation, but overall we feel that the way rotation is happening in many sectors, some sectors like power and oil exploration companies are moving very well today. So it is just a consolidation. We can say the primary trend on the upside. Yesterday's move was quite very good, and yes, this 24,200 is the short-term resistance. Once that is taken out, then we can expect a 3 to 400 points upside on the upside. And 23,800 is a very strong support for the Nifty. So traders should continue to hold on to the long position with the stop loss of 23,800.
Right, of course, interesting views coming in from Vinay, but PSU banks, that's the sector of the day. We have been talking about it. The Nifty PSU Bank Index has fallen more than 1% and is the biggest loser on a sectoral basis. But what are the key reasons for it? And I'm going to, of course, point out the most important reason is the RBI's ECL norms, which is impacting the sentiment. Of course, the technicals have also turned weaker. We'll get to know a little bit more about that. And valuations have seen run up lately. That's also a concern for the PSU banking space. And analysts say this may be profit booking, but ECL actually means expected credit loss. And what is the actual impact, especially on the PSU banking front? There's a more impact than private banks. Now, these banks have to create further provisions. The private banks already create contingencies, but largely the PSU banks don't. And now they need to create more provisions. And when more provisions are created, let's see the other key reasons. What can be impacted? The first would be the one-time impact, around 5 to 10% of the net worth. That's, of course, a negative. Also, apart from this, the cost of fund, that's expected to go up. The normalized credit cost, that is expected to go up by 20 to 25 basis points for the PSU banks. And brokerages have stated that the PSU banks would be a higher impact. But I did a yearly chart of returns of public sector banks and the private banks in their indices. Each year, look at that. 2026, it's still positive despite the volatility. The private banking index is down 8%, and the last 3 years also the story remains the same, a stark outperformance and the valuations going up when it comes to the public sector banks. 2023, look at that, 2024, 14%, 2025, 30%. So this has given so strong returns over the last 4 to 5 years and 5-year average of 38%. But let's look at the valuations, what happens, and that's a concern coming in. Almost Canara Bank, that's almost 2.5 times price to book. So yes, the valuations of PSU banks are on the expensive side. And let's see the return potential to give you the entire perspective on the PSU banks of how things are moving. And largely it's around 12 to 15% for the next 12 odd months. Sunny, I just want to get you on this. First of all, the impact, especially on the PSU banking front. This is, of course, adverse impact coming in. But in this space, any choice which is there, would you like to talk about it? Of course, we cannot talk about SBI, but apart from that, any other companies in the PSU banking space which is attractive at these levels?
Within a PSU basket, what we feel is that Bank of Maharashtra has been consistently delivering a very solid set of numbers. In fact, this quarter 4 was also very blockbuster for Bank of Maharashtra. But again, we have seen a very strong run-up post declaration of numbers. So maybe buy on dip is the right strategy as far as Bank of Maharashtra is concerned. And with regards to this ECL provision, what we feel is that Indian Bank has already been providing for this ECL related thing. So I think they are relatively protected in terms of making provision beginning from 1st April 2027 onwards. So I think Indian Bank seems to be very well provided for ECL norms which will kick in from 1st of April. So Indian Bank, again, here also buy on dip is the right strategy, as we have seen a very strong run up during the last 1.5 to 2 years in the stock price.
Okay, just let's get your take as well, Vinay, on what are your picks on the banking space?
Yeah, so yes, Bank of Maharashtra from the PSU banking is the strongest. Technically, it is trading near its 52-week high, and it has been resilient and has been outperforming the entire PSU banking space. So there has been many divergences we can see in the PSU banking space, and Bank of Maharashtra is one of the strongest technical setup we can say. So this is looking the strongest. And yes, in the private sector banks, we have recently seen a good strength coming to the Karnataka Bank as well as the Federal Bank as well as Bandhan Bank. So small private banks are really outperforming the larger private banks. So as of now, these stocks are looking relatively stronger. But overall, I feel that there has been some selling. There has been some negativity and sentiments have turned negative in the recent past in these rate sensitive sectors. So we are a bit cautious there in the banking, NBFC, auto and real estate from this particular level. So it might happen that the power, the energy, the oil exploration companies and metal companies can continue to do well in the coming times, and this rate sensitive sectors will remain under pressure.
Sensitive sectors might remain under pressure, but just pull up the Maruti Suzuki's chart, and the net profit, it seems like it has come in at almost 3,591 crore rupees. It's below the street estimate, but interestingly, the revenue has been a slight beat coming in. These are the initial numbers we are talking about. Revenue coming in at roughly at 52,449 crore rupees, and the estimate was set at almost 50,385 crore rupees. But net profit, it seems like there is a bigger miss, at least more than 8 to 10% of what the analyst community were expecting, and we have also taken our own estimate as well. So it seems like there might be some one-offs as well. To put that in perspective, we'll get you more details. And yes, it's the day's low of the sharp fall coming, and just that 13,000 odd. Actually, it has come below that. Tamanna, interesting development coming in for Maruti Suzuki at this time where the auto sector is not in vogue right now.
I think what we want to wait and watch are the margin figures. You'll see that on your screen very quickly as we continue to calculate them. But yes, there is a sharp fall here. Remember, when we were talking about pressure in the auto sector, sentimentally, it is for what is going to happen from here on. Which is because of the West Asia crisis. The numbers you're seeing is actually for Q4 and for the full year of the financial year of 2026. So that would still not factor in all of the problems that could come through. Having said that, you're seeing a 2% knock on the stock right now. I want to just pull up some of those numbers on your screen as well, if we can, as we're going through them. Those are the numbers we have right now. EBITDA is actually slightly better than estimates at 6,167 crores versus our estimate of 5,967 crores. Revenues are also slightly better than estimates, but not all the metrics have come out positively, and we should look at a few more of those figures. The net profit is actually a tad lower, and that is what we have been seeing on your screen. Do we have Dhruv Joshi, research analyst at Mirae Asset Sharekhan? We can go to him very quickly for his first cut. Dhruv, how are you looking at the Maruti numbers?
Yeah, hi, thanks for having me. Numbers on the top line seem pretty much what we were expecting, but it's been a miss on the net profit. Still having a first glance at the numbers, just having a make through. I mean, we were expecting around 4,000 crores out of revenue, but the revenues have come in a little lower on the net profit side. So just having a first glance here.
Now, Dhruv, we're going to give you a couple of seconds because I'm sure you want to go through those numbers in a bit of detail. I'm going across to Puneet very quickly. He tracks auto for us and looks at this closely. Puneet, the margin numbers seem to be completely flat.
Well, thank you for that. Well, as you rightly mentioned, the margins coming at 11.7%. Now, it is something that has been one of the key aspects to watch because there has been a lot of commodity headwind for the company, but bang in line with the estimate of 11.7 that we were working with, and revenue as well as EBITDA has come in line. Profit has been a slight miss, or roughly a 500 crore miss, and that's largely because of the other income component that has substantially gone down. So it's come in at roughly around 499 crores versus 1500 crores last year. So what Maruti generally does is Q4 is when a lot of those investments are looked at, and hence this is very similar to what happened in Q4 of FY25, where there was also an other income component that had been slightly more different compared to the same time last year. So barring that, the numbers seem to be very in line with estimates. There was a 12% growth in terms of the overall sales and volumes for this particular quarter, and hence that is reflected in the stronger revenue profile. So we were working with a number of 50,800 odd crores. It's coming at 52,000 crores. So hence this could be one of the key reasons that the realization is also improved. Larger sales of SUV compared to smaller cars has been the other key aspect that will benefit that, and hence margins at 11.7% will be something that the street will take with both hands at this point of time. The only clarification coming in from the media and the analyst call will be what's happened actually for commodities specifically in the month of April and March specifically, because you were expecting Q4 margins to be largely okay. Q1 margins will be crucial yet again, and the ramp up of the electric vehicle venture, which has been very slow. So those will be some of the key aspects to watch. But in terms of results, while the stock's down right now almost 2%, numbers in line with the estimates as well as 11.7% margins will be something which has been very positively taken over in the medium term.
Not really immediately. The immediate reaction to the numbers isn't very positive. Dhruv, you've spent a few minutes looking at it, and we call this the first cut because our viewers also know that this is the very first cut. We will come back with more analysis, but what are the highlights as you are seeing right now?
So the numbers pretty much in line with our expectations as well. So 52,000 crores kind of number from the top line is in line with what we were expecting, about 51,800. And rightly mentioned, it's the other income that's been a miss over here, which is taking a big impact, a big chunk out of the net profitability. So otherwise, I think overall the numbers look pretty much in line with what the street was expecting and what we were expecting as well.
From the inline numbers which have come in, of course, there might be a concern on the margin pressure which might come in the first quarter itself. Of course, we have understanding that there might be some price hikes also in the offering in the coming time. How do you see that developing?
Yeah, so for this quarter, at least we're not expecting any on the margins from the geopolitical pressures that we were witnessing since the start of March. But going forward on from the first quarter or the second quarter onwards, we could see some dips in margins, primarily on the raw material cost side. So we factored in about 12.5% for EBITDA margin, but it's expected to be somewhat lower going forward as well. For the quarter, we were expecting about 12%. It's coming at around 11.5%, which isn't a big of a miss. So we'll take that any day. And coming to net profitability, I mean, it continue to be in the same part, primarily because of the rise in realizations where we see exports contributing a little higher to their overall sales now.
Okay. So what is the call on Maruti right now? If any of our viewers own it, should they hold it? If they don't own it, is this a buying opportunity with a slight dip we're seeing?
It's definitely a buying opportunity, and anyone who actually holds this can continue to hold it, because the way the company is moving ahead with all its future plans, its expansions, we've already seen that they are pretty much close to their full utilizations of their current plants. Along with that, with the move to have their margin capacity being expanded to around another a total of 30 million units. So that could be another positive for the company, because it's at the moment limited by its capacities. So even if we look at the presentation that the parent made going forward, they have huge plans for Maruti Suzuki. So not anything at the moment negative.
Okay, so it's a buy on dip call coming in from Dhruv. Thank you very much, Dhruv. It's always a pleasure to talk with you. But just a question, Sunny, for you. For this Maruti Suzuki, largely inline set of numbers coming in, and a minor recovery from days low also coming in. There was a buy on dip, call coming in from the street. You agree with this?
Yeah, definitely. I think inline set of number, and the concerns on margins are something which will be a key monitorable during the earnings call. But I think the management has got some levers to offset the increase in inflationary pressure through cut in discount or taking a price hike. So let's see how earnings call shape up. But overall, seems inline set of number, buy on dip is the right strategy if somebody is a long-term investor.
Vinay, on the technicals for Maruti Suzuki?
Maruti is trading below its 20, 50 and 100 as well as 200 days exponential average, and 50 days exponential is trading below 200 days exponential average. So momentum theory and these moving average setups are quite weak on the charts. And as I said previously, that we are cautious on the rate sensitive sector. So it is looking a bit on the weaker side for the short term on the short term chart. So it's better to find opportunities in other sectors where we can generate the alpha. So I would rather avoid for trading in long side in the Maruti.
Okay. All right. Stay on with us. Let's go across now to Samit Sarkar for that time in the show where we talk about all the chatter from the dealing room. Samit, what are you picking up today?
Well, host of stocks that remain in focus. Firstly, it's ABB India. Now, there are sell flows on the large HNI desk is what dealers are indicating, and this is largely because on anticipation of weak first quarter of FY27 earnings. That is the June ended quarter earnings that is expected to be weaker for ABB. Plus valuations are now on the expensive side for this counter. When it comes to a couple of AMS names, Amber Enterprises and Dixon Tech, there are buy flows on PMS desk. Street is anticipating that the JV approval for each of these companies that they have, Amber is with Oppo and I guess Dixon is with Vivo. Both these approvals are expected to come in anytime soon. For Glenmark Pharma, there are buy flows on institutional desk. Dealers are expecting strong Q4 earnings to come in from this counter. And when it comes to Vari Energies, there are buy flows on the HNI desk. Now, obviously, the company will be reporting its numbers and that are expected to be on the stronger side. But along with that, the street is expecting that the company might unveil some long-term growth targets very soon. And that is one of the reasons why we are seeing these buy flows coming in. And lastly, when it comes to Adani Enterprises, there are buy flows on institutional desk. A nifty rebalancing is expected to happen very soon because the partly paid shares of Adani Enterprises will become now fully paid, which could lead to some higher weightage on the Nifty 50 index. These passive flows are expected to come in Adani Enterprises.
Okay, thank you for that. That's not just chatter from the dealing room. You can hear the chatter in the newsroom also behind Sumit as we wind down. So for the day's trade, so the NDTV Profit newsroom buzz there behind Sumit Sarkar. All right, here's what's buzzing in the markets. Cohance Life, another 15% up. Sunny, I have to ask you what you make of Cohance Life. Nothing has happened in this except the announcement of Umang Bora taking over. And the stock was already at 20% higher. You should pull up the 5-day chart. It'll show you what's been happening in Cohance Life. It'll be about a 30% pop in the last 2 days. Would you still look at this favorably? Sunny?
Yeah, as you rightly pointed out, post appointment of new CEO, the stock has run up significantly. I mean, I don't see any other fundamental reason why stock has run up post appointment of new CEO. Maybe buy on dip is the right strategy, but again, I would like to wait for these quarter numbers and then take a call on Cohance. Yeah.
It's almost 2 days and the stock is up 35%. Everybody talking about it. But Vinay, you were talking about the power segment, the power and the transmission segment, and that is where a lot of interest is coming in the markets also. Do you think most of them have actually run up of their fundamentals, especially on the technical front? I would like to talk about, or is there anything on the charts, especially on the power segment? Since it's summer and even I'm sweating because of that, but anything there on the power segment?
Yeah, so definitely it is into a continuation of an uptrend. Breakout was there 2 months back, and after that, most of the stocks have run up a lot. Like Hitachi Energy has run up a lot. Many stocks participated very well, and still they are into continuation. So better not to anticipate any talk, but yes, we will. We are recommending our clients to hold on to the long position. Still, there are some technical setups in some stocks of the power segment are looking stronger. So like NTPC, Power Grid are still looking strong on the chart. Tata Power is one of the stocks which is looking extremely strong. So still looking at the chart, I feel that there is an upside left, and one should remain with the relatively higher strength is there. So that's why we are recommending to hold on to the long position. So NTPC, Power Grid, and Tata Power. These are the 3 stocks we like technically in this particular segment, and we expect them to outperform in the coming days as well.
Okay, power in focus as well. All right, another set of counters in focus are some pharma counters. Astellas has settled with MSN Laboratories, clearing the path for an imminent US generic launch of a product called Mirabegron. The move sharply accelerates competition, putting earnings at risk for Indian players like Zydus Life Sciences and Lupin. That's really the companies in focus and the stocks in focus this afternoon. These are raising concerns over faster price erosion across the sector. Let me go across to Varsha for more details on this. Varsha.
Well, this case relates to a drug which treats overactive bladder. Now, the case is the Astellas, which is again a MNC pharma company, has settled with MSN, confirming imminent US generic Mirabegron launch in a very easy language. Now, the generic version of Mirabegron will come into picture, which will accelerate price erosion and competitive entry in US market. Now, do remember that Mirabegron was a lower limited competition product and high margin product. Now, a lot of generics will come into picture. talking about the Zydus Life Sciences, which will, have a highest risk because Mira Background contributed almost 20% to their FY26 EBITDA. To 20% of EBITDA is now under pressure because of this amendment, which will significant to 20% of EBITDA is now under pressure because of this amendment, which will significant have a downside to FY27 earning forecast. Talking about Lupin, the contribution is meaningful, but of course lower than Zydus because Mira Background contributed low double-digit percentage to overall EBITDA. Earnings impact is visible, but of course less severe than Zydus, and FY27 profit estimates are likely to be cut. Overall impact on Indian pharma, if I were to talk about, high margin, limited competition generic will turn into a crowded market. MSN launch sets precedent for rapid multiplayer entry. Alkem, Aurobindo already have got US FDA approvals for this product, and faster entry means steeper price erosion and margin compression. So overall, the variety of drugs or the generic drugs will come into picture, which will have pricing erosion, and hence you are seeing Zydus and Lupin stock under pressure.
Okay, actually you're seeing a fair bit of pressure there on both Zydus and Lupin, even while the rest of the pharma pack is doing quite okay, whether it's a Cohance, of course for reasons or its own. I want to pull up a Sun Pharma also. Sun Pharma is also not doing too badly today. Glen Pharmaceuticals is doing well, as is Granules. Vinay Rajani, I want to ask you about a couple of stocks before we let you go. One is Eternal. Want your view on Eternal, want your view on SBI Cards as well. Sunny, don't worry, I won't ask you about it. But if you could tell us on the charts on Eternal and SBI Cards.
Yeah, so Eternal has been correcting for last 4 trading session. I think it is due for the result, and that's why the movement is like that. But the higher top, higher bottom formation is there on the daily chart. So there is a strong support near 240 odd level. We need to see whether that is holding or not. So those who are holding the trading long position should hold the long position with a 240 stop loss. So that is the overall view on the Eternal. As far as SBI Card is concerned, SBI Card has been into a primary downtrend. It has been one of the underperformers, and we need to see whether the recent swing low of 615 is being held or not. So whatever long positions are there should be protected with the stop loss of 615. The primary trend is clearly down with the lower top, lower bottom. So the trend is not that much into favor of the bulls. So better to remain with risk compliant, and 615 should be the stop loss in SBI Card.
Okay, just want to take a very quick break. Vinay Rajani, Sunny Agarwal, thank you so much for joining us. But I want to recap for you, before we go into the break, what Maruti Suzuki is saying, because their commentary becomes very, very crucial. And if you can please pull that up for you. They're talking about higher commodity costs. This is the first thing. They're saying they've recorded their highest ever quarterly sales in Q4, amongst other things. Their sales, though, were restricted by limitations in production capacity. The adverse commodity prices have also hit their margins in Q4. Q4 exports at an all-time high of 1.37 lakh units as well. But this fact that high manufacturing expenses have hit margin is something that is perhaps weighing on the stock, along with the commentary that sales have been restricted by limitations in production capacity. These are going to be pain points. We will, of course, be speaking with the management. You'll hear their interview on NDTV Profit tomorrow morning, and we'll hear from their conference also in a short while. We'll take a very short break. We're coming back with the top BTST ideas as we go into the closing session. Stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. What Sharad do? We
Welcome back to India Market Close, and looking at the markets, there is a slight recovery. Let's just pull out Nifty and Nifty Bank from the day's low. A little bit of move coming in support levels. Nifty still at 24,000 levels is something where it's moving at, but largely the triggers are lesser in this market. But nevertheless, joining us, we are having Milan Vaishnav, founder and technical analyst at Gemstone Equity Research, Chart Wizard, and Avinash Gorashkar, founder and head of research at Avinash Mentor Research. Good afternoon, Avinash. It's always a pleasure to have you. And of course, we have seen the numbers coming in from Maruti Suzuki and important commentary also coming in. But in the auto space itself, the view has been that the two-wheeler might create a little bit of alpha coming in. But anything in the auto ancillary which you are looking at? Because auto ancillaries have done really well, especially on the exports front. Anything on your radar on that?
I think, Sharad, good afternoon. I think clearly within the auto component space, we are positive on companies like Sundaram Fasteners, Lumax Industries, Bharat Forge, Uno Minda. I think these are, companies where they will benefit from a larger traction seen in the passenger car, the two-wheeler kind of sector. And I think clearly, I think this quarter is going to be good. The first quarter starting April onwards is also going to be solid. Although there have been, some instances where demand is expected to grow strong, but margins could come under pressure as commodity prices have risen. And with the rising crude oil prices, there is some concern in the markets. But I think, demand on ground continues to be very rock solid, especially for the two-wheeler players. And I heard Maruti management saying that this was possibly the best Q4 number for them. So I think clearly in terms of numbers, in terms of demand, the outlook continues to be good. And till that time, I think most of these auto component companies will benefit from a rise, from an increased volume push. So I think let's wait and watch for these numbers. I think most of these auto component numbers are yet to be out. But once the management commentary is out and they share their outlook on the business and the margins, I think you would get a better sense as how the business is going to pan out over the next, say, 6 to 12 months.
Okay. Avinash, stay with us. Milan, stay with us. Breaking story coming in on NDTV Profit in the Alco Bev space. We're learning that United Breweries has raised beer prices in Maharashtra, citing sharp increase in packaging, aluminum and logistics costs. Going across to Ridhima for more on the story. Yes, Ridhima.
So the United Breweries has taken a price increase for the beer in Maharashtra amid rising input costs. They have increased the prices for the brands like Kingfisher, London Pilsner and Heineken by rupees 5 to 10. Now the bottle prices for the beer have increased by 10 and can prices have increased by 5 rupees. Now other states are also in the talks to increase prices as per the distributors. Now let's understand that a lot of state governments have a say in the prices for the alco beverage companies, so they can't really take a price on their own. They have to take permission from the government. These states are more, these rules are more relaxed for states like Maharashtra, UP, Goa and other northeastern states. Now the associations have already reached out to government to take a price increase from past month when this war began. Now the main reasons behind the price increase is first the packaging costs, which have risen by 30 to 40% after the Middle East conflict, and the main packaging materials like glass, cans and plastic cap prices have increased. Glass prices have risen by 12% in April, and cans have also taken a price increase, with aluminium prices rising by 10% in April, and also can shortage which was reported in the past few days. And polypropylene, which is the plastic caps used on beers, have also increased by 30%. And also the logistic and energy costs have risen by 10%, which has led to the pressure of increasing prices. We reached out to United Breweries. They haven't responded to our queries. And analysts say that this price increase is not enough and margins are likely to be hurt in the short term. And they say that only 20% of the inflation has been taken care of with this price increase. And they expect a further price to be increased in the coming time. And when and how much with that happens, that's something we need to wait and watch.
All right. Thanks a lot, Ridhima, for that interesting development coming in when it comes to the brewery-related stocks.
If the Diet Coke drinkers will suffer, even the beer drinkers must suffer.
Exactly. Both is expensive. I think, Tamanna, it's 50 rupees right now from 40 rupees.
For Diet Coke? Yes, prices have gone up. And forget that, the availability is short.
That's what, and they're selling it in cartons, I guess, like 6 packs. Well, that's pretty much interesting. But Avinash, just wanted to get your perspective. I think Milan has also joined in. Good afternoon, Milan. Of course, we'll ask about the brewery-related stocks. But first, key levels to watch out for both Nifty and Nifty Bank. And of course, the rollover data, what is it suggesting for the new series? Hi, Milan.
Sorry.
Yeah.
I thought the question is for Avinash.
No, it's for you. Yes.
Nifty, no problem. Nifty, I believe, is still within the broad range that I had mentioned a couple of days ago. That is 23,800 on the lower side and 24,500 on the higher side. We are still trapped very much within this range. That is point one. Now, coming to the expiry specific trade, we have. Excuse me. We have most immediate resistance on Nifty on closing basis is at around 24,200. That's where the 50 DMA is placed. And for the entire day today, we had seen concentration of maximum call or that strike. So it was by and large taken that we will not go above that point. But what I see here that maximum call has shifted higher to 24,500 for the next week. And 24,500 is a place where the 100-week moving average is there. If you zoom out a bit and take a little bit of a longer term view, then I think that 24,200 to 24,300, these 300 points, navigating these 300 points would be not an easy task for Nifty, and we can see some sustainable trend on the upside only after the Nifty goes about 24,500.
All right, that's a pretty interesting take coming in, especially on the volumes front, and of course we're expecting that there might be a little bit of rollover numbers might be on the lower side. Avinash, we are discussing about the brewery-related stocks, and interestingly, there's a news flow that there might be a price hike coming in because of higher input costs. Avinash, how do you see this developing, especially for United Breweries?
I think, Sharad, clearly commodity prices having risen, this price increase was expected, and I think. Considering the fact that aluminum prices have increased sharply, I think this price increase is going to partly compensate for the cost increase. My sense is it won't be difficult for the brewery companies to increase prices further, provided the volume growth remains pretty good. I think we have seen strong numbers coming for the last couple of quarters from the liquor and brewery companies. So I think demand continues to be good. Whenever a price increase is announced, there is some demand compression. But I think looking at the kind of consumption trends and the kind of brand presence which United Breweries enjoy, I wouldn't be surprised that this increase, if it is staggered and if it comes in bits and phases, then I think the markets will absorb it. Maybe you will see the full impact of that coming post-September, but maybe the first 1 or 2 quarters could possibly be a little margin decreasing. You could see a little bit of pressure because the entire cost push could not be recovered maybe in the first 2 quarters. But post-September, I think things should get better.
Okay. The other space which is feeling the heat and the brunt really of the West Asia crisis is the airline industry, right? The Federation of Indian Airlines has flagged an aviation crisis, warning soaring ATF prices and high crack spreads in an April 26 letter. FIA says the West Asia war has worsened condition, pushing Indian carriers into extreme stress. My colleague Danish is here with more details. Danish, the language of the letter shows a lot of pressure, isn't it?
That's true. Kind of FIS signaled SOS to the government, and this is coming at that point in time. In the letter, FIS completely stated to the government that due to the crack spread widening, and as per the previous calculation that was there between 2022 to 2025, FIA believes that it was more transparent, and this crack spread difference was in a range of between $12 to $22 per barrel. But now, since we are seeing that the Brent prices have crossed $100 per barrel, it is creating an impact on this particular crack spread. So which basically means that the airlines have to pay more for uplifting ATF in their aircraft. As far as the relief is concerned, government has given them a cushion only for the domestic ATF. But even right now, if any airline has to fly abroad, they have to pay at least minimum $1,000 per kiloliter for uplifting fuel in their aircraft. So this is very surprising, and this is a very surprising for the entire aviation industry, as at the moment they're expecting more support from the government, and they've clearly highlighted that just 4 days before the May revision of ATF, FIA stated that because of the crack spread widening, it is not viable for any airline to continue operations. So they have signaled to the government that they require some more support. In fact, earlier in the day, we had also reported that airlines are planning to reschedule certain flights and cut certain flights. And this FI letter has come at that point in time when they're clearly signaling distress to the government, and they want some or the other support from the government. They have highlighted that if OMCs are being cushioned, why not the aviation industry should be cushioned from this price shock?
What is the reaction? You reported this. One sec, Danish. I have a couple of questions. I have a couple of questions for you. For one, can you please explain to our viewers what is crack spread? You've used that term a couple of times. I used it as well. But in the aviation industry parlance, what exactly is crack spreads?
So basically, OMCs, they get crude in a barrel form, and when they process it, they make final products. So this crack spread is basically the final amount that is supposed to come out after taking the doing the plus and minus as far as what was the crude output and at what price did the crude was bought by the OMC, and when they are processing it into ATF. So that difference is basically the crack spread. And as per the old calculation, the government and the airlines came to a conclusion that the crack spread will never widen from between $12 to $22 per barrel. So that is where the crack spread thing is concerned. But this particular crack spread is now stretching beyond $22 per barrel, which is kind of becoming uncomfortable for the airlines.
Morning, you broke a story on NDTV Profit where you talked about airlines shortlisting and mulling routes that they would rationalize, maybe reduce flights in those routes, shut some routes for some time if the ATF prices keep going up. Is this something that has also been communicated to the government by the FIA?
They have kind of communicated to the government that if there is no support from the government, it might lead to cancellation of flights. So like the letter clearly states that it is literally a SOS kind of a support that they are seeking from the government, and they have indicated that if the ATF revision in May is much steeper, then it could lead to certain some strong events happening in the aviation industry, in which we might see big players also announcing a big number of cancellation of flights.
Okay, stay on with us, or actually thank you for that, Danish. We're getting to the eternal numbers. It's a power-packed show this afternoon. India market close. Eternal numbers out, net profit at 174 crores. Higher than estimates. That's the first cut coming in. We're waiting for more details of those numbers. The first number we have, net profit beating estimates by a mile. Let's pull up the intraday chart of Eternal also while we are at it. Revenues at 17,292 crores. That's slightly lower than estimates. The revenue number seems to be a bit soft right now. We're going to get Mahima up for the first cut in just a second from now. But Avinash, even as we get more details on the numbers, and they will be flashing on your screen, what are you looking for when it comes to Eternal? What will you be focusing on?
No, I think, Tamanna, when the top line has not come in as per expected, I think one would like to know what's the kind of operational, profit, operational EBITDA, and most importantly, whether there is any element of other income or any exceptional gain. I think that would be important. And finally, what kind of volume growth has the company achieved in terms of the gross revenue? My sense is that markets would be happy to know from the management what kind of throughput has happened and what is the kind of outlook going forward. But if there is some exceptional income, then I think the markets would not like it. If these are operational earnings, then definitely this is a good kind of a beat which the markets would obviously appreciate.
Is at 486 crores versus estimates of 431 crores. So some of those numbers trickling in. We have to see what kind of a move there has really been in terms of the actual numbers versus Q on Q. You're seeing a slight uptick in the stock even as we speak. The net profit is a beat on estimates as per our estimates, and we'll get that comparative figure for you as well. In fact, Mahima joining us with the first cut on Eternal. Mahima, take us through the numbers.
Right, Tamanna. So, as you rightly mentioned, net profit is certainly a beat as compared to where the estimates are concerned. Top line, however, is a miss. The expectation was around 18,000 odd crore, but it has come in at that 17,200 odd crore. We'll have to, figure out as to where that miss is coming in from exactly. And whether food delivery business is something that has probably impacted the top line growth or not. But overall, in terms of net profit, it's certainly a beat at that 174 odd crore as compared to what the street was expecting. In terms of the segmental performance as well. Overall, the food delivery business has seen a minor growth of 700 odd crores from that 2,000 odd crore to 2,700 odd crores. Hyperpure has seen a degrowth this quarter from 1,800 crore to almost 978 crore. So I think this has taken a hit. So probably that's the hit coming in on top line, because analysts were estimating a better growth when it comes to Hyperpure, which has been growing at a very fast pace. In terms of quick commerce, that is Blinkit, that has seen a significant growth coming in from a 1,700 crore to almost a 13,200 odd crore, and this was expected as well with the way competition has fared. At the same time, with the aggressive dark store addition that Eternal has been doing for Blinkit, this growth was expected. And lastly, in terms of the going out business, slight uptick there as well from a 229 crore to 277 crore. So overall, I think net profit, of course, this is just the first cut. We'll have to wait for the press release as well as the shareholder statement. But I think a beat coming in terms of quick commerce and slight beat in terms of the food delivery business. But Hyperpure business is something which has gotten impact and probably hampered the top line growth as well this quarter. And her top line is a miss in terms of beat, but profit is definitely a beat.
So profit is a beat on Eternal, and we are seeing a good recovery coming in as well. Joining us is Mayuresh Joshi, Head of Research at MarketSmith. Good afternoon, Mayuresh. First cut, initial study on Eternal. What's your view on it? We are seeing a good recovery from day's low.
I think numbers in terms of earnings delivery, both in terms of quick commerce and food delivery to a large extent, is in line with estimates. I'm just going through the shareholders' letter. I think it's a large letter. But I think the indications here are probably justifying the kind of growth dynamic that the numbers have pointed out, both in terms of transacting customers sequentially, whether it's the food delivery business or the quick commerce business as I'm seeing it. The net order value has probably come off a tad bit as far as the quick commerce business is concerned. But the transacting customers in quick commerce has gone up quite significantly, and that's the reason where you're seeing the revenue and an absolute EBITDA probably come much higher. But in terms of margins, I think more or less in terms of expected line.
The numbers at the face of it, and I know, Mayuresh, you're also reading while we're speaking because we are doing a first cut. Some of the numbers are optically looking very good. EBITDA at 486 crores versus 72 crores year on year. That's looking robust. Net profit at 174 crores versus 39 crores year on year. Revenues have also grown at 17,292 crores versus 5,833 crores. India food and delivery volumes have grown 33%, but the massive growth seems to be definitely in the dark store or the quick commerce segment. So that's going to be important as well. In terms of margins, you're at 2.8% versus 1.2%. Mahima, just, even as Mayuresh is looking through the shareholders' note, we want to give him a couple of seconds to do that. And while he is doing that, overall, it seems as if they have swung to robust profitability, and the champion, as always, is the quick commerce business.
Absolutely, Tamanna. So overall, if you take a look at the operational metrics as well from the shareholder letter, in terms of the food delivery business, the net order value has seen a growth of 19% year-on-year basis, and the expectation was that this will come around 13-14%. So that's a good beat. The net order value growth for quick commerce, that is Blinkit, that is coming at 95%. Here, the expectation was around 99%, slightly less than that, but overall 95% is also a good growth. Going out business has seen overall growth of 47%, and hyperpure business has seen a degrowth of 47%. But overall, I think even margins, Tamanna, is a beat. The expectation was that margins will come around that 2.4 or 2.5% mark as per analysts, but it is coming at 2.8% mark. But the question really here is whether how sustainable are those 2.8% margins, because they're still very bullish when it comes to these dark store additions, plus the newer dark store additions that they've made. As to how break even will be achieved for these dark stores is also a question mark, and that will probably hamper the margins as well. But most certainly, good numbers when it comes to bottom line as well as margin expansion for the business as a whole.
Thanks a lot, Mahima, for that. We'll be getting you finer details. But Mayuresh, apart from quick commerce, also the going out, the district numbers also I'm looking at, even though the base is small, the net order value, that has also doubled from here. And even Hyperpure, the restaurant supply business, that is also doing well. And we can see that the management commentary, they haven't given any number for the outlook as of now. But nevertheless, they are very bullish and on the growth prospects of it. Mayuresh, if you are reading from the shareholders' letter, what are the new inferences coming out from that?
No, so I think the bottom line is that quick commerce has done exceptionally well, as we are reading through the letter, both in terms of the number of transacting customers, which have shown a huge increase, both on a quarter-on-quarter basis, year-on-year, whichever metrics you want to probably look at. So I think that is one number which has shown a massive increase, which has probably led to the average NOV per day per store orders actually increasing. However, I think the order value has probably come down a tad bit, but that should be an adjusting factor as we head ahead. So I think quick commerce dynamics in terms of most parameters looking extremely strong and robust. Food delivery, I think the kind of expectation that one really has. They have shown a steady state growth in the previous 3 quarters. So I think it's been a steady increase in terms of the transacting customers, which has probably led also to better numbers as we speak in terms of the absolute margins that have probably come through. Outside that, yes, I think a small base in terms of going out. The kind of margins are probably getting better as we speak every passing quarter, and it's to be seen in the next few quarters, looking at competition, how this will play out. Hyperpure is a definite miss as we speak.
Yes, thanks a lot. Thanks a lot, Mayuresh, for your views on Eternal. And just look at the stock. The stock has turned green from the day's low. The stock has given up almost you could say 4% up move from the day's low. Avinash, I just want to get your view also on this. There's a margin guidance they have given, adjusted EBITDA between 5 to 6% for Blinkit. It seems like that's higher than what the street was estimating. But Avinash, how do you see this development going on? Now it's in the green, the stock.
So I think, Sharad, these numbers which the management has shared are definitely very strong and positive. I think if Blinkit does show margins of 5 to 6%, whatever investment they have made in the dark stores is going to actually yield into a strong profit traction. In fact, the overall EBITDA also, the jump on a YY basis has been very significant. So despite a lower top line growth which the market was expecting, which the company recorded against expectation. My sense is the EBITDA growth this time is a big positive surprise. And I think once the commentary is heard in the conference call, I think you will get to hear what the management outlook is. But nevertheless, on the face of it, these numbers look good. And I think that's the reason the stock is up. The numbers have been much better than what the street had expected, specifically on the profitability front.
Just a last query on Eternal on the technical chart front as well. Milan, your view on the technicals for Eternal?
On the technicals, I think I would still wait and watch. I'll wait for the stock to go above 266 and then I'll take a long call on that. I would wait for a close above 266.
Okay. Any ideas before we let you go for the day, Milan? It's a little too late for BTST, but if you have anything which is on your radar.
Yeah, one stock that catches my eye is Nykaa. One can initiate long in Nykaa at current levels around 260. 990, 270 and expect around 292, 295 on it. One can keep a protective stop at around 258.
That's an interesting view coming in for Nykaa and Eternal as well. Avinash, before we end, anything from the new age tech, especially on the fintech side, which is looking good here?
No, I think my sense is, Sharad, once Eternal has done something good, I think obviously Swiggy will also be in action. My sense is that this is also in a comparable business, and markets would obviously look at what kind of operational numbers does Swiggy report, because obviously, despite the fact that competition has increased, the volume of opportunity is very large. So we like to keep our fingers crossed for Swiggy. I think hopefully Swiggy should also come out with a decent set of numbers, and obviously surprise the markets.
Thank you so much, Avinash and Milan, for joining us. 2 minutes to go. I want to actually pull up the dual chart, Swiggy and Eternal, and how they both are responding. Eternal has posted results, but their quick commerce and their food delivery both has boomed. What has Swiggy done? Let's pull up both those charts if we can. There you go. Just they're mirroring each other.
And just look at that Eternal, just down from 4%. Now the recovery is more than 5% in the last 10 minutes.
It's been a 16-17 rupee recovery in the last 10 minutes on Eternal, and the fact that these charts are mirroring each other, even though only one of them has, posted its results, is very, very interesting. Watch out for both tomorrow as we wrap up. All right, let's pull up the Nifty. Let's see if Eternal has added some flavor to the Nifty. Still about 90 points down, but holding up about 24,000. That's really the hill to climb for several weeks now for the Nifty. Manages to climb, then gets hit at 24,000 once again. Advanced decline ratios are looking fine. Let's pull up the heat map on the Nifty before we close off. Just a couple of minutes to go for trade to close this Tuesday afternoon. Maruti. The numbers are not being received well. The commentary is not being received well. Both have reported in the last 10-15 minutes. But the management saying that raw material costs are hitting, that sales were hit by production constraints, has not gone down well. Axis Bank also seeing another down day. Shriram Finance continuing to suffer. HCL Tech also down.
But
what's working
gainers,
is,
yes, gainers is doing well. ONGC, Reliance, all are doing really well. But talking about the monthly rollovers, which is there for the monthly expiry today, that's what we'll be looking at. But net, largely the energy and the power players are doing well. But let's just pull out the mid cap and the small cap indices, how they have been performing, and let's just get the Nifty mid cap index. That has done well. It's up almost 0.3% earlier. It was slightly flattish, and the mid-cap 100 index also doing well. Advanced decline ratio, let's just pull up how throughout the day they have performed, and largely we see the markets, we have seen some good value buying, at least you could say, at least in the last 15
Actually, the
minutes.
declines climbing above the advances right at the end of trade, which has shown that it's a bit of a mixed bag. But all right, 10 seconds to go before we close this afternoon, and it is all about Eternal. Maruti and Eternal, you should pull up those two charts if you can. Both have reported. Maruti a disappointment. Eternal is a plus, coming in about closing about 1% up from the lows of the day. Whoever felt they should buy in here is going to go home feeling happy. Maruti has had quite the reverse kind of a situation. It's going to be an interesting day. The focus is going to remain on results, and that's really what you should look at. Samvardhana, another one that is going to be reporting. So watch out for those set of results and their reactions going into trade tomorrow as well. Expect no, I would say, huge pop, because in a truncated week, no one wants to really take the risk.
The positions might be on the lighter side also, and especially with the rollovers, we talk about it, the volumes are on the lower side, last 2-3 months average as well.
Yeah, expected considering that while nothing is really moving on the war front, it's at the backdrop, but not front and center as a pain point. But that's all the time that we have on this edition of India Market Close. From all of us here, thank you so much for watching. Stay tuned. All the action continues on NDTV Profit on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Good evening, you're watching Market Express with me, Shreyanshi Singh, and this is the show that gets you a snapshot of everything that is happening in the world of stocks as well as news and updates from within the country and across the globe. First things first, let's take a look at the markets then. It was a lackluster day, largely coming in for Dalal Street. Nifty tested the 24,000 mark on expiry day, while the Sensex also shed over 300 points. When you talk about the broader markets, they in fact outperformed the benchmarks, hinting at selective buying really beneath the surface. Let's also talk about some of the sectors as well. Largely it was a risk-off session across the market, and that's the sense that you're picking up from the sectoral picture as well. So most sectors ending in the red. PSU banks leading the decline, while oil and gas as well as energy stocks stood out as pockets of resilience, largely cushioning broader losses. Let's also talk about PSU banks that are trading under pressure as the market weighs on the impact of the RBI's expected credit loss norms. The worry here is that these rules hit state-run banks harder than private lenders, forcing higher one-time provisions and lifting long-term costs. Add to that weaker charts and a sharper run-up also in valuations. In fact, analysts are also penciling in the risk of near-term profit booking that is clearly rising. Let's also talk about Coal India. Now, that was one counter that was in focus, up about 3.5% after reporting a steady set of numbers in the fourth quarter. When you talk about the profit as well as the revenue, they rose year on year. And when you talk about margins as well, in fact, held firm. When you talk about the brokerage verdict, Jefferies maintains a buy rating, pointing to stronger pricing, higher e-auction volumes, as well as a boost to power demand. From an intense summer, when you talk about Citi, they've maintained a neutral rating, saying that the earnings are largely in line with estimates and the valuations limit downside, but visibility when it comes to fresh upside triggers remain weak. Let's also talk about something like a Zydus Life that's in focus. Zydus Life as well as Lupin that stayed in focus after Estella settles with MSN, clearing the way for an imminent US generic launch of Mirabegron. Now, this is an important drug that is used to treat overactive bladder. And in terms of the analyst verdict also coming in, they're flagging faster competition and sharper price erosion. In the US market, Zydus faces the highest risk given its larger exposure, while Lupin's impact is seen as meaningful but somewhat contained, with broader pressure expected across Indian pharma names. Let's also talk about something like a Nippon India AMC that was in focus after clocking strong market share gains. You had the stock up about 3.5%, emerging among the top 10 asset managers this year. And when you talk about the AUM share, that's risen about 9% thereabout. And this is the highest in several years that you're looking at this. And it's also led by steady inflows and a sharp rise in the direct channels, supported by ETFs. When you talk about revenue yields, they also improved sequentially, even as the street digested a mixed set of quarterly numbers across the AMC space. Let's also talk about Ola Electric, showing some signs of recovery as its electric two-wheeler market share inches up so far this year. Data from Vahan, in fact, shows that Ola crossed about 10,000 vehicle sales for the second straight month, helping it regain some lost ground. That said, market share remains well below levels seen in the last few years, even as rivals the likes of TVS, Bajaj, Ather, as well as Hero continue to strengthen their positions. Let's also talk about something like a Unicommerce that reported a softer set of numbers in the fourth quarter on a sequential basis, largely due to seasonality and stepped-up growth investments. Now, let's also talk about margins, because they moderated as the company scaled Shipway and accelerated AI-led initiatives with higher spending on server hosting and people costs. That said, FY26 marked a milestone year, with Unicommerce completing its first full year as a multi-platform company, delivering 5 times revenue growth over 5 years and also meeting the Rule of 40 benchmark. The company is saying that these investments are laying the foundation for the next phase of AI-driven growth. Let's also talk about something like an Orient Green that's in focus. That's in focus on the back of announcing the completion of its 9.9 megawatt wind energy capacity expansion in Tamil Nadu. The company said that its subsidiary has completed the EPC contract and received service connection for final 3.3 megawatt wind turbine. The remaining procedural formalities are underway, with full commissioning expected by the end of today. The expansion strengthens Orient Green's renewable portfolio and adds incremental generation capacity to support long-term growth. Let's also move on and talk about Maruti Suzuki that reported a mixed set of numbers in the fourth quarter. Revenue and operating performance coming in stronger than expectations, supported by healthy volume growth. EBITDA rose sharply on a year-on-year basis, margins holding steady despite cost pressures. However, net profit, that's the one that missed estimates, impacted by a sharp drop when it comes to other income and higher tax expenses. Now, when you talk about the company, in terms of the dividend perspective, they've announced a dividend of 140 rupees per share, reflecting strong cash generation even as investors assess near-term profitability trends. Let's also talk about something like an Eternal that delivered a strong bottom-line surprise in the March quarter, beating profit expectations on the back of better operating efficiency. While the revenue came in slightly below estimates, EBITDA outperformed forecasts with margins expanding more than expected as well. And the numbers point to tighter cost control and improved execution even as top-line growth moderated. Overall, when you look at this quarter, it underlines Eternal's ability to defend profitability and margins, keeping investors focused firmly on efficiency-led earnings delivery. Let's also move on and talk about something like a Sapphire Foods that was in focus on the back of delivering a solid top-line growth in the March quarter with strong expansion. When you're talking about revenue and operating profitability, supported by margin improvement, however, the company slipped into a net loss when you look at it on a year-on-year basis, and the stock, of course, was not doing all that much. But when you talk about the higher one-time gains, they reflect elevated cost and profitability pressure while operating performance remains steady. The bottom line is something that was weighed down by expenses, keeping investor focus firmly on cost control as well as earnings recovery going forward. Let's also talk about AU Small Finance Bank that was in focus after reporting a strong set of numbers. The stock, of course, was under a little bit of pressure, but you did have healthy growth and improving asset quality when you're looking at the Q4 fine print. Profit soared sharply on a year-on-year basis, supported by solid loan growth and stable margins. When you talk about the net interest income as well, that rose strongly. And this is even as other income dipped modestly. When you talk about the asset quality trends, they improved further with both gross and net NPS declining. Deposits and advances as well continued to grow at a healthy pace, while credit costs remained well under control for the full year, reinforcing confidence really in the bank's growth and risk management framework, but the street, of course, was looking at it differently. Let's also talk about Adani Total Gas reporting a steady set of fourth quarter numbers supported by strong infrastructure-led growth. Revenue rose sharply on a year-on-year basis. The stock, of course, was cheering that as well, about a 3% uptick coming in. And you did have higher volumes when you're looking at this particular quarter. EBITDA growth tracked operating performance closely as well. And even when you talk about the profit, that also posted a modest increase, reflecting stable margins despite expansion-led costs. And when you talk about gas volumes as well, they grew at a healthy pace as network expansion continued, with per unit profitability remaining flat. So overall, the quarter underlines consistent execution as Adani Total rides India's city gas infrastructure push, and that's something that the stock, in fact, was also cheering. Let's also move on and talk about Asian Granito India that is in focus after strategic investors picked up close to a 5% equity stake, and this is through open market transactions. So you do have Artcom Ventures as well as another set of investors that acquired shares worth over 130 crore, signaling confidence really in the tiles and bathware manufacturers' outlook. And when you just talk about Artcom as well, they alone bought nearly 2.3% at around 76 rupees a share. This particular buying, in fact, is coming in from a set of marquee investors, adding credibility and renewed interest when it comes to the stock. Let's also talk about something like a Dalmia Bharat that reported a steady set of numbers in the fourth quarter, with operating performance standing out. Revenue grew modestly on a year-on-year basis, while EBITDA saw double-digit growth, aided by sharp margin expansion driven by cost efficiencies and operating leverage. Now, when you talk about the net profit, that declined compared to last year, and the company also announced a final dividend of 5 rupees per share, underscoring healthy cash flows. And this is even as investors really focused on demand trends as well as profitability going forward. Let's also talk about something like a RailTel that was in focus after bagging a major telecom and digital connectivity order worth about 145 crore rupees. When you talk about the stock as well, it was up about 2.5%. This order that they've bagged was from Eastern Coalfields, and the company has received a letter of acceptance for providing internet leased lines, video conferencing and managed bandwidth services. And this is across this particular company's network as well. And the contract is going to be executed over a 5-year period with completion scheduled by May 2031. The order further cements RailTel's position as a preferred tech partner for large public sector enterprises. Let's also get you some other updates as well onto an NDTV Profit exclusive as well. PakeXV has in fact fully exited MobiKwik through a block deal worth over 130 crore rupees. Around 8% equity changed hands, with a clutch of domestic and global institutional investors picking up the stake. The deal marks significant shareholder churn at MobiKwik as well as a complete exit by one of its early backers. Moving on, then, exclusive sources indicate that Indian Airlines are currently in a wait-and-watch mode and are likely to take a final call on flight cuts after the May aviation turbine fuel or ATF price revision. In fact, sources are indicating that the sharp jump in fuel prices could force carriers to rationalize schedules, especially on low-profit route sectors with weak load factors and short-haul flights where economics are most vulnerable. Now, when you talk about airlines, they're also preparing for multiple scenarios, including any changes to the current 25% cap on ATF price hikes. In the event this cap is removed, domestic flight cancellations could really rise sharply. Let's also get you some business news then. ICRA's latest monthly report flags a mixed picture for the aviation sector. Passenger traffic grows modestly in March, wrapping up the year with low single-digit growth, even as capacity remains lower than last year. Airlines run at higher load factors, helped by stronger month-on-month demand. However, when you talk about rising fuel costs, elevated crude prices and a weaker rupee, they continue to pose cost pressures for the industry. Let's also move on and talk about AU Small Finance Bank that has formally applied for a universal banking license after the Reserve Bank of India is the key structural requirement for the transition. The Jaipur-based lender has submitted its final application, and this is following the RBI's relaxation of the NOFHC norm, which was earlier a major precondition as well. The bank had already received in principle approval in August last year. Once approved, the transition is going to be allowing AU to offer a wider suite of banking products and really scale up corporate and wholesale lending. Let's also talk about quick home services startup Snabbit as well, that has raised about $56 million in a Series D funding round, more than doubling its valuation to somewhere close to $350 million. The fresh capital coming in as competition intensifies in India's fast-growing on-demand domestic health market. Where startups are scaling aggressively to capture urban households, Snabbit offers instant home services such as cleaning, dishwashing and laundry through a managed workforce model. Let's also move on and talk about Google Wallet that has now started supporting Aadhaar verifiable credentials in India, allowing users to securely store their identity details directly on their smartphones. The feature has been launched in partnership with UIDAI and offers a digital-first, privacy-focused way to prove identity or age without carrying a physical document. Now, Google is saying that the system uses selective disclosure, which means only the necessary details are shared for a specific use case. Initial partners include PVR Inox, Bharat Matrimony, Atlas, MyGate, and Snappit. Let's also talk about Chinese sportswear major Anta Sports Products Limited that is set to make its India comeback next month, marking a significant signal of improving business sentiment between New Delhi and Beijing. Now, the company will reopen with its first store in Gurugram, with plans to also scale up to 10 stores across the country by March 2027. Its local partner, Brandman Retail, says ₹1,000, while footwear could retail at 9,000 to 10,000 rupees. Now, Anta had earlier exited India in 2020 amid deteriorating bilateral ties. Let's also move on and talk about Andhra Pradesh Chief Minister N. Chandrababu Naidu laying the foundation stone for a $15 billion Google AI data center near Visakhapatnam. And this is in what is being built as one of India's largest digital infrastructure investments. When you talk about this facility, in fact, it has 1 gigawatt capacity, expected to emerge as a major AI cloud and data storage hub for the country. And it's also spread across nearly 600 acres. The project is also being positioned as the centerpiece of a larger 6.5 gigawatt digital ecosystem vision for the state. Now, Naidu, in fact, described the investment as a growth engine for India and a major boost coming in for North Andhra. Moving on, then, let's talk about the inauguration of Google's AI data center project. IT Minister Ashwini Vaishnav urged the tech giant to manufacture servers in India, giving a strong push to the center's domestic electronics and AI hardware ambitions. Vaishnav also asked Google to focus on energy efficiency and optimize water use under the India AI mission as the country scales up large data center infrastructure. He's also said that Visakhapatnam could soon emerge as AI Patnam, drawing parallels with Hyderabad's Cyberabad transformation as well. So that's the latest word coming in there. Let's also talk about PM Modi sharing a lighter moment during his Sikkim visit, joining local children for a friendly football game in Gangtok as well, and the visuals show him dribbling, taking a shot at goal and interacting warmly with youngsters on the field. Now, the interaction came alongside his official visit for Sikkim's 50th statehood celebrations, where he is also scheduled to launch development projects to the tune of about 4,000 crore rupees. Let's also talk about Noida International Airport that has crossed another major regulatory milestone, receiving BCS approval for its aerodrome safety plan, which is a crucial step, mind you, before commercial operations begin. The Bureau of Civil Aviation Security's NOD confirms that the airport security framework, emergency response systems, and operational procedures are now in place as per regulatory norms. The airport says that it is now working closely with airlines and partners to finalize a launch date for flight operations. Moving on then, Mumbai will face a 10% cut in water supply starting May 15th, according to BMC chief Ashwini Bhide as well. And the decision has been taken due to depleting water levels in the city's lakes amid a deficient monsoon last year and also delayed pre-monsoon shower. Now, the cut is going to be applying across all regions and is expected to remain in place until the onset of the monsoon. Residents have been urged to use water judiciously and also adopt conservation measures. And as temperatures soar past 40 degrees, the IMD has issued a heat wave warning for several regions on April 28th. So you're talking about Vidarbha, Rajasthan, Odisha, Telangana, Chhattisgarh that are likely to experience severe heat wave conditions. Meanwhile, rainfall is expected in the national capital and parts of northwest India. The IMD has advised people in the affected areas to take precautions against the rising temperatures, especially the elderly and children. Let's also move on and talk about Defense Minister Rajnath Singh attending the Shanghai Cooperation Organization Defense Ministers meeting in Kyrgyzstan. The key agenda includes discussions on the ongoing Middle East conflict and its impact on the regional security. Singh is expected to hold bilateral meetings with counterparts from SCO member countries to strengthen defense cooperation. Let's also move on and talk about Salim Dola, a close aide of fugitive underworld Don Dawood Ibrahim, who has been deported from Istanbul and brought back to India. Dola was arrested by Turkish authorities and handed over to Indian agencies. He is wanted in multiple cases, and that includes extortion, murder, and links to organized crime syndicates. The deportation marks a significant success for the Indian law enforcement in tracking and bringing back key associates of Dawood Ibrahim. Let's also move on and get to some international news. Then Iran has proposed easing its chokehold on the Strait of Hormuz if the United States ends its military campaign and also really lifts its economic blockade. And that is according to regional officials as well, but the offer was conveyed to Washington through Pakistan amid a fragile ceasefire. However, the proposal would postpone talks on Iran's nuclear program, a condition US officials are unwilling to accept. President Trump is seen as unlikely to back any deal that leaves core disputes unresolved, while US Secretary of State Marco Rubio has also made it clear that nuclear restrictions must remain central, warning that Washington cannot allow Iran a path towards nuclear weapons. Let's also move on and talk about the word coming in from Iran's Foreign Minister Abbas Araghchi, who's met Russian President Putin, hailing Moscow and Tehran's strategic relationship as fighting and diplomacy unfold in parallel across Middle East. Now, the Kremlin is saying that Russia is ready to offer goodwill or mediation in future talks between Iran and the United States as Washington's direct engagement stalls after President Donald Trump, in terms of word coming in from him as well. Let's also move on and talk about tankers carrying Iranian oil that are beginning to bunch up off the port of Chabahar as well, and just short of the effective reach of the US blockade. Satellite imagery and maritime intelligence show as many as 6 to 8 supertankers idling in the Gulf of Oman with several smaller vessels nearby. It's the same corridor where US forces intercepted and redirected crude carriers last week. Let's also move on and talk to you about some sports news. Vinesh Fogart has accused the Wrestling Federation of India of deliberately blocking her return to the sport. The Olympic medalist claimed that despite completing all formalities and medical clearances, the federation is not allowing her to train or compete. Vinesh, in fact, has said that she has been facing repeated obstacles and alleged that the WFI is acting with bias. She has now appealed to the Sports Ministry and the Indian Olympic Association for intervention. And with that, it's a wrap on this edition of Market Express. Thank you so much for tuning in.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective.
Markets swing back to red today after lackluster trade. Nifty closes above 24,000 levels. PSU banks volatile as RBI tightens the NPA norms. Broader markets, though, end with a positive bias. Maruti Q4 earnings are in line with the street expectations. Revenues rise by 28%, but the profits are down almost 7% compared to the last year's same quarter. Margins hit by higher costs. Oil prices edged higher as traders weighed fresh US-Iran diplomacy. Crude hovers over $111 a barrel as the Strait of Hormuz remains virtually shut. Aviation sector hit by Middle East war. Airlines mull flight cuts amid high ATF prices. Warn shutdown risk. Seek urgent government intervention. Government mulls dropping anti-dumping duties on textile inputs eyeing cuts on nylon chips, rayon, pulp, glass, chemicals. Big AI infrastructure push for India. The Adani Group and Google launch $15 billion AI data center in Visakhapatnam, marking Google's one of the biggest bets on India. India reels under heat wave. IMD issues advisory warning of rising heat stroke risks and also urging precautions. Meanwhile, higher temperatures boost power demand, cooling appliances. Hello and welcome. You've tuned into Market Profit 360. I'm Nisha Poddar, and let's take it straight to the market action for the day. Well, the markets largely dwindled in the trade and also settled in the red, while the Nifty really settled just shy of 24,000 levels. The Sensex lost over 400 points. Broader markets, on the contrary, did relatively better than the key indices today, ending flat with a positive bias, and volatility was especially high in the banking stocks as many of these counters really absorbed the RBI's new credit loss guidelines. Let's actually get my colleague Jasmeet to take us through all the details of the market action today. Jasmeet, tell us.
Well, Nifty ends in red today, down about 0.4% and it ends below the 24,000 crucial mark. Well, yesterday we did see closing above that mark, but today it ended in red. If we look at the other key aspect, we have Axis Bank and HCL Tech, both the top losers in Nifty 50, both are down about 2.5%. If we look at the broader market has overperformed the benchmark altogether, where small cap 250 and mid cap 150 ended it flat. Now, in terms of top gainers in mid cap 150, we have stocks like Oil India and Glenmark, both top gainers of mid cap 150, while in small cap 250, we have stocks like Cohen's Life Sciences and Tata Chemicals, where they have gained the most when we look at the small cap 250, both gaining over 11%. If we look at the key sectors have ended on a mixed note. Something like Nifty PSU Bank is the worst performing sector, down about 2%, and it sees the pressure in today's market. If we look at the top losers in Nifty PSU Bank, we have stocks like Union Bank and Bank of Maharashtra, both losing over 2.5%. In terms of the key trends, we do make a note that Nifty Metal, Nifty Energy, Nifty Oil and Gas gained for the second consecutive day in a row and continued a streak. Apart from that, the rest sectors have ended in red in today's trade.
All right, thanks Jasmeet for taking us through that. And flashing on our screens is the IIP data. Let's see how the industrial production has really done for the month of March 2026 and has been announced at 4.1%. Now this has remember been dropped from the February's level of 5.2% growth. So 4.1% when it comes to the IIP data for the last particular month. And remember that in the earlier times, in the month of February, it had picked up beautifully at 5.2%, and in the month of Jan, it was 4.8%. So it is lower than last at least 5 months that we are seeing the industrial output data at 4.1% versus, remember, the estimate that was pegged by the street was at 2.7. Numbers also and the internals really showing up. Let's welcome on the show an economist to put all this into perspective. Aditi Nair, who's the Chief Economist and Head of Research and Outreach at ICRA, joins in. Aditi, always a pleasure to welcome you on NDTV Profit. What do you make of the 4.1% figure for IIP? It is a considerable drop compared to the last month, but we were anticipating some softness already because of the global turmoil.
Thank you, Nisha. Absolutely. This is actually a much better number than what we were expecting. Having seen the contraction in the core sector output, we thought that growth would be somewhere in the range of 1 to 2%. So 4.1% is much higher than that. And I think the mining sector within the IIP has done much better than what coal and crude oil had suggested out of the core sector data. And manufacturing has held up pretty well. Given the fact that we did have the supply chain and price-related issues emanating out of the West Asia crisis. And also, when we look at exports, last year in March, there were, the trend of front-loading exports to the US was very much on at this point in time. So the base, because of that, was also not very favorable this time. So I would say that this is actually a much better outcome than what we were expecting.
That's right, Aditi. Consumer durables rise is 5.3% versus 6.9% on a year-on-year basis. So a big dip has come in that particular front, while manufacturing has still shown a slight growth compared to the last month. And as you mentioned, mining has seen a considerable growth as well. Where are we lagging behind and what are the soft spots?
See, within the IIP, it is electricity which has not shown much growth. We already knew that. We'd seen that from the daily electricity data as well as the core sector data. This was a month where temperatures were on the softer side, and typically that is something that tends to pull down the electricity growth very, very quickly. Other than that, when we looked at the core sector, half of them had contracted in March, half had shown a growth. But most of them had anyway shown a deceleration as compared to February. So to some extent, the impact of West Asia had already started creeping into the core sector data in March itself. And the IIP has held up very well in light of that. Consumption related trends were still doing okay in terms of some of the other high frequencies that we're looking at. So it'll be interesting to see now in April, when we're in the second month of the conflict, but it's dragging on, but maybe the kind of stress has been internalized to some extent. How are the supply chains now holding up in the month of April? So next month, of course, when we get the data, it will be on the new series, not on the current series. So in any case, it could show a very different outcome as compared to what we would forecast at this point in time for April.
That's right. So Aditi, electricity sector and even primary goods output is up 2.2% versus 3.9%. So that's where, again, softness has come in. Consumer has seen softness. Electricity has seen softness, while mining, manufacturing has done much better. But it's also the first month, Aditi. This particular month can be reflective of a lot more of the West Asia crisis really impacting those particular numbers. What are you penciling in for this particular month then?
So, the interesting thing, like I was just saying, when we get the data for April, it'll be on the new base. So, we really, at this point in time, it's a toss-up what the new base is going to tell us. For the CPI, we were much more sort of able to tell what the CPI inflation would look like in the new base as compared to the old base. But for the GDP series, for instance, we ended up seeing that the GDP on the new series in nominal terms was actually lower for the last 3 years as compared to the old series. On the IIP side, I'll be quite, I think my first guess is that because the IIP will be now moving to a new base, probably we will end up being able to calculate, data for a current set of factories. So perhaps it will be a better growth than it would have been on the old series. Having said that, the impact of West Asia would still be there. So I suppose we should be prepared for a modest growth at best, balancing both of these things out.
All right. So yes, new base, new series makes it even more less comparable on an apple-to-apple basis, Aditi. Well pointed out. But as the numbers really show, of course, apart from mining, manufacturing, the consumption-led area, consumer durables, consumer non-durables, capital goods, all of them have seen a huge boost. And that has really pushed up the IIP data much better than what the street was really penciling in over there. Any final word on the outlook?
So along with the IIP data, around the same time, we'll end up getting the Q4 GDP data. So we're broadly penciling in it at around 7% and the full year GDP growth for FY26 at around 7.5%. Of course, we'll be looking at these numbers, looking at our forecasts more granularly in the next few weeks as we get more information on earnings and margins. How the onset of the West Asia crisis affected the margin side of things as compared to the volumes, which today what we wanted to know was better at least than what we had penciled in.
All right, Aditi, thank you so much for all your views and putting into perspective the IIP data. That's for the month of March, really coming in at 4.1%, much better than what was really being estimated given the context of the Middle East crisis and its impact on the economy. All right, let's cut straight across to Maruti's press conference on the earnings, and Chairman of Maruti Suzuki, R.C. Bhargava, is speaking there.
Which have been commissioned in Kharkhoda and in Hansalpur, which each of them will have a full capacity of 250,000 cars a year. And because they've just started production, the expectation is that during the year, these two lines will add roughly around 250,000 cars to our production capacity this year. And that would, in fact, reflect what we can produce and sell in this year, because even today, to reach our sales today of what, 2.4 million or so, we are running virtually at 100%, and we have a backlog and we have very low inventories. So our growth is now more or less determined by our ability to add capacity and to run, and of course we run at 100%. Having said that, I think what we are going to see in the next few years is every year we will see now growth happening in the car industry because of the fact that the demand has once again revived. And I think government is understanding and appreciating the fact that lower taxes actually benefit the economy. You will have a lot of questions to ask, and I don't want to preempt any of those questions. So with this, I would leave you to any comments which Takeuchi-san or anybody else will have. So over to you, Takeuchi-san.
Thank you, Bhargava-san. And I think Bhargava-san already explained very well about our current, result. And now I think so to save time, we can, I think, straight go to the Q&A session from press people.
Yes, okay. Thank you so much, sir. Sir, our first question is from Raj himself, and ask the question. Sir, we cannot hear you.
I can see you, but I can't hear you. I can't hear you. No sound.
All right, so that was the management of Maruti explaining that growth will be coming in with more additions to the capacity, and that's what they are really focusing on. But let's also focus on what really transpired at Maruti. Of course, the revenues really got a stupendous growth, but there was a dip in net profit, and there were cost pressures that really impacted the company in the present quarter. Puneet is here to explain and give perspective on the numbers. Puneet.
Well, Maruti Suzuki came out with their quarterly earnings, and it's largely a beat across key metrics in line with the numbers that we were working with as well. So revenue grew by 27% at almost 52,400 odd crores versus roughly 40,900 crores on a same time last year basis. We were working with a number of almost 50,000 crores, 50,900 odd crores in terms of revenue. So it's beaten the estimate there. In terms of EBITDA, also a growth of 27% at 6,100 crores versus 4,800 crores is another beat with the number that we are working with. 11.7% margins versus almost 10.5% in the same time last year as well. So you've seen margins largely being in the range that was mentioned as well, and given at a very important quarter nonetheless, because we've seen commodity costs increase materially because of the Israel-Iran war. So they have been at least managed to stably maintain at 11.7 in quarter 4. What happens in quarter 1 will be something to watch. Profit is down 7% at 3,591 crores versus estimates of 4,000 crores. Now, this is largely because of a very big movement of other income. So other income has come in at 500 crores versus 1,500 crores in the same time last year. So you're seeing that 1,000 crore differential essentially impact the profits in this quarter. Likely this is because of a movement of their investments, specifically in debt mutual funds, something that has been witnessed previously as well. But that's a good quarter for the company. We saw volume growth, which was already visible at 12% for the company as well. But likely the key aspects to watch will be that in terms of commentary, what the company mentions in quarter 1 in terms of if there was any shipments impacted for the export market to Africa and Europe will be other aspects to watch. But largely a quarter that was largely in line with the estimates. And in terms of profits, while there was a dip, there was the other income component and not operational performance being impacted.
All right, operational performance has been in line with the estimates. Thanks, Puneet, for that. Now, Eternal, and that particular stock really rose in the last, minutes of trade by almost 1%. There you see the spike, and Eternal recorded a blockbuster quarter. The company's net profit really jumped a massive 346% on a year-on-year basis to 174 crore rupees compared to just 99 crore rupees in the last year same period. Now, the same was the case with the revenues also that rose nearly 196% and EBITDA soared by over 5 times. In fact, Mahima is standing by with all the details on Eternal's numbers. Mahima, tell us.
Right, so overall Eternal Q4 numbers have been on a positive footing. We saw the stock reverse from a negative 3% to almost a positive 2%, and this is largely on account of how the numbers have fared. In terms of the Q4 numbers, net profit was certainly a beat in terms of estimate. Revenue slightly short of the overall estimates versus the overall estimates. Margin beat 2.8% margins overall is what has come in. In terms of food delivery business, saw growth of around 33 odd percent. In terms of even the Blinkit business, that saw growth of around 99%. Both of these have seen good growth in terms of net order value terms as well. The management has said that they're more confident of getting closer to the guidance of 5 to 6% of margins today versus what they'd given before. The only variable is the speed at which they will get there. NOV growth in district also rebounded to around 47% year basis. However, Hyperpure was where we saw a downtick of around 47% in the total growth. Blinkit NOV growth should be at a CAGR of 60% in the next 3 years. That means the business will grow 4 times in the next 3 years is what the management has said. And this will be bought by assortment expansion, geographic expansion as well as demand density will bring in growth in terms of quick commerce. Lastly, cash balance slightly increased to 17,900 odd crores versus 17,800 odd crores in Q3 FY26. So this is the overall view of how Q3 has panned out for Eternal. Q4 in fact, sorry, not Q4.
All right, Mahima, Q4 it is. And yes, very strong projection when it comes to the guidance given to the grocery business. But this is the very competitive space as well. All right, let's move on from the big earnings of the day. The government is stepping up efforts to really support the textile sector, with trade advisor Bipin Menon really flagging a series of duty rationalization proposals. Now, these include potential cuts on Capro as well as lactam and nylon chips, along with the duty elimination also on key inputs like rayon grade wood pulp and also certain inorganic chemicals. So there's also a push to really ease the anti-dumping duties on select of these yarn segments. Let's listen in.
We're also further taken up some other inputs that are not part of this notification, which includes caprolactam and nylon chips. We've also been pressing for the rayon elimination of duty on rayon grade wood pulp, which is an input for the viscose segment, and also inputs for the glassware manufacture, where I think there are a lot of inorganic chemicals which are inputs for that.
All right, the Indian airlines are hit by Middle East crisis, according to exclusive sources telling NDTV Profit. Well, airlines are likely to take a call on cutting the flights after the May ATF revision. Now, sharp hike in the jet fuel prices could force the carriers and the airlines to really rationalize their capacity. In fact, my colleague Danish Anand, who's really sourcing all those information on the mood at the airlines and the reaction to the ATF price hike. Danish.
So basically, OMCs, they get crude in a barrel form, and when they process it, they make final products. So this crack spread is basically the final amount that is supposed to come out after taking the doing the plus and minus as far as what was the crude output and at what price did the crude was bought by the OMC, and when they are processing it into ATF. So that difference is basically the crack spread. And as per the old calculation, the government and the airlines came to a conclusion that the crack spread will never widen from between $12 to 22 barrels up to $22 per barrel. So that is where the crack spread thing is concerned. But this particular crack spread is now stretching beyond $22 per barrel, which is kind of becoming uncomfortable for the airlines.
That's right, Danish. It's becoming uncomfortable, and that's what is also leading to some measures that the airlines are really thinking about. So what is the airlines thinking, and will there be a rationalization on the flight operations? What have you heard?
That's true. Kind of FIS kind of signaled SOS to the government, and this is coming at that point in time. In the letter, FIS completely stated to the government that due to the crack spread widening, and as per the previous calculation that was there between 2022 to 2025, FIA believes that it was more transparent, and this crack spread difference was in a range of between $12 to $22 per barrel. But now, since we are seeing that the Brent prices have crossed $100 per barrel, it is creating an impact on this particular crack spread. So which basically means that the airlines have to pay more for uplifting ATF in their aircraft. As far as the relief is concerned, government has given them a cushion only for the domestic ATF. But even right now, if any airline has to fly abroad, they have to pay at least minimum $1,000 per kiloliter for uplifting fuel in their aircraft. So this is very surprising, and this is a very surprising for the entire aviation industry, as at the moment they're expecting more support from the government, and they've clearly highlighted that just 4 days before the May revision of ATF, FIA stated that because of the crack spread widening, it is not viable for any airline to continue operations. So they have signaled to the government that they require some more support. In fact, earlier in the day, we had also reported that airlines are planning to reschedule certain flights and cut certain flights. And this FI letter has come at that point in time when they're clearly signaling distress to the government, and they want some or the other support from the government. They have highlighted that if OMCs are being cushioned, why not the aviation industry should be cushioned from this price shock?
All right, Danish. So airlines really rethinking their strategy at the current moment and not being able to carry on with the pressure of the fuel prices. Now, moving on, the Adani Group and Google are doubling down on India's AI ambitions, breaking ground on what could become the country's really largest AI data center campus in Visakhapatnam, with an investment of nearly about $15 billion. And this gigawatt scale project really marks one of Google's best and the biggest bets on India, aimed at building a massive digital as well as cloud infrastructure, boosting jobs, and also positioning Vizag as a global AI hub. Let's listen in to what Jeet Adani as well as N. Chandrababu Naidu, the Chief Minister of Andhra Pradesh, had to say at the foundation stone ceremony.
Today, India stands at approximately 1.3 gigawatts of data center capacity. Just for context, here today we are envisioning nearly 1 gigawatt in a single location. That contrast reflects the scale of transformation ahead. India is entering a new league of AI infrastructure.
With Google innovation,
and Andhra Pradesh, speed of governance. Both we wanted to integrate. We want to produce a model for the rest of the world. That is where we are thinking. Either it may be education, it may be health, it may be agriculture, logistics, everything, even one family, one entrepreneur. We want to work all these things. Very soon, every citizen is going to see AI tutor, AI doctor, AI agronomist, AI personal assistant.
All right, so AI Data Center Hub in Vizag. With that, it's a wrap on this edition of Profit 360, but do keep it with NDTV Profit. Thank you so much.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit. When the headline
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300 300 300।
Hello and welcome back to KYC. I am Sharad Dubey and you are watching NDTV Profit, where we get you the hottest companies in KYC and maybe create alpha for you as well. But as per our format, I'm going to give you some hints. Try to guess the company. It's a very interesting company I have got. It's a Pune-based heavy engineering company. Of course, a lot of companies are there in this cluster, but more details about it. There's a literal township named after the company. Pretty interesting, right? I'll give you some examples also how it actually pans out, and it's backed by Ashish Kacholia. He has more than 1% stake in the company as per the March shareholding pattern, and it deals in defense, nuclear and aerospace, industrial and also industrial products. A lot of discussions about this company, and I've given you a little bit of hint. There is of course Tata Nagar is there is Bata Nagar, there is Kirloskar Wadi. An interesting company is Walchand Nagar. Yes, the company I'm focus is Walchand Nagar Industries. Everybody's talking about it recently. The stock also has been buzzing. But why are we calling this company? What is the interest of mine to get this company in KYC and decode it? First question is the structural turnaround. Is there any trigger happening from the fourth quarter? The management doesn't speak a lot. That's why we have got this company, and they had given me a fund infusion plan as well. If yes, we'll try to understand why does the company need it. Also, the growth outlook for the defense and the aerospace business. We have spoken a lot about this. A lot of its peers have given a good rally recently. So has the company done that. Operating leverage, that is where the return ratios start turning positive. For a long time, the concern has been there. So that's something that needs to be addressed. The incremental benefits for the private players in the nuclear segment. Remember last year there was a Shanti bill in 2025 December. Company was a beneficiary of it. There was a run up. After that, of course, markets turned volatile, but then the stock price is back. But it's a perennial problem with this counter. The promoters share place, that's on the higher side. How are they reducing? That's something which becomes a very major trigger for the counter and the order book status in the fourth quarter and the outlook ahead. So these are the important questions we will be going through, and of course the capex and the expansion plans for Walchand Nagar Industries. And to put that in perspective, we'll be joined in by Chirag Doshi. He's the MD and CEO of this company, where Chirag will decode and answer all of our queries. But more queries are there, so let's understand the business. How much of this business is all about, and what are the important for factors and against factors. It's a historical company. It's established in 1908. It's a heavy engineering company. The cluster area in the Pune district, that's where it's located. Of course, they have something called defense, nuclear, aerospace, DNA as they call it. That's where the focus they are lying. But of course, they have other businesses also. This includes foundries, gears, centrifugals, castings, gauges. Remember, there is a seasonality at play as well for these sectors. So that's how we are going to get these businesses in two portions. The company is also having an ace investor, Ashish Kacholia. He's having roughly 1.5% stake as well. But let's get into the details about it. The company has worked with ISRO for over 50 years. So of course, they are having long-term associations with the government authorities. They have been instrumental in Chandrayaan 3. There is Aditya L1, Gaganyaan program mission. So they have been there in the space programs. And interestingly, Chirag Doshi has been reappointed recently as an MD and CEO for next 3 years as well. So this of course augurs well for the stock. They are a beneficiary of Shanti bill, and this is definitely for the nuclear business which we spoke about in 2025, and there was this news flow coming in. But the question remains is what is working for the company? There's a potential of private player in the nuclear space. We'll try to understand from the management as well. The second reason what's working for the company is a high retail interest coming in. That is where a lot of conversation is happening. Third quarter, hopefully fourth quarter we'll say something. And there's another buzz in the street of a fundraise for Walchand Nagar Industries. So that's what's working for the company. But what's not working for the company, that's also a big concern. There's a cyclical nature of the key business segments. I'm not talking about the DNA segment. I'm talking about the foundry segment where the numbers have been impacted. Higher promoter pledge, that remains a big concern for this company. And also, no major participation is coming from FIs, DIs. There's a lack of analyst coverage as well. And that is where the question or the concern rises. And the biggest one is the weak return ratios. They have been plaguing the companies. Until as the ROE, the ROC improves, doesn't improve, there seems a concern. And another concern is definitely the valuations. They are also expensive. So we have given you the entire picture of what's working for the company and what's not working for the company. Another important number or the ratios we talk about is the KYC ratings. Let's see what are the ratings we are going to give the company. It's going to be income statement, balance sheet, cash flow. These are the important numbers to look at when we judge a company in KYC. Key operational ratios, because I've taken a couple of ratios, just not the return ratios, to give you an entire picture about how the company is functioning. Shareholding, street cred, kitna paisa bana 5 साल में या मार्च के लो से कैसे पैसे आया. We'll try to get you all those details and the valuations. We'll try to see how things are panned out, at least in that 5-year period. And last but not the least is the outlook segment. So these are the 8 ratings where we'll judge the company. But let's take you to the first parameter, and that's the income statement. And this is where we see there is a downtick coming in a little bit, and these are, remember, losses which I'm talking about. The red numbers you can see, these are the losses, which is the downtick which is happening. Top line we see there is a kind of a moderation happening from FY24 to FY25. There is a seasonality at play, but largely we see net there is no stability as such when it comes to the number. That's why the CAGR numbers are purposefully removed. But the Q3 numbers is something which I like. There was a little bit of turnaround. Some margins are also did come in, and that is where the management was showing a good strength over here. See, over here it has been, in the negative. But look at that, the 19% up move coming in, and slowly, the company is showing operational profits. And when these situations happen, that is where we get the maximum alpha. When things are from very bad to bad, that is where the stock starts moving, and that's why I'm going to give you that reason. But net right now, income statement, it's a neutral rating when it comes to Walchand Nagar Industries. Let's talk about the balance sheet. It's been decently maintained. The borrowings have actually come down from around 241 odd crore rupees. It's down to 193 crore rupees. Working capital ratios have improved, and so has the balance sheet ratios, and it's evenly placed. I would say 109 crores of cash balance is also there, and net the management is strong when it comes to the balance sheet. So it's a strong thumbs up when it comes to the balance sheet. So we spoke about the income statement, we spoke about the balance sheet. Now let's take it to the third one. That is the cash flow statement, and that is where a little bit of concern starts coming in, because their cash outflows are more at times. Your PAT numbers are down, so the conversion ratio from PAT to cash flows, that becomes an issue. And if this issue pertains, then definitely the return ratios get, you could say, impacted. So cash flows, it's a negative rating or a thumbs down when it comes to our analysis. Let's talk about the operational ratios, how things are moving. There has been an improvement in the debtor days, so that's one side is positive. But the other side, which has been perennial for the stock, is the lower ROEC ratios or in the negative. That has actually spooked the street, and this has continued for a really long time. So the company's operational leverages, if they start improving, the ROE numbers also start going up. So it's a neutral rating when it comes to the key operational numbers. Let's talk about the shareholding, what has happened. A little bit of concern is that promoter stake is quite less. That's what some analysts speak about, but I wanted to get a little bit into the details. The concern is not the lower promoter stake, it is the share pledge. That needs to reduce, and that's an overhang for the stock. Another overhang is the FIs, DIs. There isn't much participation here. So unless the numbers start coming in, unless the turnaround happens visibly on the numbers, you might not see FIs and DIs, but retail, it's a favorite. That's around 67% of holding is there in the retail as well. But net, let's give this a neutral rating for shareholding, because the promoters haven't sold any stake. And it's not that, major participation from FIs or DIs have come in. So it's kind of nullifying our thesis on the shareholding part. But apart from that, let's move on to the street cred. Let's give you the picture of how much returns have been made. And overall, if you have been holding the stock for a long time, it has done well. Last 5 years, you have made almost 4 times the money, 275%. Congratulations to you. And if you look at the March lows, this is the numbers you should look at. From that level onwards also it's up 68%. This is the rally which we saw in the defense aerospace theme as well. Last year itself stock is up 14%. But remember the highs which were seen in the counter, that was 2024. From there the stock is still down 47%. So definitely concern is there, but it kind of negates our analysis. So net it's a neutral rating when it comes to the street cred. Valuations, let's see what's happening here, and valuations is a concern for me. The 5-year average is at 63 times. Current, if you look at it, the 12 months trailing P is at 87 times right now also for Walchand. And if you look at the peak which was there, the 2024, the euphoria which was there in this industry, the stock almost had 100 times of P when it comes to the trailing P numbers. So valuations are not at all cheap, and maybe that is why it's better to stay away. At least the earnings should start coming in, then the valuations might turn cheaper. But as of now, valuations, it's a strong thumbs down. Let's talk about the outlook. Let's see what's there in the outlook. And outlook over here, the pointers are quite less. The outlook has not been shared for FY27 yet, and that's what we'll try to understand from the management. They are likely to improve from the fourth quarter, the margins front, and that is what we had seen in the con call also. Now they are a beneficiary of the private sector entering into the nuclear segment, and that is where the interest lies for the market going ahead. And that's why I picked up this company in KYC. The structural turnaround that's expected to happen going ahead, and the street is also talking about it, rumors or buzzes there that there might be a potential fundraise as well. So now net company has very less to lose from these levels, so it's a strong thumbs up when it comes to the outlook. But pura rating kya hai, wo kitne numbers hai, let's talk about them, and of course let's give you a revision of how things are panning out. The balance sheet has been maintained nicely. Income statement Q3, their good portion has started coming in when it comes to the turnaround. Cash flow is dismal for the company. Key operational ratios are balancing each other out. While shareholding, of course, the promoter shareholding pledge is a concern, but street cred has been neutral. In the March lows itself, the stock is up more than 60%. So if you even have done a 1-month investment in stock, congratulations to you. Valuations are expensive, but outlook remains strong as well. So net, the total rating is 4 out of 8 for the company, and of course the company needs to prove on the future. And of course the street wants something more as well. And to put that everything in perspective, we'll have Chirag Doshi. He's the MD and CEO of Walchand Nagar Industries, and interestingly he has been associated with the company for more than 2 decades. And a little bit of snippet about him apart from that is he has an education from INSEAD and Harvard Business, and he also owns and operates fine dining restaurants in New York and Mumbai as well. That's pretty much interesting. Good afternoon, Chirag. It's always a pleasure to have you at NDTV Profit. And first and foremost, the question I want to ask is, in Q3, you had given us a little bit of hints about the turnaround in the company. And the first question is, by when we can see fourth quarter? Of course, the numbers are not out. You do not need to share the numbers, but give us the flavor of the turnaround for Walchand Nagar and how it is happening.
Yeah, Sharad, thank you for having me on the call. I think I had talked about it a few months ago, and I think it's playing out exactly the way we had planned. It has been a journey for the company to sort of reach this stage, but I think we're now very much at the end of our turnaround. Q3 gave us a glimpse of where we would be headed. Obviously, the top line and bottom line numbers aren't where we achieved to be, but at least it was a positive reaction to a lot of the hard work that we've put in over the last couple of years. I think Q4 will be similar, if not in a similar vicinity. And we expect that next year onwards, we should be positive on a quarter-on-quarter basis as we sort of fulfill our expansion and growth initiatives.
Right. So just wanted to get a little bit more perspective on this growth and expansion initiatives, Chirag, if you could share with us.
Yeah, so as you know, we've always talked about DNA being now the DNA of Walchand Nagar. It's defense, nuclear, aerospace. We're fully entrenched in the nation's plan of being Atmanirbhar Bharat by 2047 in all those sectors. We've already done one fundraise in 2023-24 and built out some infrastructure that will cater to the aerospace and defense growth that will happen in at least the areas that we service, which is the missile program, all the launch vehicles, and some of the launches that we do for BrahMos and other programs. The next phase that we look at is obviously the nuclear Shanti Bill growth that will happen. I've already talked about it, I think, on this channel couple of months ago, that we are going to do another fundraise in the next 3-4 months. It will be a larger fundraise. It will go specifically to invest in a brand new nuclear manufacturing facility here in Valchandnagar, and that should take care of our contribution at a highly scalable level to India's nuclear program over the next decade, 2 decades that will be required.
Right, just wanted to clarify that, Chirag, you had mentioned that earlier as well. So this fundraise is expected to happen in the next 3 to 4 months, and this will be for the nuclear business, right?
Yeah, mostly. I think I would say 75% of the fundraise on the capital expenditure side will go for nuclear expansion. The good thing about our business is that a lot of the machines that we invest in are very fungible and can be used for our defense requirements as well as our larger aerospace requirements. But yes, I think 70 to 75% of our capex will go specifically for nuclear and nuclear requirements.
Right. So 75 is nuclear, 2025 is for defense. Okay.
And some working capital, of
course. That would be there. Apart from that, Chirag, let's also talk about the operating leverage part. Of course, you cannot share the margins outlook for Q4, but there was a good hint that this operational leverage will play out because your margins were, going here, there, it was in the negative. Then there was a turnaround in the third quarter. A street is always concerned about the return ratios for your company. So will we see the same performance in the Q4 to put in perspective?
Yeah, I mean, look, our business can be a fairly good margin business. I think the problem we faced is over the last 3-4 years, if you look at my numbers, and I know you kind of showed some numbers earlier, the problem has been obviously our debt, right? And that's what's been eating into most of the positive margins that our defense, nuclear and aerospace businesses have been generating. We've now brought that debt down from 400 crores to nearly, I think long-term debt is only 40 crores and the rest is just, working capital debt from the banks. That 40 crores we hope to pay off in the next 12 months. So we will be technically a long-term debt-free company. And our middle lines aren't changing because, we don't need to add too much manpower. We've maintained our manpower in the company, even at these reduced turnover levels. And so the team here and the people here are ready to sort of grow the company and it'll just keep adding to our margin numbers at the EBITDA level going forward. And then, of course, at the PAT level.
Right. So once that happens, then of course we're going to get good return ratios as well. Nicely put, from 400 to 40 crore the story. But of course, one more, a lot of investors in your company write to me that the share pledge is a concern. So if you could give me, since your debt is also coming out with a timeline share pledge, is there a reduction timeline at play?
Yeah, sure. I mean, it's actually very clear on the share pledge. The share pledge is a hangover that came from the time when we had KKR as a structured debt provider in 2018-19. That's kind of trickled over to our, to Neo Capital, who's given us our debt today. I think as soon as that is paid off, the pledge goes away. And there may be a small pledge to the banks in the future, but as long as our credit rating improves and we become investment grade, that goes away as well. So I suspect that the share pledge, the promoter share pledge next year will be non-existent.
Share pledge will be non-existent next year. And
as long as we pay off the debt, right? That's the most important.
Right. So So both of them are of course interconnected for our viewers, and just to put that in perspective, accounting 101, that's what Chirag ji has explained us. But apart from this balance sheet numbers, the nuclear segment, we spoke about the Shanti bill, but right now also there's a good buzz in the street on the private players entering in, because we heard about the missiles. The DRDO spokesperson said that now a private company can do missiles, ammunitions. Now, what does Walchand Nagar do? Because you have been already involved with missiles, and now a private company can do without much tie-up with a public company. So how does Walchand Nagar feature in that?
So on the defense side, obviously, we will continue to supply to rocket motor casings to BDL, who will continue to probably be the largest player in the missile game. We are in 13 different missile programs. Those will all come to scale, other than Akash, which is of course already scalable, and BrahMos. We should see the next 12 to 24 months a lot of scalability on the missile side. We're not currently in a position to get into manufacturing our own missiles, but that is something we aspire to do over the next 3-4 years as a DCPP partner to the government. As far as nuclear is concerned, there's a lot of buzz. We're getting ready for all that is being announced in the country. We will continue to remain a core equipment manufacturer for the nuclear industry. We will expand our offering of what we offer currently versus what we want to do in the future. But we don't see Walchand Nagar in the near future being a nuclear power producer. I think we leave that to the larger private sector companies, some of whom have made announcements in the last few weeks as well. And our idea is to just expand our offering, increase the speed with which we can deliver components to not just NPCIL and NTPC, but also then to any of the private sectors who want to, private sector players who want to get into the business of power generation. So, it's a 10-15 year game, and we are, kind of preparing today to be ready for when those orders come in, I would say in the next 12 to 18 months.
Right. And speaking of orders, what's the recent order book, third quarter, or if any addition orders have come in the fourth quarter? If you could just give us a sense of, how the order book is looking like currently.
Yeah, so I think March end or April 1st, start of this financial year, our order book has been about 600 crores. I would say executable order book over the next 18 months out of that 600 is about 400, 420. Last year was a bit of a slow year as far as order booking was concerned. We were hoping that we would have got a few government orders that were promised last year, but I think there has been a slowdown in that. But I sense it's more of a postponement rather than any kind of concern, and we should see a fairly large order booking this year with Walchand Nagar.
Right, so that means a large order booking coming in, debt reducing, and the share pledge reducing. 3 important conversations coming in from Chirag ji. Thank you very much, Chirag, for taking out your time and clearing a lot of doubts raised at KYC. It's always a pleasure to talk with you, and that's the management of Walchand Nagar Industries. There are some concerns regarding the stock, but definitely for the next 12 odd months, the management has given a strong commentary. For interesting stories like this, stay tuned to NDTV Profit and keep watching KYC.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं, कॉल 9300
Hello and welcome. You're watching Your Money Matters here at NDTV Profit. I'm Mahima Vacharani, and today the first topic that we're going to talk about is co-ownership. Now, a lot of people in India hold co-ownership in terms of property, and to understand as to what are the legal aspects of this, what are the documents that one must have, what happens if one co-owner dies, all of these aspects are very important. to understand from an investor point of view is invested in a property which is held in a co-ownership. The relationship could be anything. It could be friends co-owning a property. It could be spouse. It could be along with spouse. It could be along with your parents, with your child, etc. To understand and to decode exactly this, we are now joined by Advocate Tushar Bhatnagar, who is the managing partner at Lex Victorem Law Offices, joining us now. Tushar, thank you so much for taking out the time, first of all. Before we start, diving deeper into this topic, the basics of co-ownership. What is exactly property co-ownership, and why are more Indians opting for it today?
Hi, Mahima. Thank you for having me on board. So talking about co-ownership, actually, it means two or more people legally owning the same property, immovable property, either in equal or defined shares. So the question that you asked, that in India people are actually opting for co-ownerships, it is actually because of mainly due to high real estate prices, the joint home loans, which are on a lower interest rate, and also the dual income households. Actually, the husband and the wife both are working and they're getting incomes which are coming out on a dual basis, and that is the reason they want to actually co-own a property. And it actually helps the couples to buy a household, which is actually a dream for a lot of people and a lot of couples. And that is the reason co-ownership is becoming the thing in India.
Okay. What are the legal documents, Tushar, that one must have when it comes to co-ownership? Especially, generally the conflicts don't arise if the co-ownership is in the family itself, right? But I think more disputes would arise if the co-ownership would be a business partner or friends, etc. So what are the legal documents that one must keep in order to, make sure that his or her ownership in that co-ownership is legally with that person?
So I would say that the documents that per se will be required to co-own a property should be more in the basis of clauses which you have to get it written in a agreement, which will actually be the ownership percentage of that property, the financial contribution being done by each individual over that property, and if there are any loan liabilities post separation or post dissolution of that business, that is also very important. The loan liability part is the most important part, which actually helps you understand the pros and cons of that agreement. Also, the exit and buyout terms. If you wish to exit, and if you want to buy out the other individual, in that cases also. So these clauses are very important to be inserted in that document, which will help you in detailing and understanding that property and its integrities.
Okay, got it. If two co-owners, like you said, right, these are the important aspects that one must have in the agreement, but if two co-owners disagree on selling a property, what does the law say? What will be the recourse to that? Of course, it also depends on the terms of agreement as well, but generally, what does the law say?
So under Section 44 of the Transfer of Property Act, it is clearly defined that the co-owner can mortgage, gift, sell, assign their own share of the property, obviously not the other part's share. So see, one co-owner cannot force the other co-owner to sell the whole property. There has to be a consent between the parties. First thing. Second thing, assumingly that the other co-owner is not agreeing for selling the property, then the other co-owner can approach the court, file for a partition suit under Order 20 Rule 8 of CPC, which is Code of Civil Procedure of India, which may ultimately result in a division or a sale of the property. There is a preliminary decree that will be passed by the court, then there will be a final decree that will be passed by the court.
Okay, and that includes loan against the property as well. If the co-owner wants loan against his or her share of property, that is also allowed?
So if the co-owner wants a loan against the property, he can take a loan and mortgage also for that specific share of this property, not the entire property. And henceforth, these days, the banks are asking for no objection certificate from the other co-owner also, and they are making them as the signatories to that loan documents. So without that co-owner's consent, the loan will not be passed, even if it is for their own share.
Okay, interesting. So mutual consent is required when it comes to taking a loan.
Very much required.
Makes sense. Because, but I just want to understand if the valuation can be determined separately, according to the co-ownership, then also mutual consent is required, right?
Yes. Okay. Either ways, the valuation can be done separately because on basis on that valuation, you will be getting that loan, right? But since it is a co-owned property, the bank will require the NOC from the other co-owner as well.
Got it. Okay. That's pretty clear. But the other aspect is what happens to that co-ownership when one of the co-owner dies? What is the legal recourse for transfer of that property to his or her spouse, children, parents, etc.? What happens in that case?
So in India, the co-owner's share is not passed automatically to the other surviving member. There are succession laws. There is Hindu Succession Act 1956 or the Indian Succession Act 1925. So the succession is determined by these personal laws, not by co-ownership. So if there is a individual who might co-own this property, but is not a legal heir to that property, then the legal heir will be the rightful owner of the property, unless the automatic transfer to the surviving co-owner happens only if there is a specific survivorship clause that co-owner will be the legal heir, legal authority of that property, of that specific other part, only when there is a survivorship clause in the agreement. Otherwise, the legal heirs will be the actual owners of the property.
Got it. And what are the most common legal disputes that you generally see in co-ownership property cases?
So the property disputes that we generally come along is the disagreements over the sale. The other party is not ready to sell the property, and the one party is actually occupying the co-owner's property illegally, trying to create a possession of his own, trying to keep certain stuff which are immovable, and they tend to go beyond the scope of their own property. Then there are disputes over financial contributions, that I gave this much amount towards the contribution of buying the property, I gave this much amount. So it is always better to pen everything down, specifically the percentage in respect to co-ownership properties.
Got it. Okay.
Yes. So there are basically rental disputes also. The rental income that is generated from the co-owned properties. There are rental issues which come across to be a very prevalent in India per se, and that is the sole reason that everything, I personally suggest that everything should be penned down with respect to the contributions, with respect to the percentage of division, with respect to the share, with respect to the dimensions of the partition with the property also.
Makes sense. Do you think a co-owner can be forced out of the property if if they legally still own the property? Is that possible because of any dispute arising, or because of maybe some harm that the co-owner is causing to the property or something of that sorts?
Actually, no. You cannot force a co-owner to dispossess the property. They cannot be evicted like a tenant. So the remedy that the other co-owner has, for example, if they are wrongfully wasting the property, then the legal remedy that they have is through mutual agreement or a court-ordered partition, that they amicably resolve their disputes or they hit the court's door. Yes.
Okay. For couples who are buying a property together, what are the clauses or per se the terms of agreement that are non-negotiable?
Yes, that's a very nice question, actually. So these days, couples do fall in these situations where their dream is to buy a house together, and few of the very important clauses are again, the ownership percentage is very, very, very important. The financial contribution again, and exit clauses, which will be very necessary. Also, the very important clause for the couples is what happens in case of death or separation or divorce. So those this needs to be very specifically written. And if this is not penned down in the document, this will create disputes later, because nobody can guarantee a lifelong hold of marriage. And so this is very important to get on to a mutual agreement and pen it down before heading forward.
Got it. In terms of mistakes that people generally make when it comes to making this contract or agreement while doing a co-ownership, what are these mistakes? What should one most certainly look at?
So the biggest mistake is, Mahima, that they rely on informal understandings. For example, I joined this meeting through a Zoom link that was formally given to me, right? So nothing should be done informally, especially with respect to immovable properties. Be it couples, be it individually owned, be it co-owned, anywhere. People often contribute unequal amounts but register the property equally. So for example, a co-owner has contributed 20% of the amount, but the other person has contributed 80%. Yet, the document was penned down that the property is owned equally amongst the parties. That is too unfair, right? So the registered title usually should prevail over verbal arrangements, and it should be penned down.
Got it. Okay. Just one last question. If somebody is already in a co-ownership dispute, what is the first legal step for him or her?
So if there is a prevailing dispute, then I think they should send a legal notice asserting their rights and seeking resolution with respect to, if there is a dispute resolution clause in their agreement, they should invoke that. And then the next step would be filing a partition suit. Oftenly it is tagged along with an injunction suit and an application for injunction to prevent sale or misuse of the property.
Okay, all right. Tushar, thank you so much for helping us understand this entire aspect of co-ownership, and of course taking out the time and speaking with us at NDTV Profit.
Thank you so much.
All right, so we talked about property co-ownership. Now, the other aspect that I want to touch upon is global investing. A lot of people, a lot of our viewers are going ahead and asking us as to whether they want to invest in the global markets right now. What should be the right strategy? They're also asking, first of all, whether we should invest in global markets or not. And to decode all of this and to give all your answers, we're right now joined by Kshitij Mahajan, who's the managing partner and CEO of Complete Circle Wealth Solutions LLP, joining us now. Kshitij, before I ask as to what should be the strategy, I think the important question right now here is considering the way global markets are right now, right? There's volatility, there's rate uncertainty. Why should Indian investors look forward to allocating fresh money into global markets? Should they, is the first question. And if yes, why should they?
I think let's break it down. India as a percentage of global market is hardly 3%. US is 45%, Europe is 15-16%. Then you have Korea, Taiwan, China. So I'm saying overall basket, when you are India specific, you have 100% location in India, you are participating only in 3% of the globe first. So let's set the context that there is a market outside India, and I agree with you. There's so much of disruption, there's so much of geopolitical issues, there's so much of valuation issues. But let's take for US, if you take out the Nasdaq valuation, which is around 26, 27 trailing, S&P 500 valuations are in line with what S&P 500 valuation in line with what Indian markets are. So I'm saying one, I will break it down to 5 parts. You need a dollar return because rupee has a equation of depreciating against dollar. you should have a foreign allocation. That's why one number of reason one, that you should deploy outside. Second, there are many sectors which are not present in India only. Let's say AI related sector, digital security related sector, let's say your nuclear energy related sectors, which are not present in India only. So the only way you can explore is through global markets. Third, right now, irrespective of there's hardly any return in the last 18 months, zero to negative return in Indian capital market, still valuation wise, market cap to GDP, we are high, and still valuation wise, vis-a-vis other growth countries like Taiwan, China, South Korea, we're still a little high. Fourth, you can create a basket for yourself, and there is an LRS window of 2.5 lakh USD for every PAN card every year outside India. And fifth, you go away from a country-specific risk with 100% allocation. God willing, India will keep on doing well, and your core should remain in India only. Depending on individual risk appetite, you can actually allocate globally in different markets.
And if somebody is looking forward to investing in global markets, what percentage of his or her portfolio allocation should be in global markets?
So let's say if you're very conservative and you just want to explore that how things looks like, I think 5 to 7%. Someone who's little evolved and looking at sending kids outside, and they want a dollar income for themselves, and they want some dollar investment, then maybe you can go from 10 to 15%. Any NRI who's based out of India and is looking to invest and explore, the allocation should be much more. It can go to 20 to 25%. So broadly, there are 3-4 different sets which one should look at. But at the same time, when you invest in a global market, just don't look at only one fund or two funds. Diversify there also. Just don't be country specific, because let's say FANG stocks have done well. Just don't chase those FANG stocks. So I think maybe one allocation can go to FANG stocks and other can go to maybe Korea, China. I'm just taking maybe Europe, which is not done over a period of time. Maybe Europe will evolve. We have seen there are a lot of changes happening geopolitically also. So there are various sectors like pharma, defense, globally will do very well. So I think it depends on, if you have that bandwidth to explore, fine. Otherwise, take a fund route and invest through a fund route.
Kshitij, any specific market that is looking very attractive right now, be it US, China, etc.?
I think Taiwan, South Korea, these are two markets. If you ask me, I feel that I wouldn't mind a fund which is more of Europe-centric also, because that market over a period of time has not done well. One can look at that also. And if you understand commodities, then maybe Brazil, because I don't have much know-how about commodities, but if you understand commodities, then maybe you can look at Brazil also.
Interesting. Kshitij, now from a procedural point of view, if somebody wants to go ahead today and invest in these global markets, what is the step-by-step process?
So mutual fund has a window of 7 billion, and individual fund house has a window of 1 billion USD, which is almost done and dusted, except for few funds where you can allocate. If I'm not wrong, Axis is accepting in the China fund some allocation. So there is no route through mutual fund you can do. But yes, there is a GIFT City route through which you can do. And then you can open a Demat account outside India, and you can buy stocks directly, which I normally tell people not to do, because it's difficult to understand your own markets, and then you go out and understand those businesses. It becomes really difficult and risky also. I think there are GIFT City route through which you can participate. And there are a few funds where you can participate with as low as 5,000 USD also. So take a holistic view and look at 3-4 options. And as and when time will pass, you'll see a lot more options will come through GIFT City route. So I think DSP has one fund through GIFT City route. Mirai has another fund. SBI has another fund. White has fund, which is outbound. So you can look at, depending on what type of minimum ticket size they have, and have a mix of couple of funds and invest through GIFT City. Right now, mutual fund route, there are very few windows which are available where you can invest, because we are not able to step up the overall limit, and at that limit, everything is consumed.
Got it. For anybody who's investing, Kshitij, passive growth should be the approach, because not everybody today will be, in the capacity of tracking those markets actively, right? How do you suggest, about that?
I think if you can open an account outside, I agree with you. A good combination of passive and active can be looked at. Globally, also passive is around 45%. You can have index exchange, and that's how you can invest. But there are some active funds also where there are new sectors, as I said, with a sector with regard to open AI, generative AI, digital technology side sectors. And now with the way things are changing globally, you'll see defense and pharma also globally will do very well. So I think a mix of both should be approached. But yes, the easiest and safest among both the sides are that one can look at doing ETF or index funds outside India, because you get a kicker of rupee depreciation also. So let's take, for example, you get 15% here and 15% there. There is 3% depreciation every year is happening. Your actual return becomes 18% in INR terms.
Kshitij, rather than, I'm just trying to think out of the box right now, rather than deploying your money, because you said, right, mutual fund route right now is very restrictive. Gift City, of course, is a very good option, but I believe that it will also have a minimum amount to be invested, right? Do you think that rather than doing that, going ahead and, probably looking at alternatives in terms of international bonds, commodity exposure, that could be an alternative route? This, of course, cannot be a passive one. It has to be an active one, because people will have to track these very actively. Would you recommend that?
I think problem with equity is that you can have a mark-to-market loss. With bonds, because they are leverage position also, it can be binary 0 or 1.
Yeah.
So, and the way, let's say largest market is US, the type of debt which it's carrying on its shoulder, at these levels, around, let's say, 4.3, 4.4, 10 year, or maybe 30 years around 5% level, as dollar return looks attractive if rate cuts will happen. But outside US, I don't think that it's a good idea to look at the bond side, because in India, 10-year GSEC is giving you 7% as we speak. And obviously there was a rate cut, and, repo stands at 5.25, and your GSEC 10-year is at 7%. Now, my home loan is at 7.15. So it can be possible government of India and I'm buying at the same price. So eventually that rate cut, what has happened in the past will reflect in your GSEC also, if inflation will hit because of oil prices. So I think bonds, government of India bonds are better as an option. But yes, there are countries which are going to grow and they'll become self-reliant. There are sectors which are very promising from here onwards, and there are funds and ETFs available outside. So one should surely explore that. And if you can't do it yourself, as you said, there is a limit of minimum amount of investment, but many houses are coming with a range between $5,000 to $25,000 also as a minimum amount to invest.
That makes sense. Absolutely makes sense. Kshitij, what are the biggest mistakes that people generally make while starting the global investing? Do you think it's ignoring taxation, maybe over concentrating, timing the markets, or for that perspective, just having concentration in just US tech, for example? What do you think are the common mistakes, and how should one avoid them?
I believe very good question you have asked. Earlier the taxation used to be of fixed income, where after 3 years it used to be 20% with indexation. Now the taxation part is gone, and whatever money you are going to generate as capital appreciation, you've been taxed at full rate. And that means if you're 30%, whatever gain is there, you're taxed at 30%. So one, you have to take into account. But the opportunities are there in global markets, because as I said, some part has been taken care by your currency also, because currency depreciate every year. So opportunities are there. Second, just don't rush after, the returns, which we keep on saying for Indian capital markets also. I know FANG stocks, FANG as a story looks very, very, very promising. And the valuations are also little on a higher side, but have a diversified portfolio. There are many other sectors also which will do well. So just don't be specific with regard to US, and in US only FANG or let's say NASDAQ. Have something in NASDAQ, but at the same time, treat Nasdaq like a small cap allocation in your overall bucket. Have at the same time have a multi-cap, flexi-cap, and other ETFs also, so that if for some reason government takes away the benefit which it's giving to IT companies there in US, and some reason stocks will fall, at least you've been cushioned with other sectors and other countries also. So that's the overall benefit of when you go outside India. But yes, tax is one thing which you have to take into account. Whatever you're going to generate will be taxed at your income tax level.
All right, Kshitij, thank you so much. I think anybody who's watched this has now an A to Z view of what global investing should look like. So thank you so much for giving us that entire perspective.
Thank you very much for having me.
All right, viewers, so that was, of course, Kshitij Maran talking about global investing. In fact, we also talked about co-ownership. But with that, completely out of time on this edition of Your Money Matters. Do stay tuned. More news and updates on the other side.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year. New power panel. India market opening. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं। कॉल 9300
AU Small Finance Bank has reported a strong set of numbers in what is admittedly a seasonally strong quarter as well. But on all parameters, it's been quite positive. The only question though is, can that trajectory continue, especially with the possible stress coming in, second order effects coming in from the West Asia crisis? To speak on all of this more and plus the performance especially, I'm joined now by Vivek Tripathi. He's Executive Director, AU Small Finance Bank. Mr. Tripathi, thank you so much for your time to us here at NDTV Profit. Let's first begin by recapping the quarter that has gone by, because there's been robust performances and a big jump in profitability as well. What has boosted this?
Good morning, Tamanna, and good morning to all the NDTV Profit viewers. Thanks for the opportunity, to share our thoughts on the results. Q3, Q4 is always, seasonally strong quarter for us. The larger, slippages which was arising from the unsecured portfolio, it tapered down significantly in Q3, and that momentum continued in Q4. So obviously that has helped us. But overall, the business movement was pretty strong. Momentum was pretty strong, and aided by the government cut on GST, which further boost the consumption, vehicle sales, etc. So the overall business momentum in Q3, Q4 was pretty strong for us, and we, we're reasonably confident that this would continue even going forward in the current financial year.
The CASA ratio was slightly lower at 28%. What is the outlook on increasing low-cost deposits? Because there's quite a bit of reliability on bulk deposits as well. Do you see this impacting NIMs going forward?
Our focus has always been on, the stability of deposit, right? CASA plus retail TD plus, non-callable bulk TD, that constitute about 80% of our, I would say, stable deposit. So you would understand that it's not I would say, a specific bank problem. That's a overall challenging environment to raise deposit for, banking industry as a whole, because of the constant shift towards the capital market. But, we are confident that we are focusing more on the acquisition. If you look at our new acquisition, it's month on month touching about 100,000 customers, which is pretty strong on the CASA side, right? So net acquisition value every month is pretty strong. We are very, very confident that with the diversification on, even from the larger base of the liability from the, commercial banking customers, the so to say that